in public. And sometimes you want to throw off the person that's negotiating, so there could be a bluff, a tactic here and there, and that throws off everyone, not just the other side. So there's a little bit of that. We have to be careful. But looking at this, strategically, I do believe that the president wants to strike a bigger deal with China. The first term, a lot of the fighting with China didn't really lead to a lot of change.
Okay, can I ask you to put your CEO hat on? You were formerly the CEO of Kellogg. The president didn't really seem to have an appetite for a lot of diplomacy or deal making, at least not yesterday. Maybe behind closed doors he does. But you were formerly a CEO. Looking at this as a CEO, how do you make business decisions going forward with a lot of uncertainty? I mean, last night you said like companies have to do like a 10-year cost benefit analysis to see if they want to build in the U.S. How do you do that not knowing if this policy could change in 2 years, maybe 4 years? You just don't know.
Yeah, those are the 10%. If those stay on, they just say that the policy is 10% tariffs forever. It'll be permanent. Then at least you have something that you can evaluate. You can do a net present value analysis, but that's only for those 10%. I would be looking at, in each individual case, how permanent are these? How long lasting? Certain raw materials, certain ingredients. And if it feels like it could be longer lasting, then you have to do something about prices. If a company decides that they're not going to take up prices because of this, it could be because they don't feel it's going to be around for a long time, or they don't believe they have that kind of flexibility. Then it's a different story. If you have low margins, that can impact things. You may have to issue debt just to get through the next 6 to 8 weeks. So there'll be a lot of disruption, and I think the big decision is raise prices or not raise prices. We also have to be very careful with these supply chains. I mean, when I hear we're going to bring these supply chains home, these are supply chains that have been developed over years and decades. Apple in China, these are, multiple countries, hundreds of suppliers that congregate in China. You can't replicate that overnight. The same thing with autos.
Carlos, we got to leave the conversation there. Thank you so much for your time and for your insight. You have a great day.
Take care. Thank you.
And we're going to hear from the current Commerce Secretary later today. Howard Lutnick, he's going to join Squawk Box coming up just after 8 o'clock this morning. I'm sure the crew's going to have a lot of questions for him after this tariff announcement. All right, coming up here on Worldwide Exchange, much more on the president's tariffs. Shares of American automakers getting hit hard on the move. Our Phil LeBeau, he's here. He's going to lay out what it means for this critical industry and the cost of your next car. Stay with us. Welcome back to Worldwide Exchange. Look at shares of U.S. automakers getting hit on the back of President Trump's tariff announcement. Taking a look, you're seeing GM shares down more than 1%, Tesla down more than 4%. For much more, let's bring in our Phil LeBeau. Phil, good morning.
Good morning, Frank. You know, the question that we hear from a lot of people is, well, why won't the automakers simply take their production from Mexico or Canada, bring it back to the United States? That would help them avoid the tariffs that are now in effect. And by the way, they did go in effect in terms of payments starting to be received on shipments as of shortly after midnight tonight. And a reminder, it's 25% on all vehicles that are assembled outside the United States, brought into the United States. There are some trade-offs within there in terms of content that comes from the United States that goes into those vehicles. It's 7.38 million vehicles last year that were imported into this country. That's how many potentially could be impacted, and the cost can be anywhere to $4,000 to $8,000. By the way, that's a back-of-the-envelope estimate. It depends on the model, it depends on the level of production, and how the automakers decide to do this. Do they do it model by model, or do they spread it out? So to the question of why not bring back plants to the United States, it's all about money. It costs far more to produce a vehicle in the United States than it does in Canada, and way more than it does to produce a vehicle all the way down in Mexico. This is according to Alex Partners. We asked them specifically, what does it cost in terms of hourly labor and full content to produce a vehicle in those countries versus here? And in terms of where we might see the impact on what types of vehicles, the lower end of the market is going to be hit first. Here's a breakdown in terms of market share by transaction price. In the US, the vast majority of the vehicles that are bought, the transaction price at the dealership is between $40,000 and above $60,000. That's more than half of the vehicles. But you see, 13% under $30,000, and that $30,000 to $40,000, very few of those vehicles are made in the United States. Those are imported. Couple of things, Franks. First of all, we showed the automakers at the start. Let's take a look at those shares and what they've done over the last year. Yeah, generally speaking, it's been nothing to write home about. And you look at auto sales in March up 4.8%. Could be a different story in the month of April. Couple of things that happened this morning. Nissan is shutting down some of its production in Mexico. Not a surprise. We've talked about this. Why would you ship a vehicle to the U.S. If you're going to run into this? And Volkswagen halting some shipments into the United States and also deciding it's going to add a tariff fee, part of the destination fee, onto the sticker price that buyers will see in showrooms in the future. So the bottom line is this, Frank, it's all about money. And I know that the president and his team are saying we want to bring facilities back to the U.S., we want vehicles built in the U.S., but if you're an auto CEO, the question on your mind is cost-benefit analysis. It's $70 all in an hour on production in the United States, $6 in Mexico. That's a tough decision to make, to say I'm turning off some production in Mexico and I'm going to move it here to the United States.
Can I ask you a very quick question? We got headlines about Ford offering discounts. Should we expect that from other automakers here in the U.S. or abroad? And how sustainable is that really?
Well, I don't know if the full details there, Frank. I'm sure we'll hear about those today. I wouldn't be surprised if we see some types of marketing that are going to be coming out over the next week or two in terms of trying to bring people into showrooms. But this is going to be where we see the adjustment period in the month of April as far as automakers deciding, let's slow down our shipments. Why build and send it into the United States when we can just slow down the shipments? And that's when you're going to see a slowdown in overall sales. That's the expectation that is out there.
Yeah, a lot of concerns about a rising price because of low inventory as well. I was talking to a supply chain CEO. They were telling me a lot of those shipments across the border have slowed down significantly. Phil LeBeau, it is great to see you. Thank you for your time and insight as always. Have a great day.
You bet.
All right, coming up here on Worldwide Exchange, much more on President Trump's tariffs and the global fallout. Futures, as you can see, deep in the red. The Dow looks like it would open 1,000 points lower. We're back right after this break.
what's ahead.
Welcome back. We're now joined by Mark Smith, SVP at Wells Fargo Advisors. Mark, good morning. Just want to get your take on the action we're seeing in the pre-market follow that tariff announcement.
To be expected. There's a lot of uncertainty out there. The market doesn't like uncertainty. When I talk to my clients or executives around the country, that's the one word I'm hearing is uncertainty. And we don't, because they don't know how long these tariffs are going to last. Is it just going to be the baseline? Are we going to stay at this higher rate? Are there going to be folks of different countries that retaliate and bring our tariffs higher? So it's hard to do any kind of investing in your company or investing in the public markets with that amount of certainty going on. So that's what I'm hearing across the board.
All right, so where do you put money to work on a day like this?
You go into things that are a little bit more certain. Last time I checked, U.S. financial institutions have nothing to do with tariffs. Telecommunication companies have nothing to do with tariff. We're going to need to communicate. So there are sectors out there that actually will be able to weather the storm quite nicely in this scenario.
All right, Mark Smith, great to see you. Thank you very much. That's going to do it for Worldwide Exchange. Squawk Box starts right now.
Good morning. Global stocks tumbling after President Trump announces a new slate of tariffs to great fanfare and goes down, lots of cheers and happy thoughts. I'm just looking at, I know I watched retailers. Who knows? Retailers, big tech, and autos, just a few of the sectors getting hit this morning. We're going to talk about what the tariffs mean for American businesses and investors, plus reaction from Washington, key trading partners, and a live report from China. It's Thursday, April 3rd, 2025. Squawk Box begins right now.
right, good morning, everybody. Welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin on the day after T-Day for tariff days. Let's take a look at what's been happening with the market's reaction to those tariffs that were announced yesterday afternoon after the market closed. Right now, you see the Dow futures are off by about 1,100 points. Let's look at these on a percentage basis, too. The NASDAQ right now down by more than 700 points. The S&P futures are down by about 186. That's a decline for the S&P of 3.25%. The Dow off by close to 2.6%, and the NASDAQ down by 3.6%. These market sell-offs, at least at this moment, in the early hours before we get to the opening bell, are bigger percentage drops than you're seeing around the globe. So there are a lot of concerns about what this will mean for the global economy, but right now it seems to be hitting hardest right here in the United States. 10-year yield also trading near its lowest level since October 17th of last year. In fact, 4.04% was the lowest since October 17th. We're at the lowest levels since before Election Day. This is seen as a flight to safety at this point. The 10-year's at 4.05. The 2-year at 3.77. So many questions about what this is going to mean on an individual company-by-company basis, what it's going to mean on a country-by-country basis. If you check out what's happening in Europe this morning, you'll see that right now with markets that are open, the CAC is the worst performer. It's down by about 2.4%. The DAX in Germany off by now 1.9%. So that's been picking up some steam. Earlier, they were down by about 1.2, 1.3%.
And worth noting, by the way, Germany's finance minister already out this morning effectively saying that they should retaliate against Trump.
Yeah.
They believe that he will buckle under the pressure. Interestingly,
there's some back and
once
forth
you start
about
with that
where,
language,
yeah,
that's I think where a lot of this
that is a
going to come
question.
from.
Do we get retaliation, or do we get conciliatory tones where they say, okay, we're going to take some down?
Well, already you're getting the retaliation.
We'll see
language,
when
so
they
we'll see
announce
whether
it, but that's certainly possible. These will be challenging days ahead. I think we're looking at that. The other thing we don't really know, this is obviously a stock market sell-off can be self-fulfilling in terms of it can hurt the economy, but at this point we don't know, the economy is still the same economy at this point, so it could go south.
I will
there's
tell
no
you
doubt,
the
but
chaos that this has thrown into business. If you talk to large businesses,
Yeah.
if you talk to small businesses, mid-sized businesses. I mean, I have a friend who works at a company where they import really high-end sweaters, and last night her concern was she had just moved all the production to Cambodia, and was
Right.
really seeing a lot of the benefits that they were getting because they made their way out of China. There's not enough capacity.
I mean, this, by the way, is the
to
same
do
story
this
even
in
with
large volumes.
small company, big company. Apple, same story. They moved out of China, they moved to Vietnam, they moved to India.
Yeah.
They're going to get slapped with these things too. I will tell you, I talked to a CEO just yesterday, though. This is even a broader issue, which is a major multinational company that says that what's happening here is actually making it harder to hire people in other places. It's a consumer-facing company. That there are consumers that are not as interested in buying from them. So this is the whole thing changes, like the entire dynamic
There's a lot to
changes
work through.
as a result of this idea that America, which you talk about the American dream, part of what we have been selling this American dream is to the rest of the world.
But Andrew, you have been the end result, and I don't know if there's a method to the madness or not. I don't know whether it eventually works because people are split. Hardcore classical economists have never liked tariffs.
Yeah.
History has not liked tariffs. History
maybe
and economists.
When he was talking yesterday, he talked about prior to your book, 1929,
Yep.
tariffs were working. Then when they got rid of them and tried to bring them back, smooth halt, nothing worked. So that was bad. The Kernan family imports a lot from Vietnam for certain things. That was 46%.
Yeah.
That's a 46%. So I don't know where the Trump foot is. I don't know. It looks like they're serious. I mean, we should probably point out, and we could, when the S&P is dropping like this on one day, we shouldn't get complacent. But we're now back to 10%.
Right.
So now we're back. So
It's the
somehow
all-time high, so
we had bounced to where now all we're doing is matching the worst levels that we saw. Not to say that we couldn't, if it goes down 3 or 4% a day, you could get to 20%
I think
in a week.
there are still questions about how long-term these tariffs are, if this is negotiation.
And whether-
The Treasury Secretary, Scott Bessent, was on Bloomberg last night, and he said, look, I would urge other countries not to retaliate. There could be a negotiation that's in the
He
works.
was
but
urging
we have to-
negotiation.
But
Right.
also basically threatening these countries
Well,
not
that's
to do
the-
anything
well,
or they will raise it from
obviously,
here.
yeah.
This is the ceiling otherwise, unless you retaliate back, in which case we will raise even more. But then he also said we need to let these settle in.
Right.
And that suggests that this is not going to be gone in a week. This is not going to be gone.
But that is the hope.
in a month.
That is the hope, that
That's the
it's
hope,
not a
that's-
trade
that's the
war,
hope built into
but it's
the
that
markets
some of
right
these
now,
countries
so.
that, and admittedly, some of them have been bad actors in the past. The hope is that
Right.
they take the tariffs
But
off.
whatever it is, it means that the next several months, at a minimum, are going to be crazy. And it also means that most businesses are going to be frozen from making investment and doing anything.
I will say there's a scramble today for companies that have to come in and figure out immediately. If you're importing a lot of goods, you got to
Right.
figure out immediately what you're doing. So people in the business
But the
community
hit-
are like, wow.
We don't know yet what the hit's gonna be to GDP or,
Yeah.
you know, there's already been hits to consumer confidence across the board. But once again, I don't know if it's
You feel like
time.
it's a good idea.
I didn't say it's a good idea. I'm saying you don't know. And I don't think at this point you need to absolutely go running down the street screaming that the world's ending.
Look, in Canada.
We didn't need to do
you
it during COVID
Yeah.
because it was 2,200 on the S&P. It came back. We probably don't need to do it. There may be a time. And if you read the journal, this is anathema to everything that like the Wall Street Journal thinks. How long does he, you know, if it's the biggest sort of change in the global economy since World War II in terms the end of globalization, it's going to be gut wrenching, but we're back to the broccoli. I don't know if the cheesecake ever comes.
Well,
you might be eating,
the
you
journal
might be
pointed
eating
out-
dog food the
The
rest of your
journal
life,
pointed
not
out
even
that we
broccoli.
have done very well under this
Globalization.
globalization that we've set
Cheap
up. That
prices.
America has had 25%.
But the UAW guys that were there yesterday don't give a crap about Wall Street. They don't care about wealthy people. I mean, 401ks, but they were. Well, did you see they were all in on this? We're
Well,
we closed 60,000 factories over the last 50 years.
And Philip was just
60,000
pointing out,
factories.
in the United States, auto workers make on average $70 an hour. In Mexico, it's $6 an
Right.
hour. So
gonna be
there's a huge difference. This started with NAFTA and probably.
But USMCA is okay on this.
Well, that's
right?
why this whole thing. So it's going to be very interesting to see how this plays out because USMCA is okay.
The USMCA, it couldn't-
Ford from Ontario, who we had on here yesterday, is urging Mark Carney in Canada to not retaliate. He would
Right.
like to see this
He has no-
status. But
You were
Ursula
famous.
von der Leyen
You know that.
at EU.
Did you see? You were famous. You were on at least 3 or 4 hours.
Channels you watch.
I watch them all. I can't. No. You know what I'm watching now? I'm watching The Pit, which is an unbelievable
Oh, I-
ER.
On Max, yeah.
It's unbelievable. No, I can watch about 5 minutes. When you see the same story done 5 times over and over and over and over on that channel, it's like
I gotta start
this-
watching myself.
you were on there and you looked amazing and you looked like you were giving them all like you were, you know, not on Canada's side. You looked like you were pushing back. It was great. But he has no juice, that guy, right?
Mark Carney's got the juice.
Right. This
Mark
guy
Carney's
has no
got the
juice. This
juice.
guy can't say we'll take off
We
tariffs.
got to get to a guy who's got a lot of juice right now, and he's got a lot of
Done for.
information as well. Want to get to everything that's going on with what President Trump announced. We got Megan Casella, she's joining us right now, and then we've got Phil LeBeau coming up. We got a whole bunch of people with a lot of juice. So Megan, we'll start with you.
Hey, good morning, guys. So, an unprecedented day truly for trade policy yesterday. New tariffs on nearly every country and on nearly all imports coming into the U.S. Some details here. The plan starts with a baseline 10% tariff on all nations, but about 60 or so of what the White House calls worst offender nations will see a higher tariff rate based primarily on the size of their trade deficit with the U.S. Only a few products, things like pharmaceuticals, semiconductors, gold, some minerals, those are exempt at least for the moment. Now take a look here at some of the country-specific rates. China, 34%, European Union, 20%, South Korea, 25%, some of the largest U.S. trading partners there. And then also look, you guys were just mentioning this, countries where some companies have moved to try to escape previous tariffs. Vietnam, for example, 46%. So it's a far more sweeping plan than most analysts, most investors were expecting. And it's brought a wave of criticism so far from foreign leaders, many of them already vowing to respond. But take a listen. Here's what the president had to say yesterday about that possibility.
All of the foreign presidents, prime ministers, kings, queens, ambassadors, and everyone else who will soon be calling to ask for exemptions from these tariffs, I say, terminate your own tariffs, drop your barriers, don't manipulate your currencies. They manipulate their currencies like nobody can even believe, which is a bad, bad thing and very devastating to us. And start buying tens of billions of dollars of American goods. Tariffs give our country protection against those that would do us economic harm.
So terminate your own tariffs and you might see relief, he's saying there. But I would flag two things on that. One is that Israel cut all of its U.S. tariffs this week and still saw a 17% tariff added yesterday. And a White House official also told reporters yesterday that, quote, this is not a negotiation, it's a national emergency. They were suggesting there that offers to lower barriers now might not be met with a lower tariff from the Trump administration, that it's sort of an ongoing question there. And then finally, guys, right within the executive order, I would flag the president reserves the right to move these rates higher if other countries retaliate or if he feels that U.S. manufacturing output is declining. He also says, conversely, that he'll lower them if other countries align themselves with the U.S. on the economy and national security. But the upshot there being that not only is this bigger than investors were expecting, but it also brings a lot less certainty than anybody was hoping for. Andrew?
Okay, Megan, we're all trying to sort this out and figure out what's going on. I would ask one question. As you've been talking to folks around the administration, how much of this do you think is about actually raising taxes and how that's going to impact the tax reform that goes on later this year?
I can't hear you, Andrew.
And
I think she can't hear you.
oh, she can't hear me.
Yeah.
Apparently she can't hear me, which is, but we can talk about it.
Yeah,
Well, no, I think the big question is, and actually Besant was asked this, I think, on CNN last night, which is, if you're doing this to raise taxes because you want to raise revenue, like that's actually what this is about, what happens in success? It's actually a very interesting question.
You hopefully get rid of other taxes.
Well, that or you have to believe that actually things are become so great in the United States. All of a sudden, wages go up for some. I mean, it's inflationary. Wages go up, employment goes up. You know, there's no unemployment in the whole country, and therefore then you can you get other taxes from people. But anyway, the math is just very complicated.
Yeah, well,
to believe it all actually
it's
works out.
hard to play out how first other countries will react and then second how consumers and businesses will react. So it's a big experiment from that perspective.
It's a big experiment. It's a global experiment, changing the world one day.
All right, when we come back, we've got much more on the market reaction to President Trump's new tariffs. Citi's Kate Moore will join us. Plus, check out the biggest pre-market losers in the S&P 500. Right now, it looks like who's leading the way? Deckers Outdoor, Lululemon, I think they produce more than 40% of their goods in Vietnam, maybe. That stock is off by 11%. Dollar Tree, again, if you don't have much margin to work with, you're going to get squeezed much harder and probably have to raise your price, and your margins could suffer. At least that's the expectation. That stock's off by 10.5%. Corteva off by 10.4%. Stay tuned, you're watching Squawk Box right here on CNBC.
Welcome back to Squawk Box. What a morning. Take a look right now at where the big financial stocks are trading this morning. As you might imagine, they're trading down. Take a look. Bank of America off by 4%. Citigroup off about 4%. Wells Fargo a little over 4%. JP Morgan probably doing the best out there, but not by much, frankly, about 3.5%. So we got a lot to talk about.
We
a
do.
lot to talk about.
And joining us to do that right now is Kate Moore. She's the chief.
She works at one of those
Officer
firms.
At Citi Wealth. Kate, what'd you think? You get a long night of sleep last night? Wake up well rested?
Yeah, Becky, I feel refreshed and ready for the rest of this trading week. No, I mean, I think like everyone else, we were sorting through and slicing and dicing all of this data and trying to really figure out what this meant for a lot of companies, not just in the US, but around the rest of the world. And I woke up this morning with not a huge amount of clarity. I didn't say I know exactly how this is going to hit profits. I know exactly the impact on demand. And I think we're going to see that uncertainty really play out, frankly, over today's trading session.
I would say probably today's trading session and well beyond. I think there are a lot of questions about if this is a negotiation starting point, if we are going to see that. We don't know how other countries will react, but the president has been pretty clear that this is a ceiling unless you try to fight back against what we're doing, in which case he reserves the right to raise tariffs even more. So I'm not sure we know what we're in for.
Yeah, it was a much higher opening bid than I think a lot of people
Yes.
expected.
Yeah.
Consensus on the street and all these buy-side surveys were looking for kind of anywhere between, say, 12 to 15%. These numbers, even if they're the starting point of negotiations, are so much greater than anyone had started to factor into price or into their models that I think it's going to be disruptive.
So what do you tell people to do this morning, whether to buy when you're looking at pretty significant dips? The S&P right now indicated off by about 3 1/3%.
Yeah, we've had this message for the last number of weeks since I joined Citi as CIO, that effectively we don't want to be adding to risk right now. If you have a portfolio that is fully invested, we're going to sit tight and think about being a medium and long-term investor. But if you have cash that you were looking to deploy, the uncertainty factor, whether it's in bonds or in equities, was too great for us to have a really convicted call. And for our clients, like money is made while you're sitting here, and money is made while you're being patient, not when you're trading all the time.
But is this enough to lure you back in? Do you think, okay, we're back in correction territory, we're down by 10%, or is it just, even though you're seeing these drops, I don't know that I can venture in at this point until I understand it.
Yeah, look, the price levels are really interesting, and we're watching some of the technicals. We want to be thoughtful about when we re-enter the market or we think about adding to risk. But I would also note the uncertainty factor is just starting. And one of the things I kept telling the team going into yesterday is April 2nd is not going to be a clearing event for the market. We have big economic data coming out tomorrow with payrolls. Earnings are just going to be starting. I'm watching really closely how companies talk about what they expect for the balance of 2025, even ex the tariffs, because we know that there was some slowdown in momentum. And we obviously have this big tax bill that's going to need to get done, which will have implications as well. So, even if we felt like we could bake in everything that was announced yesterday, I'm not sure the uncertainty and the inconfidence are in a place where I'd want to add to risk.
The uncertainty is also where the Trump put is, and I can tell you that it may be a lower strike price than what we're used to. Number one, he's hopefully not running for re-election. I mean, I think he's just trolling, but hopefully that's not what he's saying. And even though the 20% gains each year of the last years, he wasn't president, but I still think he might have the idea that it's not house money, but the wealthy have done really well. The S&P was 2,200 a couple of years ago.
Yeah.
It's 6,000 right now. So at 5,600, I'm not sure him or his advisors at this point are saying the pain is so significant we need to say uncle. So that makes me at least concerned that the strike price on the Trump put could be well below what we're thinking it is. It could be 44,000? Could it be 4,000? What's that? Another, that would be bear market territory.
It's not just the amount of pain that the Trump administration is willing to take. It's also House Republicans, Senate Republicans, how much they're willing to take, because right now they are allowing him to do this with tariffs.
And it's Kemp and Scott Bessent.
They're the ones who are supposed to have the absolute ability
And for
to
how
raise
long?
taxes
Yeah.
and put on tariffs.
I mean, and for how long? We'll obviously have a midterm election. At some point, it feels like an eternity from now, but that will be a consideration certainly for all members of Congress. But I think this idea of the put, we've gotten very comfortable with this idea that whether there's a policy put or
Right,
a
it might
Trump
not
put
work anyway.
or a
It
fiscal put, or
might not
a
work.
monetary policy put.
Right.
And
You might
I
not have
just-
control of
Right.
having a bounce.
Yeah.
It may have already past the point of no return from where the damage is done. So
And the other thing is, the EU today, Ursula von der Leyen, I believe, was making some comments, just suggesting that, hey, we do export a lot of goods, but that they import a lot of U.S. services. And I wonder if you think about the implications, like the implied threat there, the implicit threat, what that would mean for things like financial services and other services that are imported or exported around the globe.
Yeah, I mean, I think some of that's getting reflected in the price action we were talking about, and Andrew mentioned at the beginning of this segment. I do want to say, like, it's prudent for all of these global leaders to maybe say they're evaluating the information that came out yesterday without being really reactive. We want to see the leaders be responsive and thoughtful about how they're going to approach.
Well, now you sound like Scott Bessent, who would like to see the other leaders not do anything just yet.
Well, yeah, I want everyone to come with a clear head because there was a lot of emotion, I think, and emotion getting priced into the market last night.
Well, so to me, there's two questions. One is just the uncertainty and how long the uncertainty lasts.
Yeah.
And like if this is a long-term negotiation, that's a problem. If it's a short-term negotiation that you don't like, that might be a problem, but maybe less of a problem than something that goes on for a year or two. The other question is, irrespective of whether you think tariffs go into effect or what number they are at, I actually wonder, and this is what I think is happening with the banks this morning, and I think it's going to happen to all the services companies, which are a lot easier to drop, frankly, than actually everything else, which is to say, if you are a business in France or Germany, or name your country, and you have a choice of using, dare I say, the great Citigroup or BNP Paribas or HSBC or some local bank, I kind of think you're going to say to yourself, you know what? Those guys may be good. I may like them. I may have done business with them, but I don't really like what's going on anymore. And it's a lot easier when they're doing their next deal or their next whatever to just not pick up the phone and call you as opposed to actually have to drop you, which is what they have to do in the manufacturing world.
Yeah, I think this is a good question about incremental attention and flows to U.S. companies. And this happens for international asset allocators. You think about big pension funds, sovereign wealth funds, who've all been super overweight U.S. assets. They have this opportunity now to say, for additional money that I need to put to work, do I want to invest in the U.S. or do I want to invest in another country or my own home country? Do I want to rethink that plan? You know, I can't speak so much on services.
Right.
Citi is a great global bank, so but we would hope to be seen as a global bank.
But
and
I'm saying it's not even about. I'm saying it's not even about dollars anymore.
Yeah.
What's I think happening here, because this is what I was hearing from a number of CEOs yesterday. This whole idea that people are just going to say, "I don't like you people. I don't like you people. I don't like what you're about. I don't like what you're doing."
tariffs are only good for us. They're not good for you.
Look, the world is a relative
I don't think
place.
that happened. I think they know full well that they had this coming. We'll see whether.
So
and I also
that's the thing. I don't think that anybody ever thought that they were going to have it coming at this level,
At this
and
level.
B,
Why shouldn't
and
why
B,
shouldn't they?
when I say it's all
expect it?
relative,
Because it's not just tariffs,
If-
it's all these non-trade.
when life has been like
Which
life has
they've
been
been doing.
one way for a
Yeah.
very long
But
time, even if
currency
you think that
manipulation, we
life
don't
is
do that?
unfair.
They've been doing currency.
But we don't do that with the Fed. With the idea of currency manipulation and how
that's
you
stealth.
through some of these things.
No, I don't think.
We don't have any idea what this formula is, how they came up with it.
I mean, the
We don't
formula
You
was
think,
made up.
you
Come
think
on.
we're doing currency manipulation now, weakening the
What do you,
dollar?
well, what do you call the Fed? I mean, you've said that yourself. That you
I know,
they
but
want
that's
weaken
sort of a
the dollar.
cynical viewpoint. We don't.
A cynical viewpoint.
We don't
all the time.
overtly control our currency.
We've been talking about them doing
not
that
sure
for the
any other
last
countries
10
do.
years.
because they had because they had to. Because of the fiscal spending.
And now they
We're
don't.
not doing it on purpose.
I'm
They're
just
not going
saying,
to do it as
I,
much.
I don't understand the formula, and I'm not sure other countries do either.
I think you're being polite.
I don't
understand. Not understand.
I don't
the
think
formula.
we're-
The
all right.
formula is completely made up.
Then
You look at the
this
map-
is quid pro quo too. They have tariffs in. So even if we were, which I don't agree that we really are intentionally manipulating our currency, but even if we weren't, that's just the same as what they've done to us
do you tell
for
a country
years.
where we have a surplus? Honestly, hold on. Just do that with me. Just have an
Are
honest.
we a trade surplus?
We have a trade surplus. There are a couple of countries on that
Okay.
list where we have
And
a
we're
trade
still-
surplus,
and we're still
and we're
doing-
putting the tariff
I
in.
thought that they
Tell
actually.
me how that
I
works.
thought that they actually set the tariffs based on inbound on deficits. That someone told me that none of those tariff numbers are actually true about some of the other countries.
They are true.
And that they actually were doing it with some
Based on
calculation
trade
with
laws. I
their
read that too.
trade-
I don't
trade
know
deficit. I don't know how it worked.
But that's, I mean, that's
I
something
just-
complex and
We
complicated.
are not going to lose our preeminent status as the world leading economy, Andrew. I mean, that's more running down the street screaming out about a 10% correction in the S&P. Let's wait till the worst case scenario starts to play out before we do it. All right. I mean, this is uncharted territory. We could. I hope there's a method to his madness. I do, but I'm not. I do.
Tim Geithner used to say, hope is not a strategy.
Yeah.
I don't know.
Thanks for coming in.
We could be
Yes.
we
Could
could
be
be
long
voting
day.
on getting rid of the filibuster right now and disbanding ICE. So just look at the counterfactual. Coming up. President I got more. I got more. We could confiscate we could be confiscating guns. President Trump moving closer to trade loophole that allowed low-cost packages to flood the U.S. free of charge. Details on that story after a break. And Nike and Apple leading the Dow lower at this hour. Squawk Box. President Trump signing an executive order that will stop low-value packages from Asia from entering the U.S. free of charge. The order to close the so-called de minimis loophole goes into effect on May 2nd. exactly a month after April 2nd, right? That loophole has been flagged as one of the main reasons companies like Shein and Temu have been so successful at selling low-cost products into the U.S. The White House says starting next month, shipments from China and Hong Kong sent outside the international postal network and valued at $800 or less, those will be subjected to all applicable tariffs, and packages within the postal network will be subjected to a rate of either 30% of their value or $25 per item, with that going to $50 in June.
Coming up, China responding to President Trump's tariff announcement, calling it typical unilateral bullying. We're going to take you live to Beijing in just a moment. Do not go anywhere. And you don't want to go anywhere tomorrow either, because we have a programming note. Tomorrow is Microsoft's 50th anniversary. We've got a first on CNBC interview with CEO Satya Nadella. That's going to happen live tomorrow from Microsoft's headquarters at 2:30 p.m. I will be there in Seattle, and we'll talk about everything that's going on, artificial intelligence, reflections on Microsoft's 50-year history, what's ahead for the tech giant, and all the news that's happening around us as we speak. Squawk Box coming back right after this.
Good morning, everybody, and welcome back to Squawk Box. We're live from the NASDAQ market site in Times Square. If you take a look at the futures this morning, we're under quite a bit of pressure. Dow futures are down by close to 1,200 points right now. S&P futures are down by about 200 points. The NASDAQ off by 745. If you want to show that in percentage basis, it looks like the NASDAQ is the biggest loser right now. It's down by about 3.8%. So these losses are adding up slowly as we go through the morning. Dow futures right now off by about 2.8%, and then the S&P futures are down by 3.4%, a little over that at this point. Big tech stocks across the board are lower. Apple right now down 7.5%, probably because of all the manufacturing that they do, not only in China, but in places like Vietnam and India. You can see Alphabet shares down by 2.8%, Amazon's down by 5.8%, Nvidia shares down by 4.4%, and we will continue to run through some of the sectors that are getting hardest hit by these announcements that came just yesterday.
I guess it'd be good to go long K Street right now too. It's another point that
That's the point the Journal makes,
the
and
Journal's making.
editorial page, that
Yeah.
there are going to be so many
The
businesses.
the swamp could double.
Well, they're all looking for exceptions and exemptions.
Exactly.
Yeah.
They say there won't be any, but President Trump adding 34% tariffs to those he had already imposed on China. Let's get to Eunice Yoon in Beijing with the reaction. Positive?
Maybe not. But Joe, the effective tariff rate now on China is around 70%. So this is how it stacks up. After President Trump had took office, he had hit China with 2 rounds of 10% tariffs to pressure the Chinese on fentanyl. So then this new 34% so-called reciprocal tariff, this reflects a 10% universal baseline and then a 24% tariff that is specific to China. So the 10% goes into effect on April 5th, the higher one on April 9th, and these tariffs come on top of the tariffs that were imposed during President Trump's first term. So those range between 10 to 25%. And then on top of that, you guys were talking a little bit about it, that President Trump said that he's going to end the trade loophole on May 2nd that had really been beneficial to Chinese e-retailers such as Shein and Temu. They've been able to ship a lot of goods to the United States duty-free. So in response, the Chinese Commerce Ministry vowed today to take, quote, resolute countermeasures. And based on what we've seen of the Chinese responses in the previous rounds, the expectation is that they're not only going to hit back with counter tariffs, but also with their expanded retaliation toolbox. So this would potentially include tighter export controls for more critical minerals, as well as going after individual U.S. companies. In fact, Macquarie said that they expect Beijing to go that route as part of a broader effort to try to support Chinese suppliers and push more of the cost onto U.S. customers. If you guys remember, I'm sure you do, that Walmart was summoned by Beijing to end that practice of pressuring the Chinese suppliers. Another big point that people have been talking about today is that there could be a larger than expected devaluation of the renminbi in order to try to help the Chinese suppliers. But I think the big point is that it's very unclear what else the Chinese will be able to do to really offset a 70% tariff, and that's one of the reasons why Citi is expecting that the economy here is going to get hit by 2.4% this year.
That's what we also need to factor in. The who can stand, there's going to be pain. Here, there'll be pain there, there'll be pain in all the countries affected. Some of them are very dependent on the United States, and I think that's the hope. I would have to think in the back of the administration's mind that a lot of our trading partners say uncle first, and if they don't, then we get the trade war and the retaliation, and no one wins. But I think at least that's the rationale, even with China.
Yeah, that is the rationale, and the Chinese suppliers are definitely dependent on the U.S. That really, a lot of the people that just this week, I was talking to auto parts suppliers who said that they wanted to keep selling to the United States. But I think what's interesting here is that the policy doesn't appear to be China specific. So, the tariff for the Chinese is 70%, but I was looking at Vietnam, it's 46%. For Thailand, another competitor to China, 36%. If there's some sort of deal with the U.S. where China's tariff is lowered, then suddenly you're not really pressing the Chinese in the same way as maybe you could if you were hitting China with all the tariffs as opposed to some of its competitors.
I guess if you're a rabid trade hawk, which there are some in this administration advising President Trump, you would say we've had this clout all along, and we haven't used it. We've been big patsies, and we've let these smaller companies sponge off in a lot of ways, smaller countries, and now's the time that they're going to try. But I don't think anyone knows what the end result is, and whether it's a zero-sum game where everyone loses. I don't know. Thanks, Eunice.
Coming up, we're going to talk a lot more about all this. Former U.S. Trade Rep Michael Froman is going to join us to talk about the White House's new tariffs on China and the countries around the world. Of course, he now runs the Council on Foreign Relations. And another reminder, don't miss our interview on President Trump's new tariffs at 8:10 Eastern Time, because we're going to speak with Commerce Secretary Howard Lutnick about all of it this morning. Stay tuned for that. Our top story this morning, President Trump unveiling a sweeping new global tariff plan. Total levies on China will reach, you ready for this, 54% starting on April 9th. Joining us right now, Council on Foreign Relations President Michael Froman. He served as U.S. Trade Representative in the Obama administration. We talked off camera just about how trade was not always that interesting. People didn't always want to book you so quickly, but we're sort of in the midst of it now. You are holding, by the way, what President Trump was holding yesterday in the Rose Garden, the numbers that he was suggesting, or not even suggesting, saying all these other countries have in terms of tariffs against us. Let's just start with the math. Is that piece of paper accurate to you, given what you know?
So the assessment of what other countries' obstacles are to our trade is very difficult to figure out. Right. It's not just tariffs. It's an estimate of what they say is currency manipulation, which is very rare actually, and non-tariff barriers, which are hard to put a number on. The numbers of how they got to the tariffs to impose on other countries evidently is much clearer, which is they took the trade deficit for each country and divided it by the total trade and said that's the new tariff, meaning that any trade deficit is inherently unfair.
Even though they're the biggest consumers in the world, and by definition.
Absolutely.
Yeah.
I mean, we're going to buy sneakers from Vietnam. By the way, we've encouraged companies to move out of China to Vietnam,
right,
to Mexico, elsewhere.
And now we're telling them, encouraging them to move out of there too.
Mike, we got them the numbers that they wanted. They reverse engineered it to get to the numbers that they wanted to be able to sell the 50% tariffs. Whether they're based in reality or not is another.
I mean, this is consistent with the view that I think the president and people around him have had for a long time, that trade deficits are bilateral trade deficits are what really matter. It's a signal of who's winning and who's losing. Right. And we don't want to stop until we eliminate the trade deficit. So this is intended to eliminate the bilateral trade deficits.
Okay, and do you believe it can work?
So I think it's going to be very difficult for it to work. I mean, first of all, the president's laid out multiple objectives for this. One is about leverage, getting other countries to reduce their tariffs. One is about revenue. We've heard $6 trillion of revenue to pay for the tax cuts. And the third, of course, probably the most important, is the reindustrialization of the U.S. and driving companies to invest here. First of all, you can't have it all ways. You can't raise $6 trillion of revenue and reindustrialize America, because the revenue is going to come if the imports keep on coming in, meaning you're not reindustrializing.
That's what I was talking about about half an hour ago.
Exactly. So,
and if it's a negotiation, that goes away
I think
too.
revenue is probably the least important part of this. It really is, I think, an effort by the president to transform the U.S. economy into a more manufacturing-based economy.
Which suggests that these tariffs aren't going anywhere.
No, that's right. First of all, tariffs, once they're put on, are very difficult to take off because constituencies get used to them. There's a political support for them, and any movement backwards is seen as weakness. We saw that when the Biden administration reviewed the Trump tariffs on China, but never
that's interesting. Like the UAW likes this. Other voting blocs like this.
Exactly.
What if
and you're taking something away from them?
What if the trading partner folds? Then there wouldn't be a reason for people to say, I love the tariffs as they are.
Well, they would, because it affects
even
a
if they fold.
constituency. Because it affects a different constituency oftentimes. So they'll reduce their tariffs to our agricultural products, perhaps. But it's perhaps the car makers, the auto workers.
Go across the board. If it's 0-0.
Well, 0-0, then you'd have a global free trade area.
Here's another question. Oh, go ahead.
Yeah, I'm sorry.
That would be good.
That is right. That is not the.
That's the method to the madness, which may or may not happen.
Right.
The question, though, also is how long Republicans in the Senate and in the House will go along with some of these things too. Already, Rand Paul is saying, "Look, I remember when Republicans hated raising taxes." There's going to be a lot of them that are worried about this. And by the way, the Democrats are all of a sudden very much in favor of getting rid of tariffs, which it's been a flip with how this has gone out.
The whole thing is flipped on its side because the problem with globalization, one of the problems with globalization was the benefits were broadly shared by consumers, but were largely invisible. And the costs were suffered by a relatively small number of workers in affected sectors, steel, auto workers, things like that.
But the costs were absolute. They lost their jobs.
Exactly. But this is the opposite. So everyone's going to feel the costs. Every consumer is going to see prices go up. And we're already, as you know, in a pre-inflationary stage right now. And so everyone's going to feel that. And the benefits may be 5-10 years down the road if they succeed when companies move more production.
A broader question, though. And maybe this is not necessarily an economic question per se. What do you think long-term happens to the relationship the United States has with the rest of the world? That's what you now do, basically, for a living at the Council on Foreign Relations, right? And I'm just curious how you think that plays out when we have a surplus, I think, with the UK, and we're gonna now tariff the UK 10%. 10%. Right. There's a couple other countries, by the way, where we have a surplus. It doesn't seem to matter that we have a surplus. We're happy to tariff them anyway. How does that change relations? Where do you think that China makes inroads in Canada? What do you think happens here?
Well, first of all, I think the rest of the country is bewildered, and the rest of the world is bewildered by what we're doing. And but we're the largest player on the block, and I think the president feels like we've got the leverage. We have the largest market. People want to be here. They want to invest here, and ultimately they will come. They will come around. I think other countries, as they're doing on the defense side, are going to begin to hedge their bets, and you do see an opening for China, an opening for others, as we withdraw our leadership of the international trade system.
Is that something you worry about, or you just say that's not something?
No, I worry about it because I'd much rather the U.S. write the rules of the road for the international trading system than
He would say that we've been trying to write the rules and we haven't managed to fully.
So
we haven't gotten to write them the way he would like to, right?
We've written a lot of the rules, and I think part of the challenge has been a country like China hasn't always followed the rules, and we need to be very firm about that and take action where necessary to get them to follow the rules. But throwing the whole rules-based system out, and then leaving it open, basically, what are the rest of the countries going to do now? Are they going to continue to follow the rules-based system, the WTO, or everyone's going to be doing their own thing? And when everyone's doing their own thing, every politician is under pressure to be protectionist.
So, Michael, you'd really go through it name by name then. China deserves it. UK does not deserve it. You go, your little thing there, you could like circle the ones you like and the ones Biden left on and then get rid of the ones you don't. So that's not just sort of a complete rejection of the whole notion of trying to balance things through tariffs.
Well, this is a global effort.
That's what I mean. You don't like it. You would do it on a more targeted basis, but you do think that there's times where it's appropriate.
I think there can be a role for tariffs, particularly as leverage to reduce other countries.
Right. But this is the blunt instrument. This is not. This is a shotgun.
This is a shotgun approach affecting friends and foes and challengers alike.
Okay.
Thank you, sir.
Thanks for having me.
We'll see what happens.
All right, when we come back, Senate Republicans out with a new budget plan. We've got the details on that and how it could tie in with President Trump's new tariffs after a break. Right now, in the meantime, though, check out some of the major retailer stocks this morning. Nike, Best Buy, and some of the dollar stores taking big drops lower this morning. Five Below is actually off by more than 15% this morning. Nike's down by about 10%. Dollar Tree's down by just over 10%, and Best Buy is off by 9% because these companies import so much of what they sell from nations that are going to be hit very hard, whether that be China, Vietnam, Cambodia, and beyond. Going to be very difficult for some of them to offset that if you're not a luxury retailer, if you don't have the margins to play with some of these things. Squawk Box will be right back.
auto stocks are down. Everything's down this morning, but so are auto stocks. President Trump says a 25% tariff will apply to all foreign-made cars. Joining us now, Dan Levy, he's Barclays Senior Equity Research Analyst. Does that make sense that the foreign 25% tariff is what we're talking about here? Was it a surprise that the USMCA covered auto parts were not, they did get a carve out, didn't they, Dan? That could be helpful to some extent for the domestics.
Yeah, Joe, Becky, Andrew, thank you so much for having me. I think that is arguably the saving grace here. When we got the initial tariff scenario last week, I think there was broad concern that this could create a lot of volatility. The only way that this could be manageable was with some sort of parts carve out. So that USMCA exemption makes a really big difference, and it's what allows the fact that 75% plus of what's sold in the US, which is sourced in North America, to still be a feasible option, even if there's going to be some more cost that hits.
And being able to retrofit all these factories, is the supply chain and everything that we're talking about in terms of onshoring, is that a multi-year process, or are some of these factories ready to be started up in 6 months even? Is it going to be very, very difficult? Because we hear that narrative from the Trump administration, oh, I think we're going to have Letnick on. He's going to say we can restart these things overnight.
Well, supply chain and CapEx take a very long time. And just to give you a sense, a greenfield facility could take 3+ years to be built. Moving a supply chain takes a really long time. I think the only option here really for autos is that you do have some existing capacity in place and some spare utilization, and it's using what's in North America to squeeze out additional units and to offset what's otherwise being imported from Europe or Asia.
Hey, Dan, I thought VW, Volkswagen, had an interesting take on these things. They're immediately putting a tariff fee on the cost of new cars that consumers will see, maybe a way of just trying to put some pressure politically on the administration if the consumer is seeing exactly how much more they're paying as a result.
Yeah, I mean, look, like, I think that the challenge here for automakers is how do you pass through price without upsetting the consumers, right? And just to put context on it, as it is, we're coming off of very high prices currently. We peaked at $47,000 in 2022, right now at $44,000. You know, our rough guess is this potentially adds 5% plus price to the industry. Not as bad as what we initially thought of 10% plus, but 5% is a lot for questions of affordability, and there is a real question of whether now the consumer can absorb this. So I think they're trying to at least show that it's not just them, it's that these are factors at play to not upset consumers.
Okay. I don't know when we'll have the answers. We have more questions than answers at this point, Dan, but thanks. Good to have you on this morning.
Great. Thank you, Jeff.
It is just past 7 a.m. right now, 7:01 on the East Coast, and you are watching Squawk Box on CNBC. I'm Andrew Ross, along with Joe Kernan and Becky Quick, and the global markets reacting, as you might imagine, to President Trump's tariff plan, at least 10% across the board, even higher for some other countries. China at 34%. European Union 20%, South Korea 25%, and that's on top of the 10%, folks.
And so is China on top.
And that's just to name a few. So some of those numbers actually get up to, in China's case, gets up to, I think, about 54%. Yeah. You're looking at the markets falling on the back of this news this morning. It's happening here in the U.S., where we're catching the brunt of it, in Europe as well, and Asia. The Dow off about 1,200 points right now. The NASDAQ down about 777 points, so 200 percentage basis. NASDAQ down about 4%. You're looking at the Dow Jones down close to 3%. S&P 500 about 3.5% right now. Let's flip that around and show you European markets as well. Basically 2% across the board. The FTSE taking the least of it at about 1.5% down. But interestingly, the UK, where we have a surplus, also going to get
the interesting
nailed with
thing,
a
might
tariff.
almost see this as a benefit. If they're only at 10% and everybody else is at 20% or higher, it actually puts them in an advantageous point. They're not going to like the 10%, but relative to what you're seeing from other countries, It's an interesting point. Not saying that it's a great thing,
Right.
but I had heard that the UK is not complaining nearly as loudly as so many other countries. It is going to give them an advantage, relatively speaking.
Meantime, that's interesting. Let's get to Frank Holland with a look at this morning's pre-market movers, including a few winners. Frank, who's winning?
Good morning, Andrew, Becky, and Joe. We're going to get to the winners in just a second. There are some winners, but let's start with big tech and the Mag 7. Take a look at the moves here. You see declines across the board. Apple shares falling almost 7.5%. A lot of supply chain concerns. Tariffs also hitting China and other nations where they've shifted their supply chains, like India and Vietnam. We're seeing Nvidia shares pulling back 5.5%, I believe, hitting their lows of this morning. Amazon down more than 6%. Tesla down nearly 6% as well. A few other Mag 7 names we're looking at this morning. Seeing those in declines as well. We're talking Meta Platforms. Those shares down almost 4.5%. Alphabet down 3%. Microsoft down just about 2.5%. We're also seeing retail under pressure across the board as well. From every end of the spectrum. High-end yoga pant maker Lululemon, you can see those shares down double digits, more than 12%. On the other side of the coin, Dollar Tree, low-end retailer, those shares down double digits as well, down more than 10.5%. Walmart falling 4.5%. Nike down nearly 10%. Similar supply chain issues to Apple. They manufacture a lot of those popular models for Nike overseas. And we did mention there are some winners. So the S&P's down about 3% in the pre-market, but there are some stocks moving higher. We're going to show them to you right now across the S&P and the NASDAQ. AstraZeneca, those shares up over 4%, perhaps some relief that we haven't gotten pharmaceutical tariffs, at least not yet. Verizon shares up fractionally. AT&T up about 0.25%. P&G and Johnson & Johnson moving higher as well. Seeing a lot of positive movement when it comes to staples and other defensive plays. Becky, back over to you.
All right, Frank, thank you. We will check in with you frequently this morning because there are some pretty fast-moving prices going around the markets. In the meantime, though, economists were quick to react to President Trump's tariff plan. Our senior economics reporter, Steve Leisman, joins us right now with how the outlook changed dramatically with the stroke of a presidential pen. Steve, good morning.
Good morning, Becky. Yeah, the president's tariff measures were worse than expected and deepened the troubling stagflationary outlook for the U.S. economy. Scott Lincecum of the Cato Institute called the tariffs just totally detached from reality. They are more complex and onerous than I was expecting, he said. Lincecum and others say 40 to 50% tariffs, they're not tariffs. They essentially will shut down trade from those countries. And most had serious issues with how the president appeared to make up the tariff level. He says other countries charge the U.S. And other comments on the outlook. J.P. Morgan says a recession is now likely if these policies are sustained. Pantheon boosted their PCE core inflation outlook by 1.25 percentage points. They reduced their growth by almost a percentage point. Now, here's interesting back and forth on the Fed. Citi says the Fed will cut aggressively. Morgan Stanley removed its June cut and sees the Fed on the sidelines for a protracted period of time.
Nobody knows what's going to happen.
Nobody knows. The Fed doesn't know. On the growth side, Trade Partnership Worldwide estimates tariffs will cost $654 billion in a year, or one of the largest tax increases in U.S. history. They said, quote, with tariffs taking effect immediately, American companies will be on the hook for $1 to $2 billion per day in costs for products that were ordered months ago. Even in smaller trading states like Idaho, for example, businesses could pay an extra $5 million in tariffs. The biggest concern was that the president was said to have completely made up the tariff numbers other countries charge the U.S. He said the U.S. was charging those countries half of what they charge us, but his assertion bore little resemblance to the real tariffs other countries charge, most trade experts said. Instead, the White House used a formula few had seen before based on the trade deficit that caused most to scratch their heads. So this tariff policy looks like it's basically resting on made-up numbers.
Can I ask you about the made-up numbers for a second?
Yeah.
Because we were talking about the made-up numbers.
Well, they're
Yeah.
calculated. They're not quite made up, but they get the Trump administration where it wants to be in terms of
Right. Well, when you make up the
they
formula,
reverse
the
it,
numbers
they
that come
make
up
up
with
before
are
they,
made up.
I don't know whether it's
Nobody's seen this formula
If in,
before.
right. If in fact you...
There it is.
There it is.
It's a real formula.
If in fact, Steve, you wanted to come up with a formula,
How would you do it?
how would you do it? That's my question to you.
Country by country.
They did. Look,
Be
they
really
did,
hard.
They did have a formula. If you talk to
No, I'm not saying they didn't have a formula.
It's the U.S. trade deficit divided by the gross imports from that country.
My point is that...
or 10% if you...
My point is that nobody has seen this formula
Or
before.
10%,
Nobody,
that's it, but that's not in the
nobody
formula.
has seen it as a way.
Or 10%.
Look,
No, but I will say the traders who are passing this on to me are also saying what a very well-known one. It's absurd and shows a kindergarten level understanding of international.
right. Imagine that somebody had something that they're the only ones who had it. Say it was a rare earth mineral, and you needed it, and you bought it from them. And let's say you spent $100 billion buying it from them. You would have $1 billion trade deficit with them. They would have no tariffs on you, and of course, you were taking those rare earth minerals and putting them into computers and value added.
You don't have to look at it that way. So you just got to say we're huge consumers of everything because we're so rich and prosperous. So trade
4%.
trade deficits, by definition, are going to be something.
Among the things that are quite remarkable about the president is this idea of saying that we are being taken advantage of. We're somehow
in some instances
country.
we are.
In some instances we are. But look, what about the people that moved all their stuff to Vietnam? Remember when I was reading those USTR comments? They're like, hey, we went to Vietnam because you told us to go to Vietnam.
Right,
and then they put it on Cambodia. Interestingly, those you guys, I don't have that wall back home, which is that great wall with all those tariffs on it.
We can put up something like that.
40 to 50%, according to trade experts, is not a tariff. It's a shutdown. It's you just don't do it anymore.
Yeah.
So China 54%, which is the 34 plus the 20. Vietnam was 46%.
But if
And
it's
these are
depending on how
not
big
the
or-
tariffs they charge us. It's not.
You don't do it anymore overnight, probably not. It's probably going to be a while before they can figure out where to manufacture and do some of these things. There's not the capacity for.
We had somebody on this show, Becky. They said a year for a brownfield, which is an existing plant.
Yeah, I heard.
A year and a half to plant it,
3 years for green.
and then another year to have to.
I hear on factories it's usually 3 to 5 years.
I get that entirely, but
It's
what does that mean?
fine.
You think the companies are just going to stop selling stuff in the United States, or they're going to stop? What's out?
Let me make one comment here, which is listening, of course, to Phil LeBeau, our expert on. What did he say? He said that the cheaper cars are made overseas. By the way, the cheaper guitars are made overseas.
For everything's made over.
So who gets hit by that? The people who buy the cheaper cars. Let's start there. What does that mean? It means maybe they go to a used car. Maybe they don't buy a car. Maybe
Used
they share a
Teslas are
ride.
cheap.
What's that?
Used Teslas are cheap.
Apparently, yes.
They have
Used Teslas are
swastikas
cheap.
carved on the side.
Right. Maybe that guy doesn't get his first guitar when he's 16 and never plays, and we never hear from, Little Richard or something like. I don't know. That's not the kind
But
of
the
thing.
long-term thing, I will just say the long.
Maybe you don't get the
thing is that
avocado.
You have higher wages because there's more manufacturing here, but that is something that takes years and years.
And this goes to,
Well,
I think,
if it works,
a
then-
larger political point,
Yeah.
which is, and I also talked to a number of people on this issue last night. There's a whole number of CEOs, we talk about playing chicken, who are going to sit now and say to themselves, I can hold out longer than Trump can hold out. Not me personally. But there are companies that are going to say,
Right.
if I'm going to make the 3 to 5 to 6 year investment in this factory that's not going to even exist for 5 years, what is the prospect that these tariffs are still going to be in effect 5 years from now? That is the fundamental question. And if you don't think, or you think there's even a chance that they won't be, you may just say, you know what, I'll accept what's going on here for a little while because it's not even worth me to bring back the stuff.
You see how democracy is good for business? In the sense that a tariff proposal or a tariff plan that went through Congress, that CEO wouldn't have to worry as much about that, right? I talked to a manufacturer who said, I benefit from the tariffs, but I am not expanding my capacity because I don't know if those tariffs will
It might not
exist.
be on 5 months from now, much less 5 years.
What's that?
It might not be on 5 months from now, much
Right.
less 5 years from now.
Well, if that's the case, then what was this all about?
Negotiation.
But Joe, is this the way to do it? I mean, imagine.
That's what he said he was going to do, and you got to I don't know.
No.
whether it's the
He
way to
said
do
these
it.
were negotiation tactics.
Right.
Now
And they
they're
still might.
revenue.
They
Now
still
they're
might.
bringing up-
And now it's fentanyl, and it's now
And
it's,
manufacturing.
China.
And remember, he put out a tweet that said, "We're keeping the Canadian tariffs in place until they become the 51st
You can find
state."
you can find video of him saying this stuff 30 years ago.
That's true. He's wanted to do this, so that tells you they're not temporary.
They're not negotiations.
Well,
As negotiations.
if he gets a better
As art of the
better
deal.
deal with the United
The art of the
States,
deal,
for
that's
the
what he
United
said.
States with other countries.
But how do you start when he says my tariffs are 46%? But for example, Singapore has no tariffs. Switzerland has almost no tariffs. Europe is not 39%. Europe is 4%.
Right, except
Europe
for
is for-
with this calculation. But Steve, you do need to. Their argument would be
I
that
wanna hear it, Joe.
their argument would be that you can't quantify all the other protectionist measures that aren't done.
So
to
you
tariffs.
sit down
So you
with our
reverse engineer
allies
it. You
and you
reverse
talk to
engineer
them.
it. That
You
hasn't.
sit down
that
and you
hasn't
talk
worked.
to
Did that
them,
work
Joe.
with NATO?
I don't know. Have we tried this? Trump
Didn't
sat
work
down
with
with
NATO.
them?
Didn't work with a lot of things.
I don't know if that doesn't work.
Well,
I mean, I think there's been a
Yeah.
lot of prosperity in this country and
That's
around
the
the
thing.
world. And we
There
talk
is a
about
lot.
capitalism.
Right.
You talk about free markets and what that's done to bring people
pointing
out
at
of
me.
poverty.
Don't point at me.
I'm just saying, this is what it is.
28% of global GDP with 5% of the population. This is an enormously wealthy country.
It is.
The idea that other countries are raping and pillaging us is what the term
That does put us.
okay?
That does set us up. That does set us up as a very large country that's not going to care if we're not treated fairly.
That could be true.
It is true.
They send us wine and cheese and Mercedes. That's not rape and pillage. We send them paper in response to that.
Right.
A lot more on Squawk Box this morning, including Howard Lutnick. We're going to talk about all of this with him. Do not go anywhere because he's going to be with us in about an hour from now. But coming up next, Senator Dave McCormick from Pennsylvania, Dina Powell McCormick is going to join us. They've got a new book out, and we're going to get them to weigh in on tariffs as well, and the markets and everything that's going on. Squawk Box returning in just a moment.
Insurance.
All right, welcome back to Squawk Box, everybody. The U.S. markets reacting today to President Trump's tariff plan that was announced yesterday afternoon. You can see right now the futures are off pretty sharply. Right now, declines of just over 1,100 for the Dow. S&P futures down by close to 190. The NASDAQ down by 730. If you're looking on percentage basis for all of these, NASDAQ right now down by 3.7%. It's the biggest decliner. The S&P is off by 3.3%, and the Dow off by 2 3/4.
I want to get some reaction right now to President Trump's tariff announcement and so much more. Joining us right now is Senator Dave McCormick from Pennsylvania and Dina Powell McCormick, Vice Chair of BDT and MSD Partners. They are the co-authors of a new book out this week. It is titled who believed in you, how purposeful mentorship changes the world. And we're going to talk a lot about that in just a moment. I should say that I have known Dina Powell for, I don't know, 20 years, Dina. I was thinking back to when we first met.
We were 10. We were 10 years old, Andrew.
I don't know about that, but it is great. It is great to see both of you. Before we get into the book and the mentorship issue, which is a huge one, there's obviously a lot of news on the table that we're trying to contend with, trying to understand how this all plays out. Let me go to Dave, the senator. Now, what do you make of this? By the way, you've dealt with financial crises. You've dealt with lots of things. You've worked at Bridgewater. What do you make of what these tariffs say right now, and what it's going to mean for our economy and your own constituents in Pennsylvania?
Yeah, well, good morning, Andrew, and thanks to all of you for having us on a slow news day to talk about our book. we appreciate it. Listen, I get three quick things I'd say on tariffs. Number one, the tariffs. We've talked about nothing about tariffs for last month. The tariff chapter is one chapter in a book of economic policies that's going to include deregulation, energy dominance, extension and tax reform, foreign investment in the United States. So it's important, but it's one thing. And those things should give markets a lot of certainty. Second thing is what the tariffs are designed to do is address a fundamental problem of unfairness. And Mike Froman, I just heard him on earlier. The global trading system has brought great benefits, but it's been inherently unfair to the United States in many ways. China, many other countries have not followed those rules, and it's had devastating effects in my home state of Pennsylvania, my hometown. When I was growing up, the carpet mill had 2,000 employees. It has 200 now. So what's happening here is to address unfairness and also bring back a much stronger manufacturing base in the United States. That's the goal. And the third thing is we are in the earliest days of this and still trying to digest it. I'm still trying to digest it. Scott Besson said yesterday, first of all, what the tariffs were is a ceiling. Assuming people don't retaliate. And now there's going to be a series of negotiations that take place. I mean, listen, in my home state, I'm trying to understand the impact of this so I can make sure that the second and third order consequences are addressed. Every country around the world is going to be negotiating this. And the tariff levels, it really is the case. I think Joe just said it. It's not just tariffs. It's non-tariff barriers. It's currency. So this is meant to address some fundamental unfairness. And I think it's too early to pass judgment. I'll say one final word, which is what President Trump has been talking about during the campaign. Everything he's doing, he said, this is about the real economy. So if we can get the real economy where it needs to be through a whole range of policies, that's going to be good. That's going to be good for financial markets.
Well, let me just ask, and maybe both of you can speak to this. And Dina, you spent a lot of time talking to some of the biggest CEOs, global companies around the world. In terms of just the uncertainty that all of this portends for some period of time, irrespective of what you think the final numbers are on the tariffs, how long does that last? And what do you think of this game of chicken that may take place? Which is to say, there are a lot of CEOs who are having to make some hard decisions about, do they bring manufacturing back to the U.S.? They have to believe that these tariffs are in place not just today, but likely in 5 years from now, given some of the big investments that they're going to have to make, and the fact that some of these factories and other things that they would have to build might not actually get online for 3 to 5 years.
Well, I think we've gone from kind of animal spirits, a couple months ago, to animal hibernation here, where the uncertainty has frozen people a bit. That's why I started my answer with all the things we should be certain about. Those are all wind in the sails for companies. On the tariffs, I think this is going to play out over time, but there's lots of reasons for people to double down on their investment in the United States. Energy prices, deregulation. This is just one factor, and I think the steady state will be a tariff regime which makes sense for companies to invest in the United States and hopefully creates much more fundamental fairness across our trading partners, which is the goal.
Okay, we will see how this all plays out. Let's talk about the book. Dina, I want to know who believed in you before you believed in you. A lot of what this book is about finding people who are people's mentor and people who gave people confidence when they didn't have any. And frankly, by the way, right now, I think a lot of people could use some.
Well, thank you, Andrew. First of all, this book started out during COVID. As you know, we have 6 daughters between us. And we realized that they had lost so much more than high school proms or graduations. They'd lost 3 years of human connection, which included anybody that believed in them and could show them how to be in the office, how to actually get your first job, give some feedback. And so we started asking people, many people that you guys know well, from Satya Nadella to Steve Schwarzman, Tory Burch, Brian Grazer. And in every single case, somebody had changed their life by believing in them. In my case, as you know, I'm an immigrant from Cairo, Egypt. At 5 years old, my family moved to Dallas, Texas. And growing up, my parents were totally supportive. They would say, listen, we left Egypt so you and your sisters could pursue your dreams as long as you're a lawyer, a doctor, or an engineer. So it was one person that took a chance on me that got me to Washington. Kay Bailey Hutchison, the senator from Texas, said, why don't you defer law school, come to Washington? And honestly, that one person seeing something in me led me to a path where I eventually, as you know, worked for 2 presidents and at Goldman Sachs for 16 years, and now at BDT and MSD. Our hope, Andrew, with this book is that we ignite a new mentoring movement. COVID took a lot away. You just spoke to the fact that people kind of need some confidence, and if you invest in one person, this book really shows you can change the world.
Hey, Senator, and that's true, Dan. That's amazing. But Senator, I don't know who are your biggest mentors. You had mentors in the military, and how important is that? Do you think? I know you recently had the event and the panel at West Point with all the cadets and the dean of the school and Brian Grazer, and it was something. Alex Gorski, but
yeah,
were you more mentored? Do you think is that your formative?
You know, my formative mentor, my first one was a high school football coach, where I grew up in rural Pennsylvania, and my first couple years of high school I rode the bench for the football team. And I'd get in the fourth quarter when we were winning big or losing big, and the coach got fired, and a new coach came in and looked at all the films, and he called me over the summer and said, I think you've got some real potential. And sort of mysteriously to me, at the end of football camp my junior year, made me the co-captain of the team. And I went on to be an all-state linebacker, and that helped me get into West Point. And that guy seeing leadership in me, seeing potential in me, it literally changed my life. And that's that's what we see throughout the book. The book has mentions all these famous people, but it's about the people you've never heard of that help those people be successful. And I saw that tomorrow you're highlighting Satya and the 50-year anniversary of Microsoft. He's one of the people profiled in the book. And the crazy thing about his story is that one of his mentors, the guy that kind of saw potential and helped him become CEO, was a guy named Doug Burgum, who you've had on this show many times. So it's paying it forward. And the 3 questions we ask everybody to ask is, who believed in you? Have you told them thank you? Because many of the people we talk to wish they would have said thank you. And the final thing is, who are you believing in? Who are you paying it forward to? Who are you helping achieve their purpose?
Okay, and there's a big difference, Andrew, between how to mentor men and women. I just want to take a second on this, especially in the world of finance. Women need a lot more of this kind of mentorship. Mary Erdoes hosted us a couple nights ago, me and Jane Fraser, Jenny Johnson, and Asahi Pompey from Goldman. Over 300 women showed up, kind of thirsty for this kind of feedback. I told a funny story. Jamie Dimon made a cameo appearance there, and I was telling Jamie that Lloyd Blankfein was a very significant mentor to me. And he used to give me pretty tough love, like stop having such thin skin, look forward, don't look backwards. If you're at these tables, it means you got to make the tough decisions. Not everybody's going to agree with them. Women need those kinds of mentors. He used to say, you might say I'm a mentor or a tour mentor. But the truth is, it really is critical. And we did this study, 2,200 people with the Yale School of Management, that showed mentoring was so important, especially to women in male-dominated industries. And so if you go to whobelievedinu.com, I do really think you will see there is a lot of benefit to the bottom line of your companies to ensure that the next generation is being mentored.
Hey Dave, you mentioned it in your mentorship story, just the idea that you kind of live up to people's expectations. And I thought Wes Moore, the governor of Maryland, laid it out very nicely in the book too. He had written a book himself about the other Wes Moore who grew up in Baltimore just like him, nearby, and their paths were so different. He went on to become the governor of Maryland. The other Wes Moore wound up in prison for murder.
It's a great story. It's a great story.
The idea of it, you become what people expect you to become.
It's absolutely the case, and Sarah Huckabee's in there, Wes Moore's in there. The thing about Wes Moore's story, which I love so much, is that his mom played a huge role in his life, and she knew that he needed male mentors. So she actively recruited. She'd go up to when he got into Valley Forge Academy, he was sort of struggling and got in some trouble. And his mom found a man there, a young African-American man who was succeeding, and she said, "You are going to be my son's mentor." And he was, and he became an important part of Wes's life. So this is bigger than politics. We've gone across industry, entertainment, great successful leaders, and all of them wouldn't be where they are without mentors who believed in them.
Well, Dave and Dina, we want to thank you. Congratulations on the book. It's called Who Believed in You, and we appreciate you coming on such a busy news morning, and look forward to seeing you guys in person soon. Thanks.
Thank you so much. Thank you for
Glad we're
having
not
us.
talking about your book. I'm glad we had their book to talk about instead of 1929 today, which is not out yet, right? This is for, well,
Yeah, speaking of, let's take a look at some chip stocks that are under pressure this morning. Taiwan Semiconductor is off by about 5%. You can see this. We're going to talk to an analyst about the impact of the tariffs, what that's going to mean, whether investors should be buying this dip, whether they think the tariffs are permanent or not. Squawk Box is coming right back.
Time now for today's AFLAC trivia question. How many states currently have active volcanoes? The answer when Squawk Box returns. And now the answer to today's AFLAC trivia question. How many states currently have active volcanoes? The answer, 12. Alaska has the most with 141 active volcanoes.
All right, the chip stocks are lower following President Trump's tariff announcement. Taiwan, which is home to the world's largest chip foundry, Taiwan Semiconductor, was slapped with tariffs of 32%. You can see across the board declines of about 5% or so. Nvidia's off by about 5.8%. Joining us right now is Matt Bryson. He is Wedbush Securities analyst. And Matt, what impact is this going to have on these stocks longer term?
I mean, longer term, I don't think it changes that much. So Taiwan Semi is still the only company out there that can do advanced semiconductor production. That doesn't change because of tariffs. And NVIDIA leads in AI. That doesn't change because of tariffs. Maybe someone like Intel, they end up being advantaged because they have all this U.S. production capacity. The thing about Intel is that their problems have been tied to their inability to compete at the high end of semiconductor production. And so whether they get that right or not is far more important as to whether they have U.S. manufacturing capacity.
So who pays the tariff in the end?
I mean, in the end, it's the consumer, right? It's whoever is buying the products. It's U.S. companies, U.S. consumers.
So you don't think manufacturers, I mean, chips are different, I think, than, let's say, sweaters or swimsuits or Lululemon pants. Chips are a little different. You think ultimately these are needed and these companies are going to be able to charge the prices they charge because nobody else can supply the chips?
I mean, that's it exactly. So there is no competition with Taiwan Semi, a 2 nanometer, 3 nanometer manufacturer. There is no competition with, or limited competition for NVIDIA with their high-end GPUs. You look at disk drives, for instance, they all come out of Thailand from Seagate and Western Digital. You can't buy them from somewhere else. So these are areas where you've got limited numbers of suppliers, in some cases virtual monopolies. And those suppliers, they will charge what they need to charge to make their businesses work.
So why are we seeing, I mean, if that's your take on this, I would assume you think these sell-offs in stocks like NVIDIA or Taiwan Semiconductor are overdone today. If it's not going to impact them, this is maybe a better price to jump in?
I think from a longer term perspective, that's definitely the way to look at it, right? Taiwan Semi is still the leader in advanced manufacturing. NVIDIA is still the leader in AI. From a short-term perspective, the problem is demand destruction. So if prices for PCs go up 30%, Intel simply isn't going to ship as many processors, and their costs stay the same because they have to run all these fabs. So it's just bad in the near term for everyone. I would argue companies with more exposure to large data centers are probably less impacted. So NVIDIA does better than, say, an Intel.
Yeah. Right. Longer term, despite Intel's production in the United States, does this boost the move to eventually move production back to the United States for semiconductors?
I think it was already happening. So does it make it more immediate that TSM works on building out its factories in the U.S.? Probably. But I mean, beyond that, we were seeing all these companies with U.S. expansion plans, right? Samsung, Intel, Micron, TSM, they're all building in the U.S., so it was already happening.
Okay. Matt, thank you.
Thanks.
Right, coming up, Oakmark Fund Portfolio Manager Bill Nygren is going to tell us if there are any buying opportunities in the market right now as we head to break. Check out the toy maker stock down in reaction to those new tariffs. Sparkbox will be right back. Welcome back to Squawk Box. Futures right now. Take a quick look. You can see down now just under 1,200 points. Been there for a while. On a percentage, I'm talking the Dow on a percentage basis. See the S&P is now down 3.35. That puts it in correction territory if it were to end the day like that. Check out energy prices. We got to check out the 10-year too. There are energy prices, as you can see on growth worries. Also, we are almost under 4 at this percent, 4.08%. Joining us now with more on the markets is Bill Niger, an Oakmark Fund portfolio manager. How concerned are you at this point, short term, intermediate term, and long term?
Look, I don't think the tariff news is welcome news for investors because of the uncertainty it creates. But at Oakmark, we always try to look out long term. We try to estimate what a company might be worth 5 to 7 years from now. And then we look for opportunities to buy at a large discount to that. And I think today's market does give us that kind of opportunity.
Already, at this point.
Yeah.
It's not a falling knife.
Well, everybody worries, like, once you're in correction territory, then they start to think they should be cautious. But the data shows that once the market's down 10%, you're no more likely to lose money then than you are if you buy at any other random
So
time.
you don't care. I can tell you some narratives that'll just curl your toes for what the effects of these tariffs could be. You don't want to hear any of that from me. You just look at where historically how the markets perform, and you think when there's a time like this, this is where you actually, instead of being scared, you buy.
Yeah, basically. I mean, look, I don't want to have your side of the argument to have to try and defend the tariffs. It's a tax increase. Those are inflationary. Those are anti-growth, as any other tax increase would be. And maybe down the road there's something that offsets that. But right now, our job is to try and guess what a business is worth and to make sure that they're financially strong enough that they can survive pretty much anything that happens until we get back to normal.
Bill, let me ask you this though. In terms of, you're saying a 10% down, not typically a bad time to buy, historically. Right. Historically is the question. What is the parallel that you're thinking about when you say that? That is true for the last 90, or not even 90 years, maybe 80 years that's been true. I don't know if that's true if you were to look back farther when the issue of tariffs came into play before.
I don't know that answer either. What I'm talking about is in the past 50 years, we've been through 20 times previously when there's been a correction down 10%, and your median return a year or 3 years later is actually a little bit better if you bought once it was down 10% than if you bought it another time. It's something like 75% positive a year out, 85% positive 3 years out.
The thing that I can't figure out is, has the world been rewritten, right? If this is a fundamental shift, then the last 50 years may not be the relevant
might not be long
point. I don't know the answer.
It's so funny for me to be put in this
answer.
position now, because normally I'm talking about thinking out like 5 years, and people say that's such a long time frame, and now 50 years back isn't long enough. You might be right.
I don't know. I'm not saying I may be wrong. I'm not even suggesting that I don't know the answer. I'm just wondering what the parallel is that you think is the right sort of comp for this, only because I don't think we've seen anything like this in the last 50 years.
Yeah, and we hadn't seen anything like a pandemic in the last 50 years. We hadn't seen housing prices go down 20% like we had at the GFC, but those ended up being really good times for investors to add.
You want to, so you don't want to talk about any of the worst case scenarios of what could happen. This almost just sounds like an investment thesis that has worked so well for you up to this point. Could I ask you, if the dollar were to go into free fall, would that change your outlook? If rates, because the dollar is going down, if rates all of a sudden spike higher, they've been going down. I mean, that's one of the best things about all of this. That's the one silver lining in what we're seeing is that 10-year.
Look, if you can project macro variables better than the average person can, that can be additive to your investment approach. We found we can't do that. And just to invest long-term in companies when they're cheap, has worked very well.
I'm gonna
There are a bunch of companies.
I'm going to believe
sometimes-
you. Okay, so which ones would you be buying today?
Well, I think with the market at about 20 times earnings, we've got an unusual opportunity to buy companies at single-digit PEs that are just kind of left behind as the Mag 7 had sucked most of the oxygen out of the room. You look at a company like Delta Airlines trading just above 40, consensus numbers are over $6 for next year, so you're talking about a PE under 7. Charter Communications, people still think of it as a video company. It's an internet provider, about 8 times expected next year's earnings. A company like Citigroup that's going through a big transformation, 70% of book value, 7 times expected next year's earnings. I think if you buy companies like that, they're already incorporating pretty negative expectations. And it would be unlikely that if you buy today and hold that for a longer period, that you don't come out reasonably well.
For a company like Citigroup, you think the negative expectations are that there's a downturn in the economy, and you know, financial stocks, banks in general, would struggle under a situation like that. You think that's already baked in?
Well, I think it's interesting because the past 2 recessions that we've had, the COVID recession and the GFC, were both such big recessions compared to normal recessions. And those were problematic, obviously, for the banks. But through most of my career, a typical recession was more like what we went through in the beginning of 22, where you had a down quarter of GDP. We talk for the next quarter about might we be in a recession or not. And then by the time you have the second negative quarter, you're already on the way out of it. If that's the kind of recession that might be coming, that doesn't mean the banks lose money. It doesn't mean elevated credit costs.
Right. Can I just go raise back to the, maybe it's the skeptical question, but again, service companies, financial services companies specifically, it's a lot easier to not for a business in Europe or in another country that's being tariffed, forgetting about the math of it all, just to say, I'm not using them. I'm using my BNP Paribas in Paris, or I'm using HSBC in Asia, whatever it is, than it is to actually even get out of a manufacturing situation. And so the question is whether this dynamic, whatever we're seeing here, just plays out even as a behavioral science experiment. And that changes the actual math of these institutions.
I suppose it could. You can't ever rule those things out. But the reason Citi has such a great global treasury business is because they've got a better product. And maybe we'll be wrong this time, but at Oakmark, we've always bet that economic forces were stronger and longer lasting than political forces. And it's served us well for the 30 plus years we've been doing this.
You remember where you were when you were on 24 years ago? You remember that?
I do.
Mark Haynes was introducing you on September 11th. So you've been a long time friend of, I'll never forget that. Did you come on or did you get canceled?
No, today's actually, I've been doing this for almost 30 years. Today's the first time I've been on set with you.
You were supposed to be on that
Chicago.
Oh, yeah.
And we were in a discussion. I think I was talking about the cable TV industry back then as well.
And he said, a plane said,
sorry, I have to interrupt for a minute. Sat there for about the next 25 minutes with them thinking that they'd be coming back.
Back to you, and you sat there and they never came back. And Jack Welch never came on that day to talk about his book. Yeah, okay. I don't know why I thought of that, but it really did. Because it's 24 years, you've been coming a long time, been doing this a long time, through that pandemic, through 87, through all
And
of
somehow you look the same as you did 24 years ago, and I don't.
I think you do too, but I'm glad you said that about me. Feeling good. I'm good, I'm great, and I can sell. Bill, thank you.
Thank you.
Coming up, a lot more on the markets this morning, and our big interview, it is coming up. You do not want to miss it. Commerce Secretary Howard Lutnick. We're going to walk through the whole tariff proposal, what it means, how much of this is a negotiating tool, and what comes next. And then tomorrow is Microsoft's 50th anniversary. I'll be in Seattle because we got a big first on CNBC interview with CEO Satya Nadella. That'll be live from Microsoft's headquarters. That's going to happen at 2:30 p.m. We're going to talk about artificial intelligence, reflecting back on the past 50 years in tech at the company and what's ahead for the tech giant and all the news that we're talking about now. Squawk Box coming back after this. Welcome back to Squawk Box. Some new numbers on U.S. layoffs. Challenger Gray and Christmas reporting employers cutting more than 275,000 jobs last month. That's up from 172,000 in February. The March number more than triple the level from a year ago. Government jobs accounting for the bulk of the layoffs, followed by retail. There were fewer job cuts in technology services and the financial sector. So some numbers to chew on this morning.
All right, when we come back, President Trump's new tariffs targeting many of Apple's manufacturing hubs, and that stock tumbling as a result this morning. We're going to focus on the tech giant next. Right now, though, as we head to a break, let's take a look at some of the fintech stocks down after yesterday's tariff announcement. Block is off by about 5%. Affirm Holdings down by 8.6%. PayPal down 4%. Visa and MasterCard down 3.5% and 2.6% respectively. Squawk Box, we'll be right back. Apple shares falling sharply this morning. You can see they're off by 7.7% right now. President Trump's tariff plans targeting the tech giant's manufacturing centers beyond just China. And joining us right now with more on Apple and the tech sector is Evercore ISI Senior Managing Director Amit Daryanani. I'm sorry about that, who has an outperform on Apple stock. Amit, first up, are you keeping that outperform on Apple stock this morning?
Yeah, yes, so the rating remains intact, and I'd say, with the tariff is, there are two scenarios for companies that make a hardware, a product. There's a bad scenario and a really bad scenario, but those are really the two options you have when it comes to these names. So the Apple is in that bucket, along with all the other ones on these tariff issues. And, I think the focus of Apple will be, given the manufacturing is heavily China, Vietnam, and India right now, is there an off-ramp for Apple, which is essentially going to come down to, they're committed to investing $500 billion in the U.S. over the next 4 years. Does that get them an off-ramp compared with the exemptions they had last time? That would be a good thing for them. The alternate, I think, for Apple and others, in fairness, will be, do they start to raise prices over time to offset this in the U.S.? And what does that do to the demand permutations eventually for them?
Okay, I mean, that's very interesting. I was trying to figure out what you meant by an off-ramp. An off-ramp doesn't mean that they can move their manufacturing. An off-ramp would be that they get remittance from some of these tariffs. They get a carve-out somehow because they've committed to spending so much in the United States. How quickly do you think that would happen? How high are the odds of something like that happening?
I will say that getting to the timeline of how quickly that could happen, way above my pay grade to figure that one out. If you look at the last time, in the Trump 1.0 administration that had these tariffs, Apple was able to get exemptions at that point, the off-ramp, if you may, relatively quickly, no matter of weeks when they announced tariffs.
Yeah, this feels different.
This does seem different, and so it's hard to know when they'll get it, or if they will even get it, in fairness. Now, the reality may be, even if someone has to move production to the U.S., it will take a few years to get there. And so is that the kind of runway Apple could get in an exemption, saying, we'll move things here, but you get an exemption till then?
If they do, I don't know what pushback they would get from China and India. China's already kind of frustrated with how much they are investing in India as an alternative to China. I guess if they don't get an exemption, let's say this fiscal year, how would that impact what you anticipate their sales and margins will be, and your result, your price target on the stock as a result?
Yeah, I mean, so let's say there's no exemptions whatsoever from, China, India, Vietnam, the three places where they have production right now. The EPS impact, if Apple does nothing, is about 10 to 12% to the bottom line for them, right? So it's a relatively sizable impact of probably double digits on the bottom line if they do nothing. What I would say is very logical for Apple to do, and maybe not right away, is they will raise prices. Historically, if you look at countries like, Japan, for example, where FX has become a big permutation for them, they tend to raise prices, but Apple is unlikely to raise prices between a product cycle, which means they would just wait for the iPhone 17 cycle and then raise prices. And then I think, Becky, begins a different discussion on what does higher iPhone ASP do to demand permutation or destruction over time.
Yeah, and what's the answer on that front? I mean, Apple's already seen sales in China decline pretty rapidly for a lot of reasons, but competition there too.
Yeah, I mean, in China, you have the competition part. I would say China macro is probably as big of a headache as competition is for Apple right now. So you've had a macro issue in China, you've had competition issues, there's an element of nationalism at play as well in China. So the different things there. But in the US, I think if they raise price on iPhone, it remains to be seen now. Our hope would be if there's a lot of innovation on iPhone 17, it's a slimmer, faster, better iPhone. If the US macro ends up being in a better position than what folks are apprehensive about, then they could get away with price increases with limited demand volatility. That would be the optimistic scenario. But barring that, I think you're looking at 10% EPS reduction without any offsets to this right now.
So your point would be, even if they don't get an exemption, you're still looking at an outperform on this stock?
Relative to a lot of other tech stocks that are out there, we think this remains a very attractive asset to own. And keep in mind, iPhones are really relevant, but they are a part of the story. Apple actually makes more money at this point from services versus they make from the hardware itself. So there's better diversity over there beyond just iPhones. And we do think Apple will manage this a lot better than most other companies will when it comes to tariffs as well.
Okay, Amit, thank you.
Thank you.
It is just after 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Global markets in sell-off mode after President Trump's tariffs go into effect. We've got the U.S. futures this morning, Dow futures down by over 1,200 points, S&P futures down by close to 200, and the NASDAQ down by just over 770 points. On a percentage basis, the NASDAQ's the biggest loser. It's down by 3.9%. S&P futures are off by 3.4%, and then the Dow off by 2.8%. In Europe, we are seeing some weakness across the board there, not as much on a percentage basis as we're seeing in the United States, but the CAC in France is the biggest loser. It's down by about 2.8%. Then if you check on currencies, there have been a lot of questions about the dollar, what's been happening. You can see the dollar is down against the euro, up against the yen, down against the pound. And then oil prices this morning at this point look like they are down pretty substantially. 6% decline for WTI, down by $4.40 to $67.34. Brent crude off by 5.6% to $70.66, and that may be questions about what all of these tariffs mean for global demand.
Meantime, President Trump announcing those global tariffs, and there is now a baseline tariff of 10% on all imports into the United States. It is effective April 5th. Then there is what the White House is calling reciprocal tariffs. Those begin on April 9th. Here's what we do know, and we still have a lot of questions out there. But in addition to the current tariffs, there'll be a 34% tariff on China, but of course that's on top of the existing 20% tariff. So that makes the effective rate, we should probably just put this on the board, guys, at least 54%. So you see 34% there, but it's really 54%. For the EU, the new rate is 20%. But again, that really looks in some ways like 30%. 46% on Vietnam, of course, that's a country where a lot of U.S. companies had been moving their manufacturing facilities out of places like China because the United States told them to do such a thing. And then 24% on Japan, which historically has been one of our great allies as well. China and the EU each saying they are planning countermeasures already this morning, so this could escalate. In the United States, two notable sectors getting hit this morning, as you might imagine, the auto sector being one of them. You're looking at General Motors down about 2.5%. You're looking at Tesla, interestingly, down 6%, which surprises me. We can talk about why that may be the case in just a moment. Take a look at retailers as well. You're looking at Nike now off about 10%, 11%. That's a company that's manufacturing a lot of its goods in some of the countries that are going to be seriously tariffed, China, Vietnam, and the like. Five Below off now, 15, almost 16%. Dollar Tree off, Best Buy off as well, over 11%. For a closer look, rather, on all this, want to get to our team of CNBC reporters. Courtney Reagan's at the table. She's got reaction from the retailers, but we're going to start with Phil LeBeau on autos. Phil.
Andrew, I get this question from a number of people. Why don't the auto companies simply move some of these plants from Mexico and Canada back to the U.S.? The answer? Oh, it's a big one. It's all about money. Look at how much more expensive it is to build a vehicle in the United States compared to Canada and compared to Mexico. This is information from the consulting group Alex Partners, a leading consulting group in a number of industries, including the auto industry. And we put the question to them point blank. In terms of hourly labor and overall labor, how much more, what's the difference in building a vehicle in the US, Canada, and Mexico? And a couple of things to keep in mind here. That's just hourly labor. All in, when you add things like indirect labor, energy costs, etc., U.S. assembly of vehicles, 68% costlier than Mexico assembly, and it's 38% costlier than if you were building a vehicle in Canada. Just a reminder on where we get most of our vehicles from in this country that are bought at dealerships. A little over half are built here in the U.S., but look, you've got Mexico, South Korea, Japan, Canada. That's where the bulk of the vehicles come from. It's only 5% for Europe. I say only. That's a significant amount, but that's where we get our vehicles from. The inventory right now is at 71 days, which is basically normal. That's a normal market, but that's going to be changing very quickly. Couple of notes this morning. Stellantis saying that it will be pausing some of its production in Mexico and Canada, including shutting down its plant in Windsor, Ontario for 2 weeks, restarting on April 21st. That's where they build all of their minivans at. Ford this morning out with a new marketing plan offering employee pricing as there's a surge of people going out to dealerships looking to buy a vehicle now before the tariffs take effect. And finally, take a look at Nissan and VW. Nissan is suspending some of its production in Mexico, according to reports out of Japan. And VW is halting rail shipments from Mexico to the U.S. due to the tariffs. It is also going to be adding an import fee that will be listed on the sticker price when you go into dealerships as the tariffs take effect. That is the story with the automakers. Courtney, tell us what's going on with retailers.
Yeah, Phil, I mean, wow, what a morning I think that we might be in for. President Trump's tariff announcement is what Jeffrey's team in Asia calls, quote, a nightmare come true for textile and footwear manufacturers. So many brands and retailers have shifted manufacturing out of China over the last number of years to Vietnam and other Asian production Bayesian countries, and now those are subject to heavy reciprocal tariffs. What we learned yesterday. Vietnam imports subject to 46%, Cambodia 49%, and China, as we've mentioned, now subject to a 34% reciprocal tariff. That's on top of the previous 20% levied by the administration for a total import tariff of 54%. And a note titled Tariff Tantrum, US-based Jefferies analyst Randall Koenig says the new tariff announcement makes retailers' guidance and mitigation strategies, quote, essentially fruitless, and all footwear and apparel margins will be affected. The question comes, where do we go from here? 34% of footwear sold in the US last year was imported from Vietnam. That was second behind China. Similar picture for apparel. Some of the retailers most exposed to manufacturing in Vietnam include Nike, On, Lululemon, American Eagle, Wayfair. We know Abercrombie has a lot of exposure as well, and many, many others. Retailers, frankly, have a lot to figure out. In the meantime, the lobby groups are speaking out on their behalf. While I imagine the war rooms are going to be packed and busy today, Steve Lamar, president and CEO of the American Apparel and Footwear Association, saying in part for companies that have been in a wait-and-see mode, the chaos of the last few months, coupled with the confusion from today's announcement, that was from yesterday, has only created more uncertainty. So, Andrew, a lot of the retailers just frankly aren't ready to speak yet, as you might imagine, because they just don't know what to say or what they're going to do.
Let me ask you two questions. One is, for most of these manufacturers, when they have moved from China to Vietnam or from China to India, how long has it taken them to spin that up? Is that
years?
Because I keep hearing 3 to 5 years is almost a minimum amount of time that you have to, okay. So then there's this, and we'll talk to Howard Lutnick about this, then there's this game of chicken that goes on politically, which is to say, they need to know that 5 years from now, these tariffs are going to be here if they're going to make that move. What are you hearing from retailers? Are they saying, we think this is here to stay, we don't know, we...
I mean, really, it's a lot of we don't know, and there was a lot of surprise yesterday. This is, you know, the words that I'm hearing is sort of shocked, much worse than we thought. We have to rethink things. I mean, when we were thinking that tariffs were coming in on all Mexican and Canadian imports to the degree of potentially 25%, that's what I think a lot of the retailers were preparing for. And we had asked them very specific questions in this last several rounds of quarters reporting about that. And so they had really begun to talk about it because, as you might expect, as the China conversation sort of took on a life of its own, we talked more about nearshoring and brought things to Mexico. And so now I think that lesson is going to scar retailers a little bit, to your exact point. I don't know that anyone wants to have a knee-jerk reaction, because is that the right thing in 3 to 5 years from now? So I think there's just going to be a lot of questions, a lot of confusion. I don't envy a retail CEO this morning.
Court, there have been people who have suggested, and even as recently as this week, Jan Niffen suggesting that a lot of these would be picked up by the factories themselves, by the manufacturers of this. I don't think anybody was anticipating numbers this big, which makes it way more complicated. And maybe there's just a lot more pain to go around.
Right, I think that's such a great point, because I think if you're talking about a 10% or a 20% tariff, which I guess is the case in some of these countries, but if we're looking at the top 60, or in this case, what I'm really focused on is the Vietnam, the Cambodia, the Bangladesh.
Where most of these clothes are made.
Exactly, most of these clothes are made. It is a very, very big number. And so we're not talking about splitting hairs on a 10%. We're talking about 46%, 49%. Right. So is everybody going to take 15, 20% of that? I mean, that is a lot.
And it's especially a lot if you are a lower end manufacturer. We're not talking about luxury retailers where they have some more room for more margin that they can kind of play around with this stuff. But in some cases, when you're making clothes on the cheap.
Right. I mean, you know, think
All right.
about companies that
Let's
would
get to
build.
We got a guy who's got a lot of hopefully
Join us
answers
now.
to our questions.
Okay, great.
Joining us now, Commerce Secretary Howard Lutnick. You've been through a lot over the years. Howard, very seasoned, obviously. But today's move, is it unexpected for you? About right? I mean, you saw Monday was kind of like a bonus, the way it turned around, and but when it finally did happen, and we got the numbers, was this reaction? Is it overdone, you think, or about what you thought?
Well, I think the long term or even the medium term, you've got to expect the United States of American markets are going to do extremely, extremely well. I understand the reordering of the rest of the world's markets, but they have been taking advantage of the trading policy, the markets policy. All the policies of the United States of America were designed to make you rich and make us poor. You know, take our factories from us, go build elsewhere. I mean, imagine this. Why are all of our pharmaceutical products, the ingredients to our pharmaceutical products, made in Asia? That's not cheap labor. That's just a failed policy that lets the rest of the world gut America. And that's what Donald Trump is here to address, and he's going to change it, and he's going to protect America for our children and our grandchildren.
Hey, Secretary, who came up with the equation that we've shown? I know it's hard to get a clean number for tariffs plus all the other things that you would constitute as unfair trade, whether it's currency manipulation or regulations or whatever. But there is some, I don't know if I call it confusion, but there's some downright derision about using a trade deficit imbalance and then subtracting it and putting it over another and coming up with some of these what look like almost arbitrary numbers taken. There it is. Did you come up with that? I don't know if you had advanced calculus or something.
All right, the council, stop. The Council of Economic Advisors, right, coupled with the United States Trade Representative, they have huge staffs of economists who study this and have been studying this for years. They put out the non-tariff trade barriers. I'll give you an example. Yesterday, I was talking to a trade minister of a big country, and I said, look, we can't sell cars in your market. You've got to do something to change that. It's obviously unfair. And at the very end of the conversation, the trade minister dropped his head and said these words. He said, fine, we will provide your car manufacturers the same subsidy we provide ours. Just think about that for a minute. So you've got all these countries, they charge a VAT or a consumption tax. What do they do with that tax? If they turn around and sell really cheap energy to their steel company, then their steel companies destroy ours, put ours out of business, and then all of the steel goes elsewhere, and we can't defend ourselves in a war. If they take that and give it back as a subsidy to the car manufacturer, then their car manufacturer actually has a cost of $40,000 when our car manufacturer has $50,000, and of course we're never going to sell a car. So this is the reordering of fair trade. And what happens is people think it's all about tariffs. It's about those non-tariff trade barriers.
Well, it'd be nice
That's what we are addressing now.
It'd be nice if everybody on that list, all those countries, said, you know what? We've seen the error in our ways, and we're going to go 0-0. We want to make it fair across the board, but how likely is that? How soon do you expect to see some concessions, or conversely, retaliatory tariffs, which just cause this to go much longer than anyone probably wants, to be more costly, and could be a full-scale trade war if it goes that way? Which are you expecting?
I expect most countries to start to really examine their trade policy towards the United States of America and stop picking on us. Stop saying that we can't sell our corn to India. Stop saying that we can't sell our beef anywhere. Just stop treating us so poorly. If we are the great consumer of the earth, The United States buys everybody's products. We buy everybody's goods. You just have to treat us fairly, and that is the problem. So some countries, you know, which have these VATs and they use these VAT taxes to, you know, they basically subsidize their domestic production, right? That's got to really be balanced. We've got to figure that out together. But what you're going to see is you're going to see tariff rates decline. You're going to see the opening of all of these global markets to our agriculture, to our ranchers, to our fishermen. You're going to see American production start to rise and finally be fair. And I think that we have Stockholm Syndrome. We're so used to being abused. And Donald Trump's been talking about this for 35 years.
Mr. Secretary, in terms of the suggestion that we're being abused or being fair, what would you say to the United Kingdom, or what would you say to Australia, where we have a trade surplus, where they could look at us and say, we're the winners of that competition, and yet we are going to tariff them?
Well, look, they each have the lowest rate available, right? I mean, if you really dissect these the trade numbers that are made publicly, I mean, the United Kingdom, part of their trade surplus is that they have the London Metals Exchange, and they count the importing of bullion. I mean, come on. So, I mean, if you really dissect these things, you realize they have a 20% VAT, okay? And these things, but they work hard to
So we don't have a trade
balance
surplus with them? They're raping us too?
Well, they have a, if you looked at them and really studied it, you'd see they have a goods deficit with us, right? And Australia buys a lot of our planes, which we really appreciate, but we're really looking at the production for people to get jobs. So the stuff with Mexico and Canada, I'd really like to talk about, because USMCA is still in place. So if you make a car in America and the parts are made in Canada or Mexico, there is no tariff. The auto parts business of Canada and Mexico are not being touched. Energy prices are not being touched. You know, people need to understand we did not today, you know, semiconductors are not included, pharmaceuticals are not included. Donald Trump's going to deeply study those, and those are going to come later on how to reshore from Taiwan, all that semiconductor manufacturing. We have to protect ourselves at some point, right? America has to be able to protect itself. We can't have everything, I mean, think about it. All of our electronics are primarily built in Taiwan. It used to be built here. Our policies let Taiwan take it all. And now, 9,000 miles away, our way of life is being built. And Donald Trump is saying, come on, that's got to be here. That's why you've got Apple announcing it's going to do $500 billion in production here. I mean, think about it. We all hold our iPhones, which we love. Why do they have to be made in Taiwan and China? Why can't those be made with robotics in America? And you know what Donald Trump has said? They're going to be made in America.
Secretary Lutnick, there have been questions raised already about whether a company like Apple would be able to get a carve-out from this because they have promised to build more in the United States. The market's trying to figure out how permanent these tariffs are going to be if there is a negotiation taking place. Scott Bessent, the Treasury Secretary, said yesterday that we may have to let these sit for a while, but I'd also heard that you've been in charge of already negotiating with some countries, maybe giving them wish lists to say, here's what it would take to get these tariffs reduced or removed. Is that the case? And if so, which countries are you negotiating with?
We're talking with all of the major countries of the world, and we've been talking to them for more than a month. This has been coming. We've said it's been coming. The key is, will they take our agricultural products? Will they treat us fairly? Can they treat us fairly? And the answer is, over time, that is going to be yes. American products are going to be better sold elsewhere in the world. But the fact remains we are treated unfairly, and they have built structurally into their markets this unfairness. The subsidies to their steel companies, the subsidies to their car companies. That's why we don't do well. Did you ever think about why we don't sell cars in Europe? Why we don't sell cars in Japan or Korea? Why we could never really sell cars? It was very difficult for us to sell cars in China. I mean, it's not that hard to figure out. We can't sell corn, we can't sell beef, we can't sell cars because the rules are stacked against us. And I think it's interesting. It's time to change the rules and make the rules be stacked fairly with the United States of America. We need to stop supporting the rest of the world and start supporting American workers.
Let's take it for instance. Australia, for instance, hit with a 10% tariff. They don't accept beef imports from the United States. That goes back to when they thought mad cow was going to be imported with some of those things. If they were to start taking American beef imports, would that be something that would get them an exemption? And how quickly do you think that could happen?
I don't think the word exemption is going to be a factor. I don't think that's such a thing. I think what there's going to be is a world of fairness. Let's go try to figure out ways for the world to treat us more fairly and more properly. I don't think it's effective for the world to retaliate. I mean, those things are silly. We are the consumer of the world, right? We buy $20 trillion worth of goods, and we are basically the buyer of everybody else's in the world's items. So what is the point of them going higher? So that we go higher? I mean, come on, look, he gave a 50% discount. What he's saying is, look, we need to rebuild American manufacturing base. We can't allow the United States of America to not produce steel. We can't allow the United States of America not to produce pharmaceuticals. We can't have a war where we can't get antibiotics and we have to call another country to make a missile or to make a plane. I mean, these are obvious things. We need to have domestic production. We need to employ Americans. And I think that is the model that Donald Trump is seizing on. We need to employ Americans for the good of the United States of America. Factories are coming back, and here's the key. Factories now can use robotics. And so American workers can be much more efficient with robotics. You're going to see the greatest surge in training for what we call tradecraft, teaching people how to be robotics mechanics, engineers and electricians for high-tech factories, HVAC. You think about your air conditioning system. No. When you build one of these great factories like an Apple factory, they use air conditioning to cool it. That is really high-tech. It's a great paying job, and it requires a high school education and training, and our Americans are ready for it. And you're going to see the greatest resurgence of factory building and factory production in America. This is our time, and it is time for us to rebuild it, and that's what Donald Trump is out to do. He's changing the way people think about production in America. It's time to stop exporting and time to stop taking all our factories and letting the rest of the world have them. It's time to bring them home.
Along with that, there sometimes are some unintended consequences. And if it's the biggest reset of the economy, U.S. and global economy since World War II, Howard, the stock market's one thing, and I can understand, we had 20% gains the last couple of years, and it's done well. But there's other markets in a world order to think about in terms of currency moves and bond yields. And it does matter because we're interconnected. So I'm going to paint you a story just quickly. The dollar has declined significantly since the president came into office. What if that became disorderly? And I mean, Europeans have already lost a lot of money in the stock market, and even more with the euro appreciating. What if they got to the point where interest rates suddenly had to spike? The dollar started to go into free fall. Investment capital no longer came into the United States like it has been. Because there's a fundamental shift in the world order in terms of currency. Is there a Trump put there? Maybe there's not a Trump put on the stock market, but what about on a collapsing dollar?
It just can't happen. I mean, if you think about it, the United States is a $29 trillion economy, and we are the consumer of $20 trillion of goods. And other countries are producers of goods, and we are the buyer of goods. So if you want to build your product, you're going to have to build it in America if you want to avoid these tariffs, or these countries have to fundamentally alter the way they do their business. Those two things going together are going to result in interest rates in the United States of America being much, much lower, high quality production jobs much, much higher, domestic production of huge amounts of factories. That's GDP, right?
Mr.
Remember,
Secretary?
when Donald Trump says we've got $5 trillion of factories coming to America, think of $5 trillion divided by his 4 years. That is huge GDP growth on factory building, which all of you are not yet thinking about. These factory commitments are going to create huge growth in America.
Mr. Secretary, that's the big question I wanted to ask you about factory commitments. And one of the things that I was speaking to a whole number of CEOs yesterday who need to actually make some decisions. And the question is, how soon do they make those decisions? And they talk about what they think of as this game of chicken, a almost political game, which is to say they don't know whether these tariffs, which are being announced today, are going to be the same in a month, 2 months, 6 months, and more importantly, in 4 or 5 years, when in fact the factories that they would have to invest in today would be up and running. What do you say to that CEO who says, you know what, I'm actually going to I'll take a flyer and I'll wait a year or two, see how this all plays out before I do anything, which also means that we're going to have a real freeze in terms of investment?
I think you're going to see, and we've been feeling it every day, that you're going to build in America. That this is a reordering of global trade, and it's really thoughtful. If you understood how rough these other countries are on American products, rough, and their tariffs are just like the tip of the iceberg. The classic, the rest of the iceberg below the water is so rough and so difficult, and they have subsidies and they have trade barriers, and you can't sell because if you lean 1 inch to the right or 1 inch to the left, oh, you're not allowed to sell. I mean, I tell the story, we made a deal in 2012 to take Korean cars. In exchange, they were going to take our produce and agriculture. And when McDonald's tried to bring in French fries, they actually said, we can't bring in the French fry. The American company can't bring in the French fries because we couldn't prove the origin of the potato. I am telling you, the rules of the world are so stacked against us that we are just the consumer of the world, and it's going to end. And once that ends, and once America wakes up to it, and now all of America is going to wake up to it, that everybody is going to build their factories here. Everybody's going to move their factories here. And America is going to become the producer of much, much more of what we consume. There will become a balance. Interest rates will be much, much lower. The United States of America will be much, much stronger. We are growing much too much like the rest of the world. Our growth rate should be double or triple them because we are the greatest economy and we are feeding the world. And Donald Trump would like to have America first. How about we feed America first? We start building these factories, you're going to start to see GDP, domestic production go up. We talk about buying foreign cars. That's consumption. That's not domestic production. We're going to start to see domestic production dramatically rise, and that's what Donald Trump is focused on.
Mr. Secretary, we've got a hard number. We've got, I think, a claims number coming at 8:30. You know, we got Friday and everything else, but we appreciate all the time you gave us this morning, and hope to see you explain all these things, make the case. I said, you know, the Commerce Secretary, he'll probably be waffling a lot about all these things. That was sarcasm. You are not. You're very steadfast in making that case. We appreciate it. Thank you.
Okay, we are now just seconds away, literally, from weekly jobless claims and international trade data. Rick Santelli is in Chicago this morning. He's standing by to see me. Rick, sir, the numbers.
All right, let's start out with that trade balance, which is a deficit, expecting 123 billion and change, comes in at minus 122.7 billion. And maybe if there is any good news in this number, it's that it isn't making a new historic low, because in the rearview mirror, minus 130.7 is the record, going back to record keeping in 1992. And with the current conversation everybody's having, you know, trade deficits, they're complicated. We'll talk about that in a minute. If you look at initial jobless claims, unbelievably tame, 219,000. And once again, for the last several plus years, they have been tame. Now this comes after a slightly revised 225,000, so we'll call it down 6,000, and on a bit of a different direction, but not much. Continuing claims once again have been hovering just under 1.9 million. They popped just above it, 1,903,000. That is the second reading with a 1.9 handle, and that would take us all the way back to, well, the last time was in 21. Yes, so we go back to 21 when last time we had 1.9 million. We have revised many of those away, and what I consider here is that historically this isn't a high number, but it's high relative to where it's been. 2021 is a long time. And quickly on those trade deficits, you know, I understand that's a difficult metric for everybody to wrap their arm around, and it is seed corn for maybe purchases of our debt securities. But when you think about it that way, if we make it smaller, maybe it'll slow our bad behavior because it makes it a bit easy to continue to operate in a deficit world. Gang, back to you.
Okay, thank you, Rick. Steve Leisman is at the table doing a little math. What do you think,
What
Professor?
Rick just said is what most economists agree with, that the way to resolve the trade deficit is to, in part, lower the federal budget deficit. It's not the other way around. Although I guess Rick's idea is perhaps you enforce some discipline. What we don't talk about, guys, is the current account surplus or the capital account surplus, which is the other side of all that trade is massive investment in the United States. They buy our treasuries, they buy our stocks, they invest in the United States. Foreign direct investment is huge. We are the great magnet for capital around the world, and the concern of a lot of people is these tariffs will reduce that flow of capital into the United States.
They're not going to. That's what I was just asking. If the dollar were to, if it were to get disorderly, we've had an overinvestment from all.
Purchasing here.
Yeah, I know. We've had an overinvestment from the rest of the world because they
Overinvestment, or that's what
a
they
very
want to
good.
do.
Can I-
It won't continue. if the
Family
dollar-
offices. Robert Frank put out his newsletter today on wealth, and he
Well, what's it
focuses
called so people can find it? Okay, sorry.
Put me on the message and put me on the. But in it, he points
Frankly
out.
speaking.
Right.
In it, he points out that family offices, which have always overinvested in the United States, even the ones that are foreign-based, have pulled back in their investments in the United States to the tune of about 10% over the last several months alone. Now, I don't know if that's a longer-term issue. He points that out too. How up to date are the FDI numbers, the foreign direct investment numbers, and when would we see something like that?
I think they're probably pretty lagged. That's the problem.
Yeah.
There's another thing which I'm working on for next week, which you've never heard of. $8 trillion of U.S. exports that nobody's ever heard of, that dwarf the exports. It's called U.S. foreign affiliate sales. The way American businesses have done business for decades. They go over there and they set up shop and they set up manufacturing. And that is potentially a danger here. Let me just make one more point. I know Rick wants in here, but
he does.
We are the largest exporter of corn in the world. He said we can't sell our corn. We're the largest exporter. The other thing is, I'm sorry, Mr. Secretary, a VAT is not a tariff, is not a tax. When GM sends a car over to Europe, they pay a VAT. When BMW sells a car in Europe, they pay the same VAT. The VAT is not the reason that we are not competitive in Europe. Now, it is true that when they send a car here, the VAT is rebated. That's a different story that perhaps make them more competitive here. But we are not competitive in Europe because of the VAT. Period. End of story.
It is a tax, though. Value-added tax is what it's.
But it's the same tax that BMW pays.
Yeah.
Now, I guess there's a little
It's a
bit of
sales
wedge
tax,
there.
essentially?
What's that?
Like a sales tax.
It's a sales tax. So we charge them a sales tax of 5% or 4% or 8% in New York. They charge 20%. That's how they fund their government. Do we have a right to say, by the way, whatever happened to the free market and all the decisions that have been made by companies about where and how to optimize their supply chains? The complaint about the Harris and the Biden administration was the intrusion.
Corporations. They don't have an allegiance to the U.S. That's the heart of the problem in Trump's mind. Is the elite multinational corporations no borders. The money goes everywhere, and the free trade globalism has been in reverse really since COVID. The problem is that the direction of that reversal was wrong. And maybe if Trump had a second term instead of Biden, instead of Vietnam and some of the alternate places that were extracted from China during COVID, maybe it would have come to the U.S. Maybe that would have helped Andrew's question of how long it's going to take for onshoring to occur. I'll tell you what, the structural issues of jiggering trade are not going to be easy. But in the end, once again, it comes to, I was doing Santelli exchanges on the end of globalism 10 years ago. The handwriting has been on the wall. Ultimately, if you live in the U.S. or you live in Europe or you live in China, ultimately what goes on at home is very important. And after World War II, when the United States was way up here economically and everybody else was in melting ruins, we created this structure. And the structure has outlived its usefulness in many ways. And to try to tweak
because
this,
we're the richest
no
country in the
shuts
world,
down
Rick,
for maintenance is not going to be. Wait, what did you say?
Because we're the richest
Say it
country
again.
in the world. We came out of the pandemic faster. We had better growth. We are the most dynamic economy in the world.
Of money, and much of that money we spent was in debt. The debt was financed by foreigners.
Some of that money.
They enabled us, just like the Fed enabled us with those capital accounts. I'm saying there is a dark side to the trade deficits. In a different way, I think, than Trump looks at it. I look at it like it does underscore and underpin a type of financial behavior that in the long term hurts us.
41% of the S&P 500 firms' revenues come from abroad. That's according to Apollo. So if you're going to restructure that, it is going to, just to your point about them maybe not having allegiances necessarily to the United States, it is going to restructure that in a very large way if these tariffs stay in place.
And the real question is what happens, by the way, to their business in all those other countries.
Yeah, exactly.
I mean, that's the thing that I think is sort of being missed in this. Forget about the retaliatory tariffs. I just think that if there are consumers who are going to say we don't want to do business with U.S. businesses, and I think with the services companies specifically, it gets even
We're the
tougher.
consumers of the world. That's the one thing Howard Lutnick was correct about, in my opinion. We're the consumers of the world. Okay? If people want to make stuff and they don't want to sell it to us, woe be to them.
I'm confused because if people make a decision to buy something from abroad, isn't that part of the freedom and independence people have?
They don't make
to
that
buy
decision.
things?
They make the decision to buy what's cheap, and that's the problem. Okay,
That's
we're
a
gonna
problem.
make it so it's not artificially cheap anymore. Every day, Kmart low prices had a dark side for the American economy.
No, but here's my question, Rick. What about all of the folks in China and India and other places who've been buying Nikes? Who've been buying Starbucks, who've been going to McDonald's.
Okay, why does Nike sell a pair of gym shoes for $200 and they have to make it in China where they pay people peanuts? It doesn't make sense from the get-go.
Wait, now you care about Chinese workers, Rick?
Build
Now
them
you
over here. Okay?
Now
we
you
have
care about the
unions,
Chinese
we have
worker.
people that make more money, we have benefits, we cost more to make stuff, but there's a reason for that.
Because people bring they buy something cheap and they have money to buy other things. That's how it works, Rick, over time. You want us to go back to the horse and buggy?
And that's why Trump's reversing it, because we have $37 trillion worth of how it works.
I'm confused, Rick. Is your problem the deficit or is your problem the trade deficit?
It's not easy to confuse. If we didn't have trade surpluses and we didn't have a Fed that left rates at zero, maybe the pain of overspending would have hit home much sooner.
Rick, if you don't have the trade deficit, then you won't, and everything gets manufactured here, you're not going to collect the revenue that you want, I think, from those tariffs.
I think Trump would be happy with that.
I think the people who used to talk about economic freedom are suddenly talking about something a little different. That there was a time when
I've never
people were
talked about
like,
economic freedom. I talked about I've never been a fan of globalism. Never.
but you're
Never
a fan
been
of the government
globalism.
telling us where and how we can buy and how much we ought to pay for it and what kind of
No,
industries
I'm not.
business
No,
ought to
I'm
do
not.
and
But
where Apple ought to source it. That's what you're in
bus
favor
pulled
of,
out
Rick.
of the station during FDR, pal.
What was that? Wait, you're going back to the 30s?
You know what? All of the highfalutin government telling us what to do, that's been around a lot longer than Trump's been in politics.
So Trump is just continuing and making it worse, Rick? Is that what you're saying?
No. Maybe what he's doing is lighting the firecracker that'll finally end it with a big pop.
But with more government intrusion into the decision-making of both consumers and businesses.
You know what? Let people buy things made in America, period.
Okay. Rick, thank you. Steve, thank you. We got a lot more coming up in just a moment. I want to bring in Barry Bannister, Chief Equity Strategist at Stifel. Good morning to you. I'll just ask you straight up, what do you do on a morning like this?
Well, I wouldn't panic, and I certainly wouldn't hand-wring or complain, and I'm seeing a lot of that these days. I think we have to analyze it as a stagflationary shock, something that we expected in a somewhat milder form this year. We thought that growth would just slow and inflation would prove sticky. Now it looks like growth will be a little bit weaker than just slowing, and inflation would be a little bit higher depending on the permanency of the tariff arrangements.
You look at the market, Dow down right now, it opened off about 1,250 points or so. Do you say to yourself that there's an opportunity to buy something on a day like this? Or you say this is a falling knife that's not worth catching?
Well, when you look at the March 13th lows, we're just retracing back to those. We did think there would be a tradable rally at the low. In fact, I was on your show, or on your network with John Fort at 4 o'clock the afternoon of the 13th and said we had a tradable rally. We did. Lasted about a week until that auto tariff appetizer, and then a couple weeks ago it began to fade back down. A 10% correction is just a sign of a slowdown. If you go to the high teens, like late 2018 or early 2016, then you're discounting a significant slowdown, but not a recession. And then, of course, the high 4,000s for the S&P 500, that would be a 20% drop, and that would be a recession. I don't think we're going to have a recession. I think we're just going to hit consumption a little bit, and we're going to have a little more inflation than we expected. The labor market is holding up just fine, and I expect a good number tomorrow. So I would not overreact to this. I would be looking for the sort of what we call the defensive value. These are companies like Staples Healthcare, waste handling, utilities, on any pullback.
So Barry, I've talked you up in the past because you're right in when a lot of people are negative in 2022, 2023, 2024. And the guy, Krzyzewski, your guy, Ron loved you then. He was in recently, and I don't think he's going to let you say what you want to say, but you've been kind of bearish since the beginning of this year, long before any of this actually happened. Are you more bearish now because of this, or is it basically what you said? Growth might be a little worse than we thought, and inflation might be a little hotter than we thought. But have you moved? Have you gotten? Have your targets come down from where they used to be? Because they are. I think you were already one of the most negative on the street.
When we entered 2025, we had done our full year outlook like the regular sell side dog and pony show, where you publish an outlook. And we had a 5,500 S&P 500 target for the year. The street was around 6,700, and I haven't changed that and don't really have any plans to change that for a target price. What we're seeing is that yields, particularly the real yield, we like to look at the 10-year Treasury inflation protected security or TIPS yield. That's the benchmark for the risk-free rate that equities have to compare themselves to. As that comes down, it insulates some of the downside for the S&P 500. You can have a lower PE and still have a lower risk-free alternative, and therefore the market's in somewhat stasis. But 5,500 is our target.
Yeah, I can see Ron now when he sees you. He's like, "There's my guy." He's like, glad, pat you on the back. You were at 5,500 and the street was at 67, and we're not far away from what you said. And that was a non-consensus call at the beginning of the year when you made that.
Yeah, we're always trying to look forward, and right now our main focus is actually not on the inflation that everyone's talking about. It'll be on the GDP effects. The top 10% of this country spends 50% of the money. That's part of the problem with why we have populism, is that we are a highly wealth-skewed country, and we have hollowed out a lot of middle America. And that, you talk about the trade deficit having a capital account surplus. Well, cheap capital benefits the rich guys. And, we need to understand that populism is here and it's real. 9 years ago, by the way, Donald Trump was asked about the electoral candidates he was running against, and he said, "I've got more in common with Bernie than I do Hillary." And, populism can be left or right wing, but if you think of it as a horseshoe, the left and the right at the top of the horseshoe, but they bend inward. There's more in common with the populism and flattening out the wealth disparities than you would realize.
That's interesting.
Trump's a Bernie bro. That I didn't.
Could be a Bernie bro.
That I didn't
The
realize.
populism. Yeah.
I don't know where to go with that. Barry, I want to thank you. Appreciate it very, very much. We'll see where all this goes. You bet.
Thank you.
5,500. It's not possible. It's not. When you run a firm and it makes its money with all your brokers selling stocks to people, it's like your main guy has a 5,500. It's like, Barry, keep that quiet until it comes out. Then you're like the
Then
star.
you're like, okay, go.
Yeah.
Right. Senate Republicans obviously have unveiled their budget plan that would allow about $5 trillion in tax cuts as the House and Senate try to get on the same page to push the president's agenda forward. House Budget Committee Chairman Jody Arrington says that the Senate's plan is fiscally irresponsible. The Budget Committee Chairman Jody Arrington joins us right now. And Mr. Chairman, if you will, let's talk about tariffs before we get to the budget, because as important as the budget is, it's tariffs that are running the day this morning. We're looking at these huge sell-offs in the markets this morning, and trying to get a feel for what Republicans in Congress think of all of these tariffs, what that might mean. S&P futures down by about 212 points. The Nasdaq's down even more on a percentage basis this morning. Where do you stand with these tariffs? What do you think it will mean?
I think it will mean, and I sure hope it will mean, a reset in the global trade order where American products and manufacturers and workers are not treated unfairly. You know, it'd be a shame to watch the Houston Cougars take on the Duke Blue Devils with only 2 players on the court, or if Duke got 3 points for every layup, or if they didn't have to dribble the ball, it wouldn't be fun to watch it. Duke would win, and Duke would be the dominant force in basketball. Well, we're not the dominant force in trade, and we've been taken advantage of. And all the president is saying at the core is we need to level the playing field for our manufacturers and producers and stop suppressing wages with this unfair trade order that exists today. It will help build back the manufacturing base, which I think is good for the country and good for the economy. And as we discovered in spades during COVID, we are dependent on other countries for important products like drugs, or Taiwan with computer chips that run everything. So there's a national security implication here. So I'm behind the president 100%. There'll be disruption and pain on the front end. We saw that in the first term, but he was successful then. He'll be successful now, and Americans will win.
In the first term, he did put tariffs on China, 10 and then eventually 20% or some of the tariffs that we saw.
That's right.
You've been in favor of doing the same thing. Obviously, the tariffs that we put on were dealt with other countries by them coming after politically, saying that they would not import different types of grain or other farming goods. You were in favor of taking the tariff money that was raised and giving that back to the farmers at the time. The difference is this is not another 10 or even 20%. In the case of China, you're talking about 54%. In the case of Vietnam, more than 47% on some of these tariffs that are out there. That's a much bigger number than people were anticipating. Senator Rand Paul, Republican from Kentucky, said that he's opposed to this. He remembers when Republicans were opposed to new taxes and that these are new taxes. He thinks that this is bad for the country. Because of the size of the tariffs, because of what this means if it gets into a protracted trade war, do you have concerns about what could potentially happen around the edges here?
No, I'm not as concerned. I think there is disruption. The president has been very transparent about that. We've gone too long with the current scheme for there not to be some initial pain, but I think the economy will benefit tremendously, as will, again, workers, manufacturers, and my farmers and ranchers in West Texas, who, by the way, support this president on this trade battle. They want their grandkids to be able to farm and not be put out of business by subsidized producers in China, for example. So they saw him support them in their time of need when there was pain on the front end through market facilitation payments. So I think taking some of that revenue from tariffs and plowing them in for tariff relief, I think is a wise move to keep them in the game so the president can bring to heel China and everybody
Chairman,
else
if
so
we
that we
could
can
just
get to a level playing field.
If we could save this tape,
Go ahead.
what's a fair time period to measure whether this is a success or failure? And if we looked out 12 months, 18 months, 2 years, if the economy is struggling 2 years from now, a year from now, in part because businesses are not bringing all that manufacturing back or investing, what is the measure and what's the time period do you think that's fair? This is a great experiment, right?
Well, I would tell you this. I don't want to experiment, Andrew, with a situation or scenario where we need other countries to feed our families, because that's how it plays out in the long run. So if you think it's bad to be dependent on drug making or chip making, wait until we need to beg another country to feed our families. That's just one example. So I would say the president can't blink, and he hasn't. And he's been transparent, and he campaigned on it, and he's effectively doing what he did in the first term successfully. So I think there's too much hand-wringing, as the gentleman said before, on something that is long overdue and will be successful in the long run. And so that's why I'm supportive of him.
The gentleman before also said he's expecting a stagflationary shock because of what we just saw, but we'll see how this plays out. Chairman, let's talk about why you came on today, and that's to talk about the budget that's been unveiled by the Republicans in the Senate, or by the Senate. The Senate is now looking at a deal that would have $5 trillion in tax cuts. I know you have some problems with that, and there are many House Republicans who have problems with that. How do you reconcile the two houses, the two chambers, on how you get this together?
Yeah, Becky, I feel like a Secret Service agent here, but I've got to hold this up, so bear with me.
Sure.
Look, we have a completely unsustainable fiscal trajectory that will end very badly, and by the way, would undermine everything that we've been talking about if we have a sovereign debt crisis. We have World War levels of debt. We have $2 trillion deficits that will double in the next 10 years. And as we've talked about before, our interest just to service the debt is more than we're spending on defense and more than we're paying out in Medicare benefits. So we have to intervene now, or we will not only turn the tables over in this economy and reset the world order, but we will destroy our kids' future. So if we are going to spend on tax cuts, which I think are good and necessary for economic growth, if we're going to spend on border and defense, we need to also commensurately offset the impact to the debt and bend the curve on mandatory spending through entitlement reforms so that we put the country on a sustainable path. And that didn't happen, unfortunately, in the Senate's bill. They were very specific and clear about how they want to spend money, but they had like $4 billion in enforceable spending reductions. We actually borrow as a nation more than that in one day. So at the end of the day,
Mr. Chairman, we're up against the end of the
budget
show.
resolution.
Yeah.
Okay.
So I want to thank you very much for your time. We hope you'll come back and talk more about the budget deal, but we appreciate your time on the tariff.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Global sell-off now in motion as markets respond to this White House tariff announcement. S&P looks to revisit those September lows, and we're watching for countermeasures. A possible three-handle this morning on the 10-year. We'll see. Let's begin, of course, with the global market sell-off a day after the president's announcement, calling for a new 10% across-the-board levy on all imported goods, along with higher tariffs at varying levels for about 60 countries. Here's the president explaining his decision in the Rose Garden yesterday.
In the face of unrelenting economic warfare, the United States can no longer continue with a policy of unilateral economic surrender. We cannot pay the deficits of Canada, Mexico, and so many other countries.
Jim, walk us through your mindset today.
Okay, well, I think that the market's going to, there's always money to go somewhere. I think the money's going to go heavily to the American electric powers, the Entergies, utilities, to the companies that have pricing power like a Procter, J&J, and it'll flee the areas where it's so hard for companies to get out of areas. And I'm looking at, so I don't want to be too pejorative here, there's the luckless and the lucky. And the luckless are companies that move from China to Vietnam, China to Thailand, China to other areas where they thought they're allowed to go to, Mexico. And the post where there is indeed Nike, I don't want to be so trite as to say Nike because we see it. But David, there are some companies that are not in the crosshairs that are going down. And there's some companies that are in the crosshairs are going up. So we've got a lot of mistaken trading right now.
Mistaken trading?
Well, people are making a bet that it's like that Amazon is really hurt by this because of world trade. I mean, Amazon has pricing power. You want to figure out who has pricing power. They are winners.
Right.
And I don't know, does Nike have pricing power? I don't even know anymore.
Amazon
Does On have pricing
and
power?
Walmart. Your point is the retailers can make the people who put stuff on their shelves or their digital shelves take the hit, or at least a lot of it.
But does Best Buy have that? No. Does Foot Locker have it? I don't think so. But Costco
But we're looking at some of the big losers right now. AppLovin is in there for a different reason. Lululemon obviously is there because they source so much of their product from Vietnam.
Right, and that was luckless.
Yeah, well,
that was luckless.
I mean, stepping back for a moment, I think coming in to yesterday, the expectation was not that Vietnam would face a 45% tariff.
It was a big
and because they have eliminated many of their tariff barriers. They do have a 10% VAT, was my understanding, but the overall expectation was they would come off fairly easy, let's say.
Exactly.
And as I think our viewers know at this point, a few came off easier than had been anticipated. Canada, Mexico at least it stays at 25%, USMCA. Exempted goods
so like
remain exempted.
A Ford is not as bad.
Auto parts, so that's okay. But generally speaking, this was far worse than had been anticipated, certainly by the market, which thought, and many investors I've spoken to thought it had already baked in.
I know, and
especially given the action we saw the last couple of days, the expectations. And then you had a lot of different things going around the last few days, whether it was 10% or 20% across the board or what it might be. But calling these reciprocal is not really.
We don't use that word. We're done using that word.
We're done using that because that's just I don't want to call it a lie. It's dissembling. But give you an example about what I say the market's wrong. You have to be careful. TJX is the principal beneficiary because everyone's going to take in a lot of inventory because they're trying to get it in fast, and then they won't be able to sell everything. So then they give it to TJX. That is what I call a winner. Okay, Target has 11 brands, $1 billion. A lot of them, they were sourced all overseas. Not a winner, no pricing power. Costco, huge winner. Why? Because they have a club. The club status is to pass on anything. And then they still have and it's still going to be cheaper. So we cannot lump all these together. We lump them initially. Costco is going to be down as much as Target. But then we have to come back and say maybe Target should stay down, but Costco should go up. So there's like a secondary look at things.
Right. Citi today does upgrade both TJX and Ross.
That was a great call.
To your point. But Jim, isn't the Vietnam lesson that these goalposts move constantly? Yes. How can you make any call on any of these names today?
My people that do industry say, okay, here's what the tariffs were. They figured out what would make it so that the only place that you would want to make something is America. Wherever you go, you can't. It's like a Muhammad Ali. You can't run, you can't hide. And I think that that's the ultimate goal. And the only time it would not be is if you think the dollar's so strong that you won't, and that you'll still want to import garlic.
That is not a problem. The dollar strength is not a problem, and today Deutsche says we're starting to worry about its safe haven status.
Well, I think that's correct. I thought that was a good note.
Jim, I've heard the same argument made that these numbers were essentially set to try to really bring manufacturing back. Now, I don't know when Nike's really going to start to make sneakers in this country. I don't know when Lululemon is going to start to manufacture its clothing in this country. And on from there. I have no sense as to when that's going to be. Isn't the impact, to Carl's point, though, as well, and particularly what seems to be the lack of intellectual rigor really applied here to try to find true reciprocity, the fact that we're just going to sit here and wonder when some things are going to get rolled back, when some things are going to get exempted, when certain negotiations are going to take place between the Trump administration and particular countries, all of which will simply result in asset allocators being somewhat frozen, and key decision makers also sitting there and kind of waiting.
I think that's true. I mean, I had Flexport on. They're the biggest advisor to companies that import, and their advice today is you got to wait. Don't take any action. We don't know whether these are starting points to negotiation or whether there's no negotiation whatsoever. It's entirely possible there's no negotiation whatsoever, that they just want it to be this way, and you can either have a power, like does Apple have power? Can Apple go to Verizon and AT&T and say, listen, you still want our phones to open accounts? I don't know. I mean, look, AT&T's up today. All domestic.
Although Apple is going to be our worst Mag 7 performer today.
And what happens to the price of an iPhone when there are 54% tariffs on China, Jim?
It's bad. Look, I'm going to tell you, it's good. It's bad.
As Steve Kovac wrote last night, your $1,000 iPhone is going to be a $1,500 iPhone.
It depends. If T-Mobile says, listen, this is our chance to get share from Verizon.
Well, T-Mobile's going to take the hit here, not Apple?
No, it'll be a joint hit.
Or, I mean, again, it's hard to imagine they're going to raise the price of an iPhone 50%.
No, they're not. And you're not going to look.
All right, but then the margins of Apple are coming under pressure.
Yes.
And then the way that you anticipate what their earnings are going to be is changing.
Yes.
Okay.
And which means the stock price will go down.
Yes.
And they're not moving their manufacturing. They're not moving their manufacturing of iPhones to the United States.
Okay, and it's all a net positive. What do you want me to say? These, like I said last night.
Well,
hey, welcome to bad prices.
I'm trying to
the
listen.
Walmart White
You
House.
have sat here and said you hate free trade.
I do.
We are getting no free trade.
Well, there's two me's. There's me that is like a son of a guy whose father would come home and put his boxer shorts on and go into the bedroom, and I would say, Mommy, what's the matter? And she said, don't ask. And it would be because Champion was wiped out by China. It's like, don't ask. You're a wild turkey shot and goes to bedroom. That's what life is like. Okay?
And then
so, yes, I don't like that.
What's the other me?
The other me says, wow, we're going to get killed on some of these
You did write this morning about, does anyone know someone who lost their job at the mill? That's where your head is right now.
That's where I am.
And so your view is that the mills come back, or do we need the revenue to finance our debt? You can't have it both ways.
I think the next is the tax cut that we get, because there will be a lot of revenue, because as David said, they can't move. No, look, when the mills come back, they're made up of robots. That's just the way it is.
Well,
Nobody
that's not getting to the actual nut of the problem, is it? To sort of give back the jobs of dignity that you discussed.
No, it doesn't. But David, like I said, I said the term picaresque tradition. It's like a Ulysses. I mean, you go through all these things, but it doesn't matter. In the end, it's just a story. There is no story that is like, we're not going to in the end have lots of seamstresses. It is about saying we're done with this. You're not going to take any more factories.
But we had an economy growing at what were we at, 3%? Where were we, Carl? And we had an unemployment rate of 4%.
It's a novel.
Are we headed? I mean, listen. I'll say one thing: the 10-year is going to be 4%.
Right.
Refinancing, which we got some big ones coming up. Our interest costs will come down a little bit.
And that's why Gary Friedman's company is going to make it, because Gary was talking about how.
Because the interest costs on the debts on the debt are going to come down.
He just reported last night in the middle of this whole thing.
Do we have that sound, Bill?
Yeah, Gary.
So Gary Friedman's on the call, and apparently is notified in the middle of the call that his stock was down 25%. Yeah. Take a listen.
In this race, and I don't know, where's our stock now? I mean, I guess the stock went down, based on some of the numbers we reported, and then it got killed because of really? Okay. I just looked at the screen. I haven't looked at it. it got hit when I think the tariffs came out, and everybody can see in our 10K where we're sourcing from, so it's not a secret. We're not trying to disguise it by putting everything in an Asia bucket. So you can kind of figure it out and do the math. I think the people really that I feel worse for right now is all the manufacturers in China or people who are invested there. Like that, move manufacturing, move their lives.
Well, to your initial point.
Yeah. And now he does talk about something that is kind of ironic, and anyone who's in the furniture business knows that the worst thing you could possibly have is inventory, too much inventory. But last night, he turned that into a positive. He said, listen, we happen to have a huge amount of inventory. Now, there are a lot of people who say, listen, he bought back a lot of stock with debt, so therefore he's, quote, in trouble. I don't know.
Right. Do I buy my Nike sneakers now because they're emptying out inventory before the price goes up?
No, you buy them at TJX. That's my point.
What about my
3 months from now,
do
you
I
buy
an
them at
iPhone
TJX
right now before the price goes? Yes.
Well,
yes.
Yes, you do that. You buy
Yes.
an iPhone. Yes. And you buy a car. You buy a car because the price
Buy a car
really,
now.
Yeah,
Because
absolutely.
Q1 auto sales were like at a multi-year high. We're running almost 18 million annual.
March was the high until we see April, and April's going to be probably the biggest month.
And then we're
of
just
our
going to
history.
go.
And then May is going to be a huge month, and then in June, go buy yourself a car, and you're a bozo.
So
use a nice
it
term.
doesn't sound like you think a Q2 negative GDP is out of the question.
Well, Q2 it depends on where we are in terms of the drop off.
Right.
But autos, you gotta go buy a car now. I mean, they're gonna. It's a great time to buy a car. Now, used car prices will spike. It's very exciting.
There is this larger, takeaway. It was last night, an hour or so after the event, I started to get texts like, wait, this formula really is just your trade deficit with us over what your import number or what we import from you divided by 2.
Well, that's
now
what's
the
really,
White House has put up a much more complicated looking formula, but basically it does the same thing. Some of these symbols, if we can take a look at them, it really is just price elasticity of import demands at 4 and elasticity of import prices with respect to tariffs is 0.25. It cancels each other out, and then you end up with the same basic thing, which is, what's your trade deficit? How much do we import from you?
Right there.
That's the divisor, and we're off to the races. We'll cut it in half, and that's what they've done here. All right, Deutsche Bank
It was
says.
a life of pie.
Yeah, Deutsche Bank says we worry this risks lowering the policy credibility of the administration. The market may question the extent to which a sufficiently structured planning process for major economic decisions is taking place. After all, this is the biggest trade policy shift for the U.S. from the U.S. in a century.
Well, didn't Sawicki? I thought he had the best. James Sawicki.
Yes.
It's just great.
Yeah,
Just
he said the same thing.
Yeah,
My
but I'm
point
saying
is-
I did not use that equation that made me drop. That's how I got out
Do you
of
not agree with Deutsche Bank at all that this is a larger risk?
Well, no, it's just they don't want you to. They want you to come back here, so they just made it so that wherever you go, is
It's
bad.
impossible.
Right, but and Renmac made a similar point. Brazil is going to play a lower rate than South Korea, with whom we have a free trade agreement.
Exactly.
So how do you negotiate in good faith?
There's no negotiations. This is it.
But everybody's going to think there are going to.
But it's not.
You can't. This is
it's not
unsustainable, and there are going to be negotiations.
Oh, you mean this is the starting point?
Yes,
Pat?
and
Is that
that's
what you're
why
using?
I think capital flows are certainly. I mean, they're not coming. They're not coming here for a while.
Right.
Am I wrong?
No,
Maybe. I don't know.
No. Initially, maybe they do. I don't know. Could you put up that? We should put up that equation again.
The formula?
Yeah, because
That's on the USTR update.
Yeah, because I took philosophy and I got that. I walked in and said, I'm dropping this class.
I don't blame you.
Right? No, look, it's just, let's just say what this is about. It's about coerce to get back to the U.S.
There it is.
And that's all.
And what that says a market down 4%. That's what that
That's
says.
hilarious. That really is hilarious. Did they really think that why? They think we're all liberal arts idiots, I guess.
To David's point, futures notably weak. Actually, markets weak all around the world. We're going to talk about impact for the Fed and what happens as we pivot now, perhaps to a conversation about tax cuts and certainly jobs tomorrow. More Squawk of the Street in a moment.
go with timber tax.
Welcome back. China is now responding to the president's tariff announcement. Let's get to Eunice Yoon in Beijing. Hi, Eunice.
Hey, the effective tariff rate, as you guys were talking about with China, is actually around 70%. So this is how it all stacks up. After President Trump had taken office, he hit China with 2 rounds of 10% tariffs. That was to pressure China on fentanyl. Now we have this 34%, and it reflects the universal baseline of 10% plus 24%, which is specific to China. So that 10% goes into effect on April 5th, and then the higher one on April 9th. So these tariffs come on top of the tariffs that President Trump had put in place during his first term. So those range from 10 to 25%. And then separately to that, President Trump had announced that he was going to close a trade loophole that has benefited Chinese e-retailers such as Shein and Temu. So they have been able to send a lot of goods duty-free that way. China today announced that it is going to take resolute countermeasures. Those are their words. And based on what we've seen with the previous 2 rounds, the expectation is that not only are they going to hit back with counter tariffs, but also with an expanded retaliation toolbox. So this includes potential export controls for more critical minerals, as well as punishing individual American companies. Macquarie expects that Beijing is going to go that route when it comes to pushing a broader effort, which is to support Chinese suppliers to push the cost of the tariffs onto their U.S. customers. If you guys remember, Walmart executives were summoned by Beijing and chastised for putting more pressure onto Chinese suppliers. And then one of the other big talking points here is whether or not Beijing is going to make a larger than expected devaluation of the renminbi in order to try to help some of these Chinese exporters. But at the end of the day, still very unclear if China will be able to do enough to really offset a 70% tariff. And so there have been several economists here, as well as overseas, saying that the economy is likely going to see a hit to growth anywhere between 1 to 2%. A city said 2.4% this year. Guys?
Okay, so Eunice, to go back to this notion of Walmart, is there anyone who actually would have so many people who work in China that they actually have some pricing power? And I mention this because Apple's done so much in this country to be able to make it so that they're going to have new jobs. But I would love to hear that you might say, listen, Apple is maybe in the most favored nation status because they've done so much to advance the middle class in China. Is it ever like that, or are they just the one that gets hurt the most?
Oh, I'm really sorry, Jim. Your audio was cutting in and out. Do you mind asking that question again? I'm sorry.
The party must love that question.
Yeah,
I was asking about, is there anyone who's a most favored nation status? For instance, Apple's done a great deal to raise the middle class in China. They do buy Apple for China. Is there any way that maybe they just say, you know what, we're going to actually come to the table and say some of your great companies, we're not going to have her? Anything like that could happen?
Jim, what I heard was, I think you asking if there was any effort that China would actually come to the table.
China.
And I think that at this point, it depends on what that would actually look like. I think that from the Chinese perspective, there's definitely a desire to continue to work with the
China.
U.S. The U.S. is a huge market for a lot of companies. This is going to have a big impact on the Chinese economy. So it's within the Chinese government's interest to come to the table. But exactly how that looks is still unknown, because we've talked a lot about how President Xi and President Trump, maybe there'd be some conversation. But one thing that's really important to note is that President Xi is not going to want to look as though he's been pressured and bullied by President Trump or by the Americans or the West to do something that he doesn't want to do. So that's going to be a really big factor in exactly how China does come to the table.
Yeah, we're gonna keep our eyes certainly on any potential FX adjustment, Eunice. Thank you for that, Eunice Yoon in Beijing. Opening bell coming up in about 7 minutes. Don't go away.
China.
Good morning, retail traders. I'm home, Jake. Camille. I'm here. We are gonna have some fun today. Good morning, retail traders. Jim, you're so optimistic. That's right, Chris. I'm full of energy. I bought eggs for $2 and what? 99 cents for 12. Thank you, Donald Trump. Is everybody in a good mood, Randy? Are you ready? Michelle? Link? Chris? Magnificent? Punk? Rob? Oh, we got a Mr. Shifty here. S.R. and Sparks. I gotta go get my coffee that I just stuck in the microwave. Oh, this is funny. This guy here. A retard finder. I gotta watch that video. That should be a fun one. Retard finder. I can't beat that one. Well, American Association, should be a real fun day today. Buy the dip and watch them rip.
You've got to expect the United States of American market to do extremely, extremely well. I understand the reordering of the rest of the world's markets, but they have been
aging in the co
of the trading policy,
goodbye,
the markets policy, all the policies of the United States of America were designed to make you rich and make us poor.
All right, that was, of course, Commerce Secretary joining us earlier on Squawk Box right here on CNBC, talking about the markets. Obviously hearing some different things in terms of capital flows than perhaps he is at this point or hoping for. Let's get to a mad dash. As you might expect, it centers on those companies, in fact, that will get hurt, initially at least, a lot as a result of this increase in tariffs in particular places where shoes are manufactured.
Right, and I see Nike go down a lot, and I just want people to know that there's really, this is another one you can rub, you can't hide, on 90% of Vietnam. And Vietnam is, again, when people say, as
Protein Palace.
That's the bottom.
Right.
People move to Vietnam.
Let me show you what I got today, Punk.
Deckers is hurt. I don't know.
Deckers is 64. We have it at CNBC is 64.
Add this to your diet.
20% China.
Vietnam was the one that people just...
Very similar move, Jim, and Deckers as well. About 16, 17%. We can take a look.
The $136 billion that is we do with Vietnam, and I've got to tell you, that's turned out to be the one that people thought if we go to Vietnam we're safe, and it was just dead wrong. It was the most wrong.
I remember when Carl went to Vietnam during the first Trump administration.
Yeah, they were doing all the right things. We took note, though, that label washing's a thing, and it's easy to move goods through a third country to try to avoid some of these labels. They obviously are intent on blocking that.
They sure are. They sure are.
By the way,
what about the Mexico manufacturing? You know, China putting factories in Mexico.
Well,
that wouldn't seem to be impacted in part, though, by...
No, they're getting away with it right now. I don't think they're going to get away with it.
So you think there'll be more of this?
There will.
Because that's only saying 20...
Mexican parts is really a very big flashpoint for the American companies, and they don't know the answer. Even the top people don't know the answer about the Mexican parts and how it's going to play out. Very interesting.
Meantime, we're waiting for Europe's response. The German Vice Chancellor today says last night's decision is comparable to the war of aggression.
Let's everybody give their high five and love to Punk for losing 100 pounds in a short period of time. I bet you that makes him feel real good. Healthy mind makes good money. Changes your whole mood on everything. We just run to the 200 SMA this morning on the SPY. I didn't want to see it that early. Listen a minute to go get my coffee. So let's see if we can get a pullback somewhere in this pivot point area. And see if we can hold that. If we hold that, that's, woo, boy. Or a 1-2 freebits. We could get a 1-2 freebie. I'll be right back. Get my pizza. I'll get my pizza. I just had an ant in the microwave and it survived it for 30 seconds. He wasn't too happy. So if anybody ever heard of that before, I had an ant in my microwave. Thought I had them all killed by now. Not my aunt, but a aunt. Probably nobody's never heard of that before. I haven't. Well, there's the big spike, ready to open. I'm going to still stick with my support here, but we might make the new one here at 200 EMAs and SMA. Prepare ye in the name of the Lord. A dip like this, you want to get in here and... Okay. Radioactive ants. Ant survived the microwave for 30 seconds. That was your punishment. Shut up, Kramer. I would rather be an ant. So I'm looking at the 552s. And we got double top coming up here. And this is probably where they're going to jump in. I mean, resistance. We just hit resistance. Should have got them there. What was that 20-cent scalp? Damn it. They're chasing it this morning. Missed that. 549.32. On the ready, set, go. And pulled back to the 200 SMA or the VWAP. We're going to raise this up above the VWAP. I'm teaching you a strategy. Pay attention. Jim, don't you talk to me like that, punk. Woo! Oh, BBAI did not drop a bit last night. Okay, get ready. We're going to see if this thing's going to live up to its potential. The 552s. Prepare ye in the name of the Lord. Today is April. Third. We're at the VWAP. Strike. 552 at 144. This is kind of risky right here. The crowd's going wild at the sports arena. We're at 552. 152. 5. I'm not sure. There's 58. 64. Take profit. $165. Take profit. It could break out. There's my first scalp of the day. Medicals are coming in. So I got my first scalp in already. Them fast scalps, you can't sit around and, read it first. Because we've not developed a pattern yet. You know what I'm saying? Say yes. Now we're coming back down again. And this will determine if we're going to stay bullish today or if we're going to come back and hit the 200. I'd rather take it at the 200. If I was to jump in, I'd jump in now small and then add a lot at the 200. If that was me. But I want to be patient here. I'm going to walk into the kitchen and I'm going to see if I can cook me another ant. See if this one can stand 60 minutes. Yes, I am a serial killer of ants. If you got a problem with that, report me. Did you look at Medicals? There we are. Get ready, folks. Prepare ye in the name of the Lord. As we approach the 200 here. $124. Damn, you're right, Jim. Randy. 124, baby. Yes, oh yes. I called the VWAP and the 200 SMA. Whoa, get out of my way. How'd you do that? I just do it. I do it. I want to watch that retard video, so I don't want to change that. Retard indicator.
Just do it. Do it.
We're down to 120. Could have got it at 120, maybe. Cost is ripping. Won't you know all these lies that the liberals are saying right now? They need to be fact-checked. They didn't whine or gripe when their inflation went up 30, 40%, so screw them. They loved it. They loved gas at $4 a gallon. This thing's kind of being a little difficult right now for some reason. I should have had plenty of opportunity to sell it, and I didn't. So let's see here. If we hold the 200. I want to hold it. I don't want to come down farther, that's for sure. If I'm having second thoughts, I'd get out of this trade, but I'm even. I'm just going to be patient. Well, this wears on me. Let's see here. $1.14. 1.14. I got 124 and 114. I need to check my blood pressure. I now have 20 of them. I'm even right now. Get my coffee real fast. Come on, you beach. There we go. Break the VWAP. Now, see, I've got 20 of these, and I hit the VWAP, so that's a resistance. I got a two-headed snake up here. Okay, get ready. 131. Say what? I took my profit at 128. I don't mess around. I ain't no clown. Today will be the song of gospel. I'll pick a perfect gospel song out here a little bit later. Bringing in the sheep. I don't mess around. And I'm just gonna hold me a few more. We would appreciate it if you broke out, please, and give me the rest of my profit. Does anybody see the flag? We have kind of like an ascending triangle set up with a very steep vertical bottom. I'm just talking smack, you know what I'm saying? 137. Woo! He's not nuts, he's just crazy. Punk, am I a good moderator or what? The best. You know, I was thinking that. I want everybody to love each other in this room. Bite your tongue if you have to. Something about trading kind of pulls the ego out of people. You can find out a lot about a person, and you don't even have to look at their face. Just look at their name. Well, I'm fairly excited about that trade. And I did that with broken glasses. Prepare ye in the name of the Lord. Is it going to come down and hit the bottom and be a very strong buy? Now, you remember, you're dealing with a bunch of imbeciles. The progressive liberals that are supposed to be your mentor, but you hardly ever can understand them. I'm talking about the fat cats on CNBC. They don't give a crap how much we've been cheated for the last 50 years, 40 years. As long as that government keeps printing that dollar for them, see? They got themselves in a wad because their money chain has kind of come to a halt. Just imagine if you were a rummage sale or a garage, or not a garage sale, but you went to an auction and you saw something on sale for like a, let's just say a basketball, and you're going to pick it up for $5. So you put it in your garage sale. Are you going to go ahead and put it in there for $3? Are you going to sell it at $3, or are you going to sell it at $7 or $8? So you got countries that have been taking full advantage of our generosity for years. Okay, get ready. If we sell it to them, you know, I can understand maybe a 5% tariff or a 2.5, but not no 40 or 50 or 60%. And we only take 2% from them, and they take 30 or 40, and they're not manufacturing the goods. Okay, we're at the support level here. Now I'm going to raise this thing up to 550. We're now looking at the 550s at $1.23. Get ready. Get ready. 118, 119. I got it. Washboardjim now is at 119. Okay, he's getting ready. It's like me going, I went over yesterday to look for glasses. One place wanted to charge me $950. Another place quoted me $750, and when I got in the store, they kind of back, you know, they didn't really work their pitch on me very well, so I left them. Was I going to go across the street where I bought the cheap glasses the first time? I did, and I couldn't get nobody to talk to me. So I made a fourth decision and go to Lens Crafters, and I got 40% off. And who did I buy it from? The guy that wanted to sell it to me for $950, or the 40% off? And then they gave me, threw in another 50. Okay, we're at 147. Oh man, I'm tearing it up. You're up like this, Don't look back. Don't look back. Out at 150. Today's a money-making day, man. I'm telling you, I've been here before. When the market's down 1,000 points. What, are you kidding me? Don't come in scared. You're welcome, franchise. Now we're at the bottom of the channel. So this is 1, 2 bits, 3 bits, 4. We're going to hold for, oh, look at that. Man, this is nothing but a gift. $1.14. If you can count to 4, you can make a lot more. There you are. You're up 134 bucks, $1.34. Sell it. Don't be shy. Now watch the tape. Keep an eye on the level 2, which I don't use as much as I used to. When the tape starts to speed up, there's 130. Hello? Jim, I'm in that trade you just called out. And can you tell me where resistance is? And I said, well, it's going to be the 200 SMA on the 1 minute time frame, or the VWAP. Now we're coming down and retesting the number 4. Yeah, but Jim Cramer said to be scared. I said, don't listen to him. He's nothing but a bald-headed fool. Today's pizza crust will be made out of almond flour. Okay, we need to hold this position right here. We got the 4th candle down on the body. Okay, we got a double bottom here. Don't be scared. We want to hold this double bottom. $114.89. I didn't get it. There's 90. $114.90. We got a triple bottom. Like and after this, I'm going to prepare my pizza. Triple bottom, baby. I don't mean maybe. And we need a breakout, not a shakeout. No. Oh, come on, man. I gotta get me a new service or a new phone. What we want here is a breakout. Jack. If I was a news reporter, I I couldn't be biased like these CNBC squawk crap.
Some of this tariff reaction play out, and it comes in the next couple months.
It looks like a report for steepeners to me. I'm not sure why the Fed wouldn't feel comfortable. There's a strong argument that they could be cutting enough already based on where the rate is compared to the actual economic growth. So there's a real case to be
So
made.
far,
also
it ain't
too.
working.
A bunch of that housing data that's lagging is going to bring down a lot of metrics going forward. So especially if I think Powell looks at the bond. I think Powell will agree with me, Frank, is what I'm saying. I think Powell will look at the bond market and he's going to go, the bond market thinks tariffs are deflationary. And I don't know why we would think otherwise. I mean, that's kind of the fear, is that this is going to cause global economies to all slow down together.
Yeah, and that's where this uncertainty's gone in the market, right? It's gone away from the announcement, from the up and down. Are we putting out tariffs? Are we bringing them back? Are they going to be, harsher than expected? That uncertainty is largely gone now. Now we've moved to, what sort of reaction we're going to see from these tariffs. Are we going to see that economy slow down rapidly? We're going to see inflation spike because of that. Is it going to be beyond transitory? That's the big question mark. We're seeing this in the market. There's no doubt about that. But we're seeing from companies, you think especially if
anybody in this trade,
your footwear companies, some of your tech companies that have these strong ties outside the U.S. for both manufacturing, sourcing material, whatever it might be. The impacts are there, and it's potentially could be a big issue for not only those economies but ours. So I'm
gonna still stay in it.
To an extent, I think we're going to have to continue.
But I got to be concerned.
We're going to see the Fed make a quick decision and start announcing things that we don't expect over the next couple of months. But certainly, this puts them in a position where action may need to be taken.
Okay. This is going to be very interesting to see how he strikes a tone. We're going to hear from JP on Friday.
Is anybody in it?
So,
yeah.
I mean, right on cue. Let's see what he can do. Be interesting to see. I mean, he's got to have a take on this. So, no
Which
more
one do you
kinda
got?
dodging it. We're going to have to see some math. Now that we got numbers and everybody on Wall Street's trying to run the math, I'm pretty sure the Fed should be running the math too. So they should have some clearer answer. All right. Appreciate that, Jeff Pierce. We're going to back away here from the macro stuff and the intraday. Well, we are breaking down a new low, so that was kind of a pretty easy call when we saw the bond market break out to new highs. Caroline Woods joining us. Is there any deal appetite in this world, Caroline? I know there's been talk about TikTok, so I'm thinking more like TikTok, watch out for this market. TikTok!
Really need to start to reverse right
The
here.
clock is ticking, of course. The Saturday deadline is fast approaching. And from all the reporting that we're seeing and hearing, there's no shortage of interest for TikTok US. I will say Amazon, we know, threw its hat in the ring at the last minute yesterday, according to that New York Times report. And then the White House confirmed that report that Amazon submitted a bid.
Ooh, Amazon submitted a bid for TikTok.
As you can see here, they're down 7.5%, likely on that tariff news. Third worst performer in the Mag 7 today, behind Apple and Meta. But Citi is actually out with a note recommending to take advantage of post-tariff weakness in Amazon, and actually highlights the potential synergies should Amazon succeed in that bid to acquire TikTok US.
Well,
TikTok Shop, which
shit.
generated $9 billion of US gross merchandise volume in 2024. And also TikTok's strength across influencers could really accelerate Amazon's product discovery efforts. They also see multiple advertising benefits, given TikTok's 170 million US monthly active users who spend 70 minutes plus per day on the site. So
70 minutes?
Yeah,
Oh my
it's,
goodness, that's
it's
crazy.
amazing the rabbit holes you can
70
fall
minutes
down.
ain't nothing,
And
Anthony.
just my
So
own
bad, 'cause
personal
they're-
experience.
They're only like, what, how long is a typical TikTok, Caroline? I mean, that 70 minutes of TikToks is a lifetime of TikToks.
It depends. I mean, they can be super quick, or they can be actually quite long, and then I scrub through. But
I got
think that it's also an
540.
interesting combo, because I have found that several of the influencers on TikTok don't just funnel business to TikTok Shop. They actually already funnel business to Amazon. There are a lot of influencers out there who are peddling Amazon products. So could be an interesting combo. I just want to go back to Citi. Kept a buy rating and a $273 price target on Amazon shares, which are down almost 8% today, trading around 180 right now, 181. So down about 17% year to date. Actually negative on the one-year chart now as well with today's weakness. In terms of other reporting about that deal, we know that from the New York Times, then I said the White House confirmed that report. Apparently, the offer from Amazon came via a letter addressed to
We broke out of a wedge.
J.D. Vance and Howard Lutnick, the Commerce Secretary. According to people, though, according to the New York Times, various parties who have been involved with the talks do not appear to be taking Amazon's bid very seriously. It seems like, I will say CNBC also reported that AppLovin is interested in the deal as a potential suitor, thinks they can monetize traffic and data. If you take a look at AppLovin shares, they're selling off quite a bit today as well. The Wall Street
We'll be right
Journal
back.
reported that AppLovin is also in talks with
I think we got to take it to
about
5:45.
that
Right up
deal.
in here.
And there is, of course, the reporting around Oracle and Blackstone.
We've
and
got
so
3
forth,
different
potentially
resistance
not
levels.
An all-out sale, but investing and bringing ByteDance's ownership down to.
We have 3 different resistance levels, the 21, the 63, and then this big wall up here, the 50 and the 200s. And we just now broke out of the wedge. And here's another resistance right here, triple bottom. So if we break that and stay above that, 543.19, I think we're safe. But we got a break here. Where's my tape? Man, my head hurts. Bummer having fucked up glasses.
So there are some IPOs, but I mean, when you say IPOs
what's Newsmax
slowing,
doing?
I mean, it's been a market that's been thawing and thawing for quite some time. We've been waiting for it to pick up, but
Newsmax down
might not
22%.
necessarily in this environment.
Newsmax down 28%. If the market does tighten up, the economy tightens up, likely to be more deals than big debuts. So stuff like this can definitely still happen. So we got to keep track of those stories. Thanks, Caroline. Appreciate that. Let's go to Joe Teagate, portfolio manager with the Rational Equity Armor Fund. Joe, help us make some rational decisions this morning. What looks irrational here?
Yeah, well, there's a lot of irrational. Definitely very rational to be a long volatility manager on a day like today. So I'm feeling fine.
Boeing dipped down pretty good.
The market itself looks very sick, Oliver. And you talked about these yields coming lower, these bonds looking great. You said the bond market looks like deflationary. I wouldn't have a different bet. I would say the bond market looks recessionary. So I think the bond market's very worried about the economy. They're thinking the Fed's going to lower rates, not because of inflation, but because of a softening economy and because
100%.
of job losses mounting.
100%. That's exactly what we were just talking about. I'm with you all the way there. I know you got a trade in Amazon. Is that the trade you want to do today, Joe, in this market? Or is that the trade that we asked you to do in this market?
I kind of feel very good about this trade, actually. It's a short-term long volatility, short-term short the market, but long-term bullish on the market, long-term bullish on Amazon.
All right, so it fits your macro thesis.
What's that?
It fits your macro thesis.
Oh, absolutely, of course. Yeah, long-term I'm going to be bullish on the U.S. economy no matter what. I think we're going to get through whatever.
Amen. Joe Teagate, let's go.
But for short term, we are shaking things up, and we shouldn't forget this is also happening. This tariff shock is also happening at the same time. We're seeing a lot of federal job losses too. So people were saying just the job losses themselves could have tipped us over and spilled over into a recession. We also having at this at the same time. So there's going to be some disruption. There's no question about that, and that's not going to be good for Amazon in the short term. Just in general, having a long volatility approach is going to be the way to go. I was paying attention to your show while I'm waiting to go on. I saw Tom talking about maybe this selling could cascade. I think that's possible. I'd be watching the VIX though, Oliver. The VIX hasn't yet made a new relative high. Recent high is March 13th.
Exactly.
We haven't gone over that. I think if we are going to see selling continue, a little bit of cascading, you're going to see a big flush out bottom with a VIX pop at the same time. That's what I'd be looking for in order to see a turn in the market. We have not seen that yet. So unfortunately, just the trend continues lower until something drastically shifts. There's certainly the possibility. I don't think anybody's discounting the potential that these tariffs might not even go into effect. We might say, hey, a little bit too much, or maybe just a negotiation salvo.
A lot of chickens
and
out
some
there.
of the bigger ones get taken down after it's talked through. So anything is still possible. We're very headline driven here, and the market's just bracing for volatility, and that's what I'm looking for in my Amazon trade here, and just really in the market in general, just having some volatility on protecting my investments. So in the short term, I want to own a 180 put in Amazon. In the long term, I want to sell the 150 in September in Amazon. I do that at the same time. That's a diagonal spread, Oliver. I can collect money to do that. Essentially, I'm covered to the downside in the short term. And I'm stopped out to the downside at 150. 150 is close to a 52-week low. I think it's 151 back in last August, I think it was, for Amazon. So I'd be very comfortable owning Amazon down almost 20% from here at these already low levels.
This ain't
So that's why I'd be
working.
looking to get back into Amazon if we do sell off further. And of course, I'm protected to the downside now. If we don't, that's great. I'll just be able to collect a very small amount of premium just while I'm waiting for the market to stabilize here.
All right. Well, you're going to get some lower prices for Amazon. It looks like we're cutting to new lows here. So that's going to be the, if you like it here, you're going to love it there trade, which I respect that. And I respect the optimism and bullishness on the U.S. economy. Joe Tigay, rational as always. Thank you,
Jeez.
sir. Perhaps one of the
ICCT
most
been something
appropriately
else.
funds for the guy, Joe Tigay, Rational Equity Armor Fund. Coming up. Let's talk some bonds, surprise, surprise, and tariffs. Be right back.
I don't know if I should add or not. SPX.
Trading at Schwab is now powered by Ameritrade.
SPX went below my support. Oh, that's way below it. Double bottom right there. $54.05. So we'll keep an eye on that one. I said an alert for SPX. I got 5405. Like I said it at 5413.52. Just a little number out of the head above the 05.
Signaling a big risk-off move. Sean Dranfield joins as CEO of PT Asset Management, a bond-focused shop with a lot of funds. Sean, great.
SPY had a new low.
This is a big morning. We've been talking stocks basically all morning, so this is kind of.
Kind of don't like being in the same day now.
The Treasury market.
That's my big issue here. Big orders on puts. I'm in the 550s for today. And I need a big bounce here. We got to break this 543.19. This is our second attempt. So, you know, that could be an exit idea if you're down. But I'm going to hold on here. I think we can get back to the 200 eventually. I had a chance to add on there and I didn't do it. I'm going to make me something to eat here in a second. This will be my last trade until I get something in my tummy.
In terms of direction, but also the short and the long end of the curve can price very differently, right?
For sure.
So when you think about the short end, the way I would contemplate the short end is I would say, well,
let's get to the BBOP
bonds that price off the short
today.
end are what I would call defense. So they're bonds that would primarily help you if rates go up, right? And I think there are some very attractive bonds that trade off the front end of the curve in the structured credit market, for example, the CMBS market to a certain extent as well.
Okay.
So those bonds will certainly help if rates go up. I mean, obviously, at the longer end of the curve, those bonds are going to help you more if rates go down. Right?
So you don't want short in treasuries?
So
I didn't hear treasuries in there, right?
I would argue that there are bonds that are more attractive that trade off the front end of the curve that aren't treasuries. That's not to say that treasuries aren't bad, right? But there are better bonds in our view.
You guys are thinking income, you're thinking high probabilities of success, so I'm kind of pushing my short-term trader view here a little bit on you, but when I think about the treasury side of it, if the bond market right now is basically saying tariffs, this is where I think a lot of people are getting some things wrong, frankly, is there's this assumption tariffs are inflationary, which I feel is still up for debate. I would argue the bond market looks like, on the long end, it's pricing deflationary outcomes.
Right.
Recession, stocks. This is a recession-style move for stocks.
Right.
In that case, why wouldn't Powell go cut, shorting comes down?
My view is, his view is I've made a mistake already. Think transitory inflation, right? COVID.
Yeah.
I'm going to wait and see. And I frankly think, like, we have some clarity on what the reciprocal tariffs are. We have no clarity on how the rest of the world is going to respond.
Mm-hmm.
We have no clarity on how the administration will respond to those responses.
The tariff vortex.
Right. We have no clarity on will they persist. We have no clarity on supply chains. We have no clarity on inflation. I mean, there's some clarity in terms of direction of reciprocal trades, but I would argue there's very little clarity on the economy. So my view would be the Fed is going to wait and see, and take it from there.
He always waits and sees.
So then let's get back into your wheelhouse of, with that degree of uncertainty still, we're getting some math dropped into our inputs, but to your point, not all.
I can't stand these glasses, man.
Earnings, basically. We're getting some inputs now that we've actually got these numbers, but what if there's that vortex?
Which is weird on my
stuff
face.
That you want that maybe doesn't depend so much on a few of these big macro unsolved items.
Right.
How do you go about that credit selection process right now? Is it generally of high quality? You want exposure to higher quality stuff? Because some of those things it seemed like you do. Are you comfortable wading into the mortgage world? Walk me through kind of the juicy stuff.
Yeah, so in our view, the beauty of bonds, unlike stocks, is bonds are mathematical instruments. So the beauty of that is you can do a sort of if-then analysis, right?
Yeah.
In equity markets, it's more of a what if, right? So what if rates do this? What if the economy does this? It's more about predicting. Bonds are math; they have known cash flows. So the beauty of that is you don't have to guess what rates will do. You don't have to guess about causation. You can say, well, if rates go up, I know that this will happen to the price and the cash
This is a
flows of the
resistance
bond,
here.
right? If rates go down, I know this will
We
happen
just got to
the
see if it's
price
going to break.
and the income stream of the bond. And what you can do is you can divorce
This line. We set 5 minutes up here, 4.5 minutes. It's a major resistance. This is where I have my hard time. I can find the bottoms, but not in this trade I didn't. Finding where it's going to sell at and stop. That's my hard part. But I think we can hit the 545, the VWAP, or come shy of it. Ford's dropping. They're asking if Ford's a buy here. I'm like, what the? Ford recalls it. 105 SUVs for seat belt flaw. I wouldn't buy it. You can't get the seat belts right. That's the most important thing, you Ford idiots. Christ is king. Hedge funds are using more leverage than ever. Oh.
Further down treasury yields go, by the way.
Correct, but we don't know what rates will do, right?
Right.
No one does. So I would say the math in that part of the bond market is fairly attractive.
How about munis? Give me a thought on that real quick, because we're hearing a lot about the end of American exceptionalism, right? When a bunch of these issuers were putting out some pretty big volume in munis, and I've heard a lot of bull cases for munis, but...
Yeah, so what's very interesting about the muni market today is there's been a little bit of sort of a spread widening event in the tax-exempt muni market because there's been some speculation about the elimination
Okay,
of
we're at 90
tax-exempt
cents.
It's been around forever.
Yeah,
That debate, I used to work for the
It's
bond
creeping
buyer.
up
That was,
slowly.
I don't know, 12 years ago now. And we were doing articles about that.
Right. And
Guys, are you even yet? Are you even yet? They're buying the 543 calls today. Yeah, they can't make up their mind, can they? I think we have to kind of be concerned if we're even, we might want to get out of them. We're at another support here on the right shoulder for the second time. There's a head and shoulders and neckline all in one.
Only down 80 pips. Coming up next.
I want to go eat. Well, the Fed can't do everything.
To save his market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in. Let's get some charts. We've got the master himself, Mr. Rick Ducat. Good to see you, Rick. Welcome back.
Thank you. You too.
Right on time, just in cue. Let's do the dollar first. Bloodbath. Where do you go on the chart?
Yeah, what a day to come back to here. And the thing that stands out to me most about this chart is, you know, first of all, the dollar doesn't typically move. What are we down now? 2.2% in one day. That's a very large move for a product like the dollar here. But what's interesting is that we are stopping at a point that I had my eye on even before this. If you were to draw a downward sloping trend line connecting these highs here, duplicate it, put it across the lows, that's about where we're holding on right now today. Not saying it's going to last or it's going to stay there. That's just one trick you can use to project potential support in a situation like this. Alternatively, you could draw a more steep, more short-term channel using this downward sloping trend line and going across these lows. That would give you a projected further support point down here near 100.5. That lines up decently well with a series of old lows and kind of this consolidation period back here. So 100.5 seems to make sense to me to look for, to start looking for a potential foothold. RSI declining, further oversold, typically regarded as a sign of further weakness to come in a trending market. Notice as well the heavy volume that this is happening with today here as the selling worsens. So if we were to also consider this volume profile and standard deviation channel chart, you can see here that we've given up an important point. Our yearly volume profile point of control, our area of heaviest trading here based on our yearly chart, lined up pretty closely with our -1 standard deviation channel. That would mean 1 standard deviation below our linear regression line. Linear regression line, line of best fit. A lot of definitions there. Basically, what I'm trying to say is we have a confluence of potential support coming together right here near about 103.75, 103.97, 104, sorry, 103.75 to 104, around that area. Kind of that general supportive range here, or rather resistance now that we gave up was key. That would be the resistance area to watch. We are slipping below our -2 standard deviation channel here as well today, which also lines up with this node and our channel. So if the bulls are going to make a stand, right about where we are now seems like a pretty reasonable place to start looking. And the other place I mentioned just below that lines up with these old lows, that's another volume node here near about 100.5.
It's a big round number for the dollar.
Yeah, exactly. So those would be some maybe reasonable points to start considering here. Yeah. Look at a long-term chart to 5-year here. Long-term chart, volume profile, point of control far below it, below the -1 channel as well here. So a big move for the dollar, a difficult move if you were bullish in this one.
Yeah. The multi-year support at 100 is something that is going to be a big test. So to your point, the fact that we just launched away from that heavy volume area at 103.7. That's where I've had the line in the sand on my chart for a while.
It's not looking good.
Stuck there, broke down to lows. I mean, it's such a powerful statement of such high conviction that something deeply economic is changing out of favor for the U.S. That's, you know, if you're like Joe Tige was saying and you believe that that's overstated, then maybe you stab here, but you save one in the chamber for that big 100. Or you save it, you know, the whole round for 100 to take the bigger shot. But
double bottom.
Area, we were there for a while and it broke. So I don't know if we have to go back there immediately. So maybe wait till 100 actually. It's so nasty.
If I knew we'd bounce, I'd buy it here.
Bull markets won't let you in, bear markets won't let you out. That's kind of how I view these things here. It's very difficult to choose a bottom.
I'd triple down on it.
It's difficult to make that call.
52 cents.
Things can get kind of crazy. But that being said, though, bottoms, low points are often more kind of predictable than high points. The times of extreme prices and extreme shortage and extreme demand, that's when things get really crazy. But the lows, there tends to be a...
If I knew we were going to hold this double bottom, I'd triple down on it down there just a bit ago. But now I'm down. I'm eating salad, Francisco. You can hear it? Yep. Well, I'd like to add it right here. That'd take me to about 70 some cents, 80 cents. Yeah. That'd get me to 78. If I bought them at 54. If we can hold this double bottom, but market conditions ain't too good right yet. If this doesn't hold here, I might just sell it. Well, I'm thinking about it, but I don't like being in the same day call now. They're a little harder to recover and SPY. It's out. It tastes good. My next support is 540.44. This thing can get down to 30 cents. Then really have a hard time. It's not like the SPX. Yeah. I hate to say sell it, but sold. Oh, sorry about that, Mr. Nixon. I voted for you if I was old enough. Yep.
commander-in-chief did say the plant downtime is entirely due to tariffs as the company reviews now its options, saying these actions will impact their employees as several U.S. their companies, their facilities, and those supporting their operations. So just for some context, the Canadian plant produces the Chrysler Pacifica minivan and recently released the Dodge Charger.
I'm still in
EV.
it.
Mexico produces the Jeep Compass
It's not easy.
SUV and the Jeep Wagoneer. So Stellantis' U.S. sales do rely heavily on those vehicles produced in Canada and Mexico, or assembled in Canada and Mexico, and roughly around 58,000 vehicles that are imported from Europe. So I think it makes sense to see this name taking it a bit harder than some of the auto peers, which actually, in a market that is as beaten up as we see today, Ford and GM not looking terrible, at least on the session.
All right. You know, that's interesting. I guess maybe, you know, competition-wise, or, you know, American-made, you know, here's the thing. People go, the prices of our cars are going to go up. Correct.
Correct.
But
They already
you know,
have.
they're not even going to produce them in other places. Like, if their immediate response is just shut down, then, like, how weak is that business? You know.
That was exactly my gripe with this news.
Is that our problem? I don't know. Not want to get political, but, like, you know, if you know, have an announcement about your tax going up, and if that just is that the end of your margin, your profit margin, so you shut down, then, like, well, okay, I guess we'll buy GM cars then for a higher price. Like, if we, you know, which, do I want to buy a GM car for a higher price? I don't want to buy anything for a higher price, but that's kind of the idea, is that this whole tariff thing compresses everyone.
GM will get
puts
bailed
a cap on
out.
everyone's potential, but probably puts whatever the things we do produce in the U.S. at an advantage, but we don't produce that much, so.
Yeah, I think this is exactly the purpose. It's to bring more.
Okay, we're at my support now.
60% of their
Do or die.
here can drive the entirety of their business on U.S. soil. That's the whole purpose of this tariff.
Pretty much, yeah. Yeah, good stuff. All right. Thanks, Jenny. Stellantis down. Home production, Canada and Mexico.
This is my final support right here, 540.44. She's always got that smile. The guys never have smiles. Oh, come on.
Suggest this is capitulation.
Oh, okay.
I would say, to your point, anecdotally, this doesn't really hit, Main Street unless it continues on for a few days. It gets in the news cycle. Yes, the move is huge today. You've got nearly a 5% move in the S&P 500, 5.7% in NASDAQ.
Ooh.
But I still, as a technician, continue to wait for signs that we've seen historically over the last 3/4 of a century that would suggest to us we're at a capitulation moment, and we're not there.
Mike, you're a bond guy, because I want to get Caroline involved too, but just real quick, give me your top line takeaway on bonds, and if we got time, we'll come back to the chart.
Sure.
Bond movement.
Looking at 10-year yields, we have a massive head and shoulders topping pattern that has validated today with a break of the neckline.
Oh yeah, I see that. Wow.
If the pattern is to achieve its full extension, which would be the height from the top of the head down to the neckline, and extend it, That could suggest a move down to 3.4% in the 10-year yield, which is the 200-week moving average. Technicals across the board, risk off, additional downside in yields and equities seems likely from a technical perspective.
Great eyes on the head and shoulders. Caroline, what are you watching? What's of interest to you at this point?
Well, first, I just want to say anecdotally, no sense of panic here on the Florida Stock Exchange either. I will say we know that the traders make money regardless if it's buying or selling, but a lot of talk of buying the dip. Just was chatting with some traders about buying the dip in energy, the third most performing sector on the S&P 500. Obviously, not buying to turn the markets higher, but in terms of what I'm watching,
35 cents.
To find the losers, Mag 7 all deeply lower. Hardware taking a big hit. Taking a look at Dell, HPQ down.
I'm taking a huge chance.
Intel was actually higher just a bit ago, but has turned lower. Retailers under pressure. Ralph Lauren, Best Buy, Nike. Some of the.
I'm going to ahead and add it on right here. Average is 61. I'm only doing it because of the support, and we've held here for such a long time. I've got quite a few. If it doesn't hold 35, I'm going to take my loss. Sorry about that, guys. Very good. I still might win this game. Why did I call that 540.44? Let's see why. That's why. That double bottom. Double bottom on the weekly. And that was my first support. I think I typed that to somebody last night, didn't I, Rob? This is what I sent to Rob last night, right here. If I get out of this trade, I'm gonna go in there and cook me a pizza. Fuck. Come on, stock gods. Break it. I got $1,525 in this trade. Someone asked me the other day, how do I average down? I go in 5, I add another 5, and then I waited and waited and waited, and I added 15 more. And I went to my first support, which is at 540.44, so I got to hold it, or it gets a lot worse. Because that's a double bottom on the weekly. Miss Titilanni's here.
On the recent wave of tariffs, what it means for that space. The disruptor today block following an upgrade to overweight at Morgan Stanley. George Stillis will have that and have an example trade for us as well. And our panel will be all about the tariff discussion and what it means.
Don't tell her I said that, though.
The USA, possible trade war, and the markets, your portfolio. In the meantime, take a look at the numbers. Tough to stomach today. Folks,
tough to stomach. Ooh, 15. Dow Jones down 1,500.
Folks look at their 401ks and IRAs.
Well, that is a tough time.
Down 4.3% at 5,423 for the S&P 500. The Nasdaq's down 5%. The Dow Jones Industrial Average down 3.7%. And this is sitting at 40,666. The Russell down 6.5% for those small caps. Oil and gold, those are both down. Gold's down $17. Oil's down almost $6. The VIX is jumping. It's at 28.68, and the 10-year bond yield sitting at 4.01%. Bitcoin 81,715, down 6.5%. So a lot to take in here, folks, and the question is whether or not we have
We're going to have a rebound.
Capitulation, a lot more selling. Do we take another big leg down? I mean, there are people who think we should go down way further and then finally call it a day and buy them back. In the meantime, let's continue our top stories and what to watch. Jenny Horn, host of Next Gen Investing, is with us. She's taking a look at a mover, and that is Lyft this morning, which is down over 10%. Some of your thoughts. Good morning, Jenny.
Good morning, Nicole. And unfortunately, more pessimism in these various entities within the overall auto space or the
They're pumping Lyft.
Space. As Lyft today facing a double downgrade out of BofA to underperform from buy price target.
Oh, that's Lyft.
$10.50 a share,
Uber.
down from $17.50, citing what they believe as substantial now AV risk. They did say, especially when we look at the Alphabet-owned Waymo's rapid expansion in San Francisco, which I have seen actually many documenting their rides. It looks very cool, as well as in Los Angeles, and Lyft's lack of scalability within the autonomous vehicle partnership market right now. And they also don't see very many of these.
We're squeezing again.
So that gives then Lyft, what they say as shrinking
right here,
and a pretty cutthroat business right now. They do also still see long-term potential for Lyft in the AV ecosystem, but said that it gives a lot of its still nascent partnerships and overall the firm just losing confidence in the upside now going forward. So that is obviously not the sentiment we want today in Lyft, as shares are now down about 11%. Conversely, I was seeing, looking at the chart of Uber, which I tend to compare these two, even though Uber has become so much larger. Uber didn't see the same B of A pessimism, but did actually get a price target raise today out of Wells Fargo. So not helping the stock, perform. Uber's also still down and was now 6%, but different companies, and I think we're seeing analysts treat them as such in spite of all of this tariff news.
Yeah, it's unbelievable. Worst day since 2022. It's not every day I look up and see, 1,000 points or 1,500 points. Tough day on Wall Street. Thank you, Jenny Horn. Great to see you, Next Gen Investing host. Let's get some insights on the news shaping the markets. For that, we welcome in Tim Pagliara, Chief Investment Officer of CapWealth. Thank you for being here. Some of your thoughts on the tariffs and this reaction.
Good morning. Well, I'd start by just asking the question, if the tariffs had been imposed today and the market had been trading at a more reasonable 16 to 18 times earnings, what would the impact of all of this uncertainty have? And I would suggest to you, we would have a lot less impact, and that most of what is happening right now, especially in the Mag 7 and some of the other really popular names, is just a movement back to a more sustainable level of earnings and growth as reflected in the stock price of these companies.
It's funny because obviously there are folks who thought the market ran up too much to 20% years plus, sort of lent itself to have a pullback, and we haven't had a 10% pullback, and so people were waiting for that, but now it looks like we're going to have that plus more. When do you say that's capitulation?
I'll be right back.
I mean, people are still expecting now some selling upon selling today.
Well, again, I think you have to look at the trigger, how we got here. We have $7 trillion worth of spending. We have $5 trillion worth of revenue. And of that $5 trillion in revenue, $1 trillion of that goes to interest on the debt. So we had created an artificiality in the economy that everybody had ignored with that $2 trillion worth of additional spending. And we're borrowing $1 trillion every 90 days. So these are very draconian steps that had to be taken to create and recreate balance in the system. Some of these things have gone on for years in the unfair trade practices that we experience in the market. But I think all of this will take us to a much better place. And there'll be some very good focused buys for individual investors during a period like this, because always, things will emerge that will become great values at great prices that will sustain themselves in the level of economic activity that we have going forward.
It's interesting because I was listening to Commerce Secretary Howard Lutnick, I listened to the President Trump, and both made a reference to the stock market and that we will move to new highs once again, and made it seem like this is the path. You got to sort of get through this, and then at some point we'll be back to new highs. What do you think of that?
Well, I agree. I was in a small group meeting with Treasury Secretary Benson on Monday, and he expressed a lot of confidence.
A lot of confidence. Well, they cut him off.
All right, Tim Pagliara, a great conversation. Appreciate it. Seeing a lot of down arrows.
You cut him off.
Right now, the Dow's down about 1571. We have a big show for you today. We'll have the big three next. We'll take a look at
Come on, baby.
stocks, three charts, three trades.
This is hard to sit, hard to chew right now.
I just have Tim back, and I just want to get some final quick thoughts here. Tim?
Hello?
Be back. Hello? I'm here. Jake Paul, I'm here. Lulu was down 38 bucks. Let's see who's the biggest losers today. Shop. God. Didn't you just say Shop was up or cost? KR.
He's Alex Coffey.
Hey,
I'm
Bubba's
Jennifer
up.
Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Come on, Spy.
Believe me, when it comes to investing, you'll love Carl's Way.
Carl's Way is the best way.
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Need you to break out.
Welcome back to Trading 360. I'm glad you're here with us. I'm Nicole Pedalides, biggest sell-off.
Okay. We're starting to move a little bit here. So I'm at 46. All of a sudden it starts to break out. Why? Now this is a major support, major resistance right here. I should sell it and take my loss. But if we break it, it's an easy shot up here to the right shoulder of this head and shoulders. Left shoulder, head, and right. As if we break this resistance level. See that pull back right there? And that? That's a major, especially coming from a down trend here. So I think we're going to dip. I'd sell it now and buy the dip. Come on. Break it. Don't be shy. Don't be shy. I love apple pie. Please don't make it die. Don't be shy. I I love my apple pie. Don't go back. Might give me a heart attack. I'm shy. Go up high. Break at 4319. Don't be shy. Up high. I don't want you to die. Don't be shy. Break out now. I want to see your head and shoulders. Break me even. Don't be shy. Find a new high. Okay, keep going. Unbelievable. Need to go to the dentist now? We used to have Kroger's here. Could sell them at 50. I might get out even. Just so hard for me anymore. I've been here so many times and I sell at a loss and they reverse on me and I go, sheesh. But living through that period is hard. We're at 55 now. I got to get 61 to break even. Come on. So far, Robin nailed that support. Tape still looks good. Better than it did. See, this is a major pivot point right here at 543.19. You got these two lows right here. Then you got this area consolidated there, and then it couldn't break it, and it finally did after the third time.
Situation where we've been rising. We have our longer term blue trend line here that's right about where we bottomed out
well,
today before we had a bit of a surge to the upside that has so far stalled out at our yellow 21-day EMA despite recapturing our orange 63-day EMA. So this is our resistance point to keep an eye on right near 343.50. Notice though that we so far have not been able to take out those old highs. We hit a stopping point near about 350, and then our low here near about 326, just above that level. That's the point to watch for further downside if we do break below our longer term trend line here. From there, we do have a notable gap to watch. The gap began, or rather, I shouldn't say began, the high point of the pre-gap move was around 310. So that would be an area to watch for the gap to be filled. Momentum struggling a bit though. Falling back below the 50 midline, downward sloping red trend line still in place. So more of a bearish lean here to momentum despite bouncing off of this trend line so far. If we were to look at our standard deviation channels and volume profile studies, you can see that node, not really a great clear node, but this is the area near about 350 that stands out the most in terms of near-term price activity to the upside. A little spike here near about 335, and then the bigger node lines up with our -1 standard deviation channel and our gap. All of those come together near about 310, 311, around that general area, Nicole.
Okay, thank you, Rick Ducat. Appreciate a good look at the big three today. Dan, you know, this has really been a tough day. In fact, it's the worst day since 2020 with the selling that we're seeing. You know, we're not too far off the bottom of the day. What do you tell folks? I mean, I know people who were buying overnight when they saw the selling. You know, when do you step in and buy? How do you make them feel better?
Well, you know, Nicole, I guess when you look at it overall, from, you know, one thing about the market is, yeah, you're seeing the big names under some significant selling pressure. But the one thing that we look at when we talk to clients is the mean reversion aspect of the market. I mean, if you look at like some of the equal weight indices out there and things of that nature, and you look at the overall market, really, it's not down much at all this year. But those big names that drove the market higher really experienced the heavy selling pressure so far this year. Again, a mean reversion story. It's historic in the markets. It's something that's really certainly shown its you know, hand this time around as well. It eventually gets there. And that's what we're talking about.
You're delusional.
Opportunities out there, and we're not seeing I mean, selling across the board is something else we're talking about. So even though we're seeing heavy selling today, very disappointing on a daily basis, and certainly painful to many, you know, there are opportunities here, and the market has some stability underneath the foundation here, even though we're seeing some of those big names really come off.
I mean, I'm looking at Citigroup down 11%. I mean, granted, there's Ralph Lauren's down 16%. You have a lot, but when you start seeing some of the big banks and things that you just sort of thought you'd count on a little more, down more than 10%. It's a very interesting day on Wall Street. Dan Deming, Rick Ducat, thank you both. Thank you both for the big three today, and the 10-year bond yield right now at 4.04%. We're going to continue our spotlight on the tariffs, how it's affecting different sectors, particularly the retail sector. Many of these names are down between 10 and 15% on this latest round of tariffs, and it's not ending there. starting to see some more. I just saw potential levies on alcohol from Europe, 200%. That would mean champagne, for example. All right, we'll be right back.
Well. Oxy's at support on the yearly. Apple took a big hit today. Down $19. Target's at 94. Zoom is at my support level. Actually below it, but someone else was calling 1350. And what's CrowdStrike at? There's another pump. CrowdStrike at the 200 EMA. I'm still in my trade. Just see if we get some kind of rebound. It's a big dip today.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Google's at a head and shoulders. It hit my support.
Opportunities don't stop when the market day ends.
150.82 for Google.
Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs.
Well,
plus a wide
shoot.
variety of futures
I'm
markets.
debating on going and getting something to eat.
All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
I think I'm going to make something to eat and watch this stock, see if it holds.
Welcome to Market Overtime on the Schwab Network.
It's looking, I mean, it could have got out at 54 cents. This is losing value, so I should have got out at 54. If we get another bounce, I'm going to sell it. Because it's lost a lot of value since when we're double topping. It's lost 7 cents, 6 cents here in value. The 550s. I better not leave yet. I know if I sell it, I'll run. But this is the same day calls, and they just don't do as well on the SPY as at SPX. Dad died, made me rich. Yeah, this ain't gonna work. It's a miracle. We got a megaphone. Double bottom. be right back. I'm going to start my mix for my little patties. I think it's going to come up to here eventually, but might be back at 54.
Very hard to look at and or analyze the company in terms of what you think the actual earnings power will be, because some will be able to pass on, some will push through to the vendors, some will absorb. I mean, it will be, I think a third, pass on, push through to vendors and ask the vendors for relief and absorb. So guidance for companies and for investors is very, very uncertain under these circumstances, and it's very hard to manage a business this way.
So, for example, I was looking through the countries in particular, places where a lot of things are made. Vietnam, for example, has a 46% tariff. China will have 34%. Cambodia, 49%. Some of these may change at some point. Are there any retailers at this point that you think may be well positioned or better than others in this time of turmoil that you can turn to and say, well, this one may be okay because?
Well, the names of the ones I cover. So if you're discretionary, as in apparel, you have a lot of problems that you have to deal with, and you have to resource differently than you have it in the past. If you're a food retailer, I mean, most is domestic, and you're relatively protected. So some of the names I cover, while their fundamentals are not great, are safe-ish as it relates to tariffs. But there are not a lot of names that are safe. So even if you think about a food retailer, during the winter months, how much do they import from Mexico? I mean, it could be 7, 8, 9% of produce is imported from Mexico. They definitely, food retailers specifically, have Canada exposure. No company is immune, but the names that are, call it 60 to 70% domestic, are clearly the most protected as it relates to what I say, the whack-a-mole.
The food retailers that you do cover, can you name some names? Because a lot of them have been doing well. One that you, but you know, maybe prior to today, ones that you liked in the positions they were in. You said you covered some of them. Which ones did you like?
So the names that I food retail, I cover Kroger, Albertsons, Sprouts, and grocery outlets. I mean, to name a few, I cover Casey's as well, which is a convenience store. You know, Albertsons sources most from domestic. Kroger, because of their actual footprint, is much more middle of the country, so they're more reliant on imports during the winter seasons for produce. Walmart sources from the entire world, but I mean, they are protected. Sprouts specifically, the RFK, initiative could potentially benefit Sprouts meaningfully as it relates to elimination of dyes, elimination of various products that are not necessarily healthy for the consumer. So, I mean, that's not a comment on my actual rating on Sprouts, but I can see where there's safety.
Yeah. Yeah. The retailers we do cover, I mean, we just talked a little bit about Walmart. It's my understanding Walmart is sort of pressuring some of the Chinese suppliers to lower costs to them. Of the retailers that you covered through yesterday, prior to the tariffs, which names seemed like they had good management, good demand, good balance sheets? Which ones were the ones that you had buys on yesterday?
Well, I have a buy in Walmart, and that doesn't change. And 70% of what they source is domestic, and they also have significant clout on buying power. I have a buy in Target. They also have very strong sourcing capabilities, and they're a very desired retailer as it relates to vendors. I mean, I can go down the list. I mean, home is different. So I think personally that the Home Depot, Lowe's of the world, I think, and homeowners are coming to the realization that they have to invest in their homes or buy a home, and they can't keep waiting for rates to come down. And I'm not a macroeconomist. I'm not a top down. I'm a bottoms up analyst. But rates are not coming down, so you have to make a decision. You can't be in standstill forever. So I think you'll start to see some more strength in the home owners, and as in the Home Depot, Lowe's, even Floor & Decor. As it relates to the fact that
if she's in Target, she's getting whooped. I'm back to 55.
inside your home.
Got it.
So this is a major resistance here.
You make a good point. Look, mortgage rates have.
If this breaks, now we're at the 200. So I got to make a business decision. If this breaks, it's going to be a huge run. But if not, this is a hard resistance right here, 59. 60. I mean, I need to think about getting out of the trade if I'm real close to even. And if it breaks, I'm going to be pissed because I sold. Now I'm even. I'm even right here. 61 cents. I wish this run would have happened a little bit sooner. Okay, I'm done. I said screw it. I sold some at 61 and 60. I don't want this to be a lesson to everybody, but I mean, it's hard, especially if you're a new trader and you don't know. Definitely the 200 is a hard resistance. If it breaks, I might get back in it. Right now we got more buyers than sellers. There, I'm all out now. Mostly sold at 61. Fuck, there it goes. Fuck. Damn it. I'm gonna give myself a good B for that one. Oh boy. There's 68. That sucks.
These will be the better defensive plays in this environment where we're seeing draconian tariffs.
It'll be up 175
price
right
target
now.
is 146. This is actually what its price target was, so that certainly suggests some upside from here. The market not responding to it in general today, but certainly performing much better than a lot of the retailers that we've seen.
I'm gonna be more mad now that I've sold it. I could have been up 250. You've seen me do this. Anybody that's been a witness in here for a long time has seen me do this and teach this. And I've had a lot of throwback and a lot of I've had my measure of throwback on how when I'm in trouble in a trade, I just don't sell it. I just patiently wait and cost average down, and eventually I get out green. Sometimes I get out with a ton of money. It depends on the fair that I'm in, where I'm sitting, how I feel. And today's not a real good day. Market's down 1,500 points. This could recover 700 points by the end of the day. But I've always stuck them out. I mean, I've sold at losses so many times before. About 4 or 5 years ago, I started thinking about why do I keep selling these at losses when they bounce up at the end of the day? It does it almost every single frickin' time I get into a trade. Only very seldom does it not go. It does not bounce up, or it just goes sideways, and then it deteriorates in price. And I've gone through this speech a million times, maybe that one time out of 50 trades it doesn't do it, or one time out of 100 it doesn't bounce back up. And I only had $1,500 in this trade. And then there's that time where you get even and you want to sell it and get out and not take the chance of it jumping another 10 cents when you got 25 contracts or 16. Now we're above the 200, so it's bullish right now. This could go ahead and break out even higher. But I'm going to go in there and cook my burger. I guess the moral of the story is, if you have the stomach and you're willing to take the loss, 99 out of 100 times you have a chance to win and to get out even or to gain some of that loss back. And fear is the hardest thing to beat. It's hard to stomach. That's why the other day I said I'm glad I got a good heart. I've had my heart tested 3 or 4 different times in the past 2 years from just to make sure that I have the heart to stomach this, because I've been through a lot of stress trading stocks. I used to breathe real hard every time I was down. I'd hyperventilate. And I went through that stage already that some of you are probably going through right now when you're in a losing trade. And then I beat that. I used to breathe real hard. People, Vegas says, Jim, you're breathing hard again. Stop it. Everybody said, man, you're breathing hard. Because I was in a losing trade. They knew when I was in a losing trade, I'd either clam up, breathe hard, and just wait it out. But I'm glad to get out even with that trade. Although I could have made 250. But that would just have been a couple more minutes of holding on to it. But you don't know if it's going to do what it's doing now. Once you hit that resistance level and tank on you, and you could have said to yourself, man, I could have got out even. Or I could have got out with a $100 loss instead of a $900 loss or $1,200 loss. And that's a win. So just make sure you don't put a lot of your whole account into one trade. But that makes me happy, so I'm gonna go cook my hamburger. I go by, there's a strategy in it. Like today, I waited for that double bottom. Let me show you something here on the chart on the SPY. Someone else asked me the other day about this. So I'm going to show you here. It's a feeling. It's also the time of day. It also has to do with the chart patterns, moving averages. Looking for a support. So this weekly time frame, someone came to me last night and asked me where support was. And I'm all about candlesticks, like 3 black crows and that big 3 white soldiers, and get out of the trade. But here's your double bottom right here. You got that lowest support. That's your next support right there on the body of that candle. So I waited for that body of that candle. That'd give me a little bit of confidence just to go ahead and stay in the trade. Right where that body of that candle is, and that's called a double bottom. So that's my next lowest support. The next one would be the body of this candle right here on the weekly. But this wick retested that bottom right there. You see that on the next week? It held that body of that candle. So we come over here today and we hit that bottom of that candle. And then I bought the dip as it started going below that. I thought about it for 5 or 6 minutes. I think we were sitting around here, and I said, okay, I don't know if I'm going to go ahead and do this or not. But I knew that I had that double bottom on that weekly time frame. So I had a confirmation of some reason to stay in the trade. The time of day means a lot. But on a sell-off like today, I think that just kind of throws everything. All the fat cats are going to lunch. my opinion. The scalping time is over between 8:30 and 11 Eastern time, 9:30 and 11 Eastern time. That's when the market's really moving, and that's the best time to trade. So anytime after that, after 10 o'clock my time, 11 Eastern time, the whole trade becomes a different kind of trade. It becomes a day trade. And day trade is a trade where you stay in a stock longer than 30 minutes. So psychologically, today's not a bad day. If you listen to all the fat cats, there's nobody that's very optimistic right now, but a few are saying buy the dip, because we're down 1,500 points, and that don't happen very often. So then my exit idea was the 200. If I ever did recover, and it started to respect the 63, and we had a little head and shoulders right here, and it bounced on up off that shoulder line. And my moving averages, if you don't know what they are, I trade off chart patterns, moving averages, and being in the now. So I had to take all three of them into consideration today. So it has to do with confirmations, which is chart patterns, moving averages. Once we broke the 9, I started feeling, and respected the 21, I started feeling good about the trade. So I've been trading moving averages from day one, and I only started when I first started, and I don't have the 50 on here for some reason. So I'm going to put the 50 on here real fast, then we'll go cook my burger. But a lot of it has to do with, you got to have a strategy. And you got to live off that strategy and learn to respect it. If you can respect your strategy, then that's another reason that keeps me in these trades, because I know the strategy works. There's the 50 SMA right there. We bounced back off the 50 SMA, but we were bearish as long as we're below the 9, and once we broke the 9 and the 9 crossed the 21, we were bullish, and we still respected the 21 all the way up, and I got out at the 200. And we bounced again off the 50 right here. So I'm going to leave this up for a second while I go in there and cook my burger. If you want to write down the moving averages, you got a pencil and paper next to you. I got the 9, the 21, the 63, and the 200 EMA. And SMAs, I got the 50 and the 200. And I'll put this in the room. Everybody has a strategy, and nobody has this exact same strategy at all. My strategy comes from bits and pieces of everybody else. Now we got 3 white soldiers coming out of the gate. Nice strong rebound off that 50, which means we could go higher. Telling me we might have a good little run here. I'm going to go put my hamburger on, come back and trade this trade. I got some at 54 cents. I should go into the next day. As I was talking there. Does that help any? Shifty? Build you a strategy, make sure it works, and have confidence in it. Paper trade it. But it was the double bottom that saved my ass today. Now we're at the VWAP. Now I also use the VWAP chart for an exit idea. That's usually right around where the 200 is on the 1 minute. We break this here resistance, we'll go higher. And right now I'm up almost $100 from 54 to 63. Cook my burger real fast and see if I can get my 250 back here. There, I'm up 100 right now almost. There it is. So the next resistance, you know, it's all about chart patterns and looking at these candles. So we got overhead resistance. From that body of that candle all the way up to the body of that. So that's a triple top. That's an exit idea. If I want to get out of this trade, but we got three white soldiers. 72. And I'm getting ready to go eat, so I'm going to sell these suckers. I don't want to be looking at this anymore for a few minutes. Out at 71 cents. Why did I sell it there? Because it's a triple top. Look it up and see what triple top tells you. It's a bearish indicator. And now we're back down to 59. Triple top, double top. This is overhead resistance. They usually pull back a little bit, and then you can buy the dip and run it back up. But mind you, we get bounced off the 50, we bounced off the 50, we bounced off the 50, and we could bounce off the 50 again. Is that right, Magnificent? A plus, buddy.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today. We're going to talk markets deep in the red, but off of session lows, and then we'll have some options.
There you go.
We're going to cover Apple.
I'll just get ready to tell you to do it.
Market territory after the slide today hit 8-month lows, and then we're also going to cover Nike, which is at over 7-year lows amid the tariff fallout. And Likefolio has sentiment data in Alphabet. The Google parent stock had pulled back over 25% from those all-time highs just a few months ago. also in bear market territory. Now let's take a look at those major indices, which are deep in the red. The S&P 500, the benchmark, off 3.8%. The Dow Industrials off 1,300 points, just over 3%. NASDAQ 100 down 4.3%, and the Russell 2000 small caps leading to the downside, just getting hammered, down 5.6% on the session. To help me break down all this red on these equity screens, let's bring in my co-host, and that's Kevin Hinks. Kevin, you know, we've traded through periods like this, Kevin, where you can see these massive sell-offs. I mean, what's the first thing you're going to tell investors and traders out there in this type of environment? Yeah, it opens up, you know, some opportunities, Kevin, but at the same time, it's taking a big swath out of a lot of people's maybe positions and wealth a little bit.
Yeah, this is when long-term investors have to look 3 and 6 and 9 months out. And how do they feel about these good companies that are, you know, some of them that are getting beat up pretty solidly here, Tom? And that's when you make clear decisions. This is why we talk about dry powder. This is why we talk about, you know, valuations and where they were and where they are now. And this is why Warren Buffett raises cash at that valuation. So all these reasons are why, you know, be greedy when people are scared. Be scared when people are greedy, Tom. This is the first one, right?
And there's
so
another
this is the
point.
time to take some.
Be greedy when people are scared. Be scared when people are greedy. And you heard me back when we were at all-time highs. I was freaking out. Things are, and this is up 1,500%. This is up 1,200%. This is up 500%. I'm going, what the heck's going on here? And I was fearful. And I'm more excited now because everybody's fearful, and I'm going to be greedy. I've been here so many times. You know, I think when I first started trading was during the Obama crash. Once he got elected, man, the stock market just tanked and tanked and tanked and tanked and tanked and tanked. And it tanked a little bit before he was elected, but everybody knew he was going to get elected. We wanted to have our first black president. But the market and the way his campaign was all about how much he hated Wall Street and the fat cats and the jets. I mean, every speech was against the fat cats, and the fat cats all that time were in bed with this guy. So that's when I started learning how to trade, and it was at the worstest time ever. It was every single day the market would be down 500 points for months. 1,000 points, 800 points, 600 points, 500 points, 300 points. I mean, it went on for months. Every single day. But I was eager to learn, and I paper traded for almost a year. And today when I come in here and I see the Dow down 1,100 points, I'm going, this is a great opportunity. That's why I was so excited. And I've done pretty well today so far. Because I've been there before. I'm going to go get my biscuit out. Oh boy. Unbelievable. That's what I am. I need a flashlight on this here. There we go, baby. So YouTubers, this is what I'm having for lunch. This is made out of almond flour. And I don't have nothing. There we go, new highs. You guys have seen it over and over and over again. When I'm in trouble, I get out green. Just one or two times since I've been here, I took a loss. if I didn't play it out, and these things are delicious. I don't like being in trades like that, but this one here could have paid pretty good if I held it. But he's right. When everybody's in fear, that's the best time to make the best money. And I have. Man, that was good. I can't tell you how good that little bitty $10. That little bitty cooker has made so much pleasure out of my lunches. I mean, I've never tasted something so good in my life. Oh, Michelle. Is it that bad? Mmm. I want to go in there and make another one. Michelle, you need to get you one of these. Have you seen it? If you like to cook. I'll show it to you here in a second. Little bitty waffle maker. Oh, you have one? I love it. It's changed my whole eating. I mean, that was an almond bun, almond flour with egg, garlic, and salt powder, and then flaxseed and bagel seasoning. And cheese. Half a cup of cheese. And it makes 2 buns. 1 egg. Okay, we're about to hit resistance on the SPX. The SPY is at 75. They're pumping Apple.
And I think Tim Cook can tell President Trump that he paid for the open bar at the inauguration. So I think there's some things he can say to sway the Trump administration. But I think there's some hardcore negotiations going on right now behind the scenes. Caroline, your thoughts?
That's what bulls like Dan Ives are certainly hoping for as well. And to Tom's point, back in February, Apple announced $500 billion investment over the next 5 years in the United States. They said that they're going to hire 20,000 new employees. They're going to produce AI servers here in the U.S. So that move was largely seen to placate President Trump. And I did see a Jefferies analyst come out and say that that $500 billion investment may help secure some exemptions. So if those negotiations are going on, I think that
okay, we got a Head and Shoulders.
Probably would be brought up. But when it comes to diversifying away from some of those areas and making their products here in the U.S., Dan Ives points out that you don't make $1,000 iPhone in New Jersey or Texas. He just literally sent a note a few minutes ago. He said if you want an iPhone made here in the States, it would cost $3,500. So I think that that's obviously something to consider as well. He maintains his bullishness, though, based on the fact that he thinks that these are temporary, not permanent. He talked about this being a major buying opportunity if that is, in fact, the case. Obviously, there's still a lot of uncertainty, but the negotiations likely going on right now.
Yep. Continue. They did everything right. And hey, you know what? They got through the tariffs last time when Trump put him on in his first term. So maybe
that was a 15% tariff in 2019. So far, there's no indications that that's the case.
Get your wife one of these for Christmas or her birthday. They're only $10, and that's all you got to spend on her. Or get your girlfriend one. If you're getting engaged, get her a Dash. It'll change. It'll keep you together for the rest of your life. Today's infomercial is called Dash. Brought to you by Dash. Dash can make you some of the best waffles that you could ever have in your entire life. You can make them healthy. You can make them gluten-free. And they're just wonderful. And it's full of protein. Get you an egg and a tablespoon of flour. Mix it all up. Add you some spices in it. And create you some of the best buns ever. For making you a hamburger, you can make pizzas out of it. You can just do all kinds of stuff with it. Dash. For only $10, it'll change your life and keep your marriage together for the rest of your life. She'll constantly be in the kitchen cooking for you. Shifty, you see how we hit the 200 right there and started to pull back? 200 SMA.
A lot of uncertainty in the markets because of their balance sheet, because of their subscription services via services.
They're pumping Apple.
There, because of the stickiness in their network.
And you idiots, you were pumping it at the all-time high too, and what happened? You don't pump Apple.
Tendency to gravitate. That's why you generally see a higher PE ratio, but yeah, it's fate. I feel like is going to be a little bit tied to whatever happens with the tariffs.
Yeah, and maybe waning consumer demand. We've already seen it over in China. They pulled back as a competition over there from cheaper alternatives. But Nate, you got an example trade for us. Break it down.
Yeah, sure. So I was, looking at, and by the way, we've got volatility that's pretty elevated here for the next, week or so, and then you go out and look at on the, the vol curve there, and you'll see that it does go down over time. I was just kind of looking for a way. Well, what's a strategy where I could be?
Let me tell you something, egghead. If you knew how to chart, you'd tell your mama that we just hit a pivot point. Do you understand me? That we could bounce up from here.
So that's coming up here in a couple weeks. But I was going to the June 1st, and I was putting in a put front spread. This is the back ratio. If you're using the Thinkorswim
Look at Netflix.
platform, where I was buying the 190 put, and then I was selling 2 of the 175 puts in order to fund the purchase of that 190 put. And when I looked at the time, you could bring in a credit of roughly 55 cents. The stock's up a little bit.
That's
I think it's
what
a little
you
bit less than that now,
want.
but as you can see, based on the way that I structured this trade, there's a couple things that can happen. If Apple's below 175, let's say the tariffs don't go anywhere, and that becomes bearish for Apple, then you're going to be assigned, if it closes below 175 on the June standard expiration, 100 shares of Apple, since you're short 2 puts, but you're going to get an effective purchase price of 160. If it closes anywhere between 175 and 190, you're going to have that potential credit of 55 cents plus wherever the stock closes in terms of potential gain there. And then let's say that that the tariffs do get negotiated. There is some resolution. The sentiment does shift, and the stock moves higher. At least you'll get that 50 cent.
I don't know. I think he's wrong.
For tying up your money at that short put.
All right, yeah, let's break this one down. Back ratio, 1/2 ratio spread here, buying one of the June 190 puts.
That was a miss today.
175 strike puts. Collecting, we've got 55-cent credit on there. It's probably about 25 cents credit right now, but price discovery may be warranted on that. But the credit, if you collect that credit, as Nathan said, anything above 190, you just get to keep the credit that you collected on this particular strategy. Now, the break even, as Nate mentioned, just below the 160 level. That's 23% below the current.
So here's Tesla. You got a double bottom out of a snake, which is a fallen wedge. So you got your chart pattern, you got your fallen wedge, you got your double bottom, high or low, not by much. Here, get out of my way, Mr. Hickey. Three black crows, tweezer bottom, hammer, double bottom, high or low. Snake, which is a fallen wedge. If you can count to 3, you can trade with me. If you can count to 4, you might make a little bit more. I make this so simple for everybody. Do you understand? 1, 2. That's not a 2. I didn't hit the line. It would have hit the line. 3, 4. 1, 2, 3, 4. Boom! Falling wedge to the 200. Call it a day. But you had to have patience. You'd have to wait for the wedge to finish out. Boom! Then it pulls back and hits the 50. Boom! Three black crows. Boom! For a scalp to a double top. Three black crows off the 63 with a spinning top. Boom! To a double top out of the trade in 4 minutes. So this next song that I'm getting ready to play is from a band that I used to play with out of Louisiana. I'm going to get my washboard, and then I'm going to go back to trading.
Do you recognize this? I don't. There's nothing.
It's
left.
terrible to realize your office is gone, but Cincinnati Insurance was there when our
Stand up, talk to me, waiting that I go to the place of comfort, oh, darkness, take me
Woohoo! Yeah. Jeff and Vita Band with Washboardjim. And we broke the 200 on Tesla. Papa Mama Yay. SPX pulled back and hit the 63 here. We'll see if we break the 200 and we run up to higher levels and hit the 54.86 next. So let me see here. SPY's pulled back quite a bit, but I'm going to look at the SPX, trade it next. But right now is the time to look at your favorite stocks that have pulled back. Oh, I got to pay rent today. Shit, better do that now. Done deal. Well, they're a little expensive for some reason. The 5500s at $7.70. $7.90. Yeah, I missed it. I sat there and looked at it. I'd be up 200 and 300 bucks right now. So this is off the 200. I saw it and I just looked at it. Well, I had to come down from playing that beautiful song. Okay, here's my opportunity again. Prepare ye in the name of the Lord. Your mark, get set, boogie. Sounds like thunder outside. I can't stand this weather, man. I'll be so freaking happy when I leave here. Can you hear the thunder? $8.50. Now let's continue the run up, please. Should be raining. We didn't get that rain yesterday. Yep. Oh, what was that? A couple farts. It's the most wonderful time of the world. Where we gonna have the damage fine? It could drop down and hit the 200. Of the world. Rain and thunder today, Jim? Yes. Oh, did you hear my fart? God dang microphone.
Guided a little bit softer. They're not going to get out of the woods of decreasing sales anytime soon, but then the tariffs just whack them. They produce a lot of shoes in Southeast Asia.
Yep. I mean, there's just a lot of things going against Nike. I mean, irrespective of the tariffs, because, you know, this is primarily a shoe company. That's the majority of their total top-line sales. They're manufactured overseas in Southeast Asia, primarily, places like Vietnam. They're getting hit pretty hard by the tariffs. And then the other thing is Nike has been facing some brand challenges. Its brands have fallen out of favor. Adidas, Hoka.
Come on, baby. We're at 950 now.
Shoe brands, On Holdings. These are all types
960.
of shoes that I see a lot of the teens and folks wear.
If you're new to trading, take some profit. But I think we're going up to triple top. Don't slow down. Jimmy's still around. Give me $1,000 out of the trade. Yay, yay. Can we take it to $10? Oh, you cold little witch. That was very unprofessional. Double bottom here, so I'll add 1. George. Here right about now. .90. You know what to do. I need to go clean my kitchen. $7.70. Jimmy doesn't beat around the bush. George.
Earnings estimates, the E and the PE ratio, the denominator, your forward multiple doesn't get cheaper as your stock price does. So in essence, I think if you look at the technical pattern on the stock,
Yeah.
RSI on a weekly basis is very low, but it's still trading below all these different, moving averages on a weekly basis. Your 10, your 20, your 50-week moving average.
What about the weekly?
So it has to at least cross above its 10-week moving average. That's approximately your 50-day moving average. That's why I'm using it. For you to kind of get confidence that it's establishing a trend reversal. It just hasn't gone.
We have a trend right here. We have the 5 crows. What are you talking about, you knucklehead?
9 for sure, and bounced off of lows. All right, great stuff. Thanks to George Tillis, senior market.
This is cheap.
Here. Kev, let's get into.
Now Nike's cheap. Let me go back 20 years on this baby. Not cheap enough. Well, let's go back 15. Wow, this is real bearish. Oh, I gotta watch my call. Oh, no. Now we are at the 200. It's got to hold here. It's raining outside. I'm so sick of it. Boom. Man, I don't know if I should leave this on. Let me go outside and look. We'll make a determination. There's a storm here. Weather. Daily forecast, see full forecast. It's 49 degrees. Raindrops keep falling on my head. I don't see nothing in here too alarming. Heavy thunderstorms will roll through. The high will be 54 degrees. I have the EMA and the SMA. Oops, EMA, not UMA. We're at the SMA. The EMA is at 5482. pre-market turned on or off? What do you mean?
Bank Investor Checking, the checking account built for investors.
Huh. Wonder what the deal is.
Every morning, our analysis is your blueprint for the day. Bonds, stocks, across all asset classes on Morning Trade Live on the Schwab Network. Weekdays at 9 a.m. Eastern.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I need a bounce, I need a bounce, I need a bounce.
Welcome to Next Gen Investing. I'm Jenny Horn today, joined by Diane King Hall, who's coming to us
Today
live
she
from
looks like the librarian.
New York Stock Exchange. And Diane, I wish we had some better news to parse through at this noon hour, as that is not so much the case. We are definitely still in a steep day of selling following tariff news that was worse than expected, and some saying that this is even worse than the worst case scenario.
Yeah, absolutely. Sweeping tariffs, sweeping across stocks today. You're seeing really a sea of red across the board. Though we're off the lows of the session, not by much. I mean, you're looking at small caps sinking more than 5%. NASDAQ 100 down by more than 4%. The S&P 500
So this is the 200.
more than 3%. So
now we're
again,
getting
off
to the
lows, but
63.
that low of around 4%.
Shifty, each moving average has a meaning also. And once you start studying them, you'll understand what I'm talking about. Like the 200s, that's usually a support and resistance level. Here in this case, it definitely is a resistance and a support. And then you got the 9, which tells you if you're bullish or not. Then you got the 63, which is also another resistance and support level. Same as the 21. And then the 50 is kind of like a support level too. So now that's telling me that the 9 is squeezing between the 21 and that we're still bullish. And we're starting to squeeze when we're in between them. That's the 9 EMA and the 21 EMA.
the tariffs to Europe. There was a range that was expected to hit Europe, but them ending up on the higher end is one of the concerning facts. And then the other overarching concern is, although we have certainty now, because one of the questions going into yesterday, Jenny, of course, was the uncertainty. What are the tariffs going to be? Is there going to be this universal tariff? Is there going to be this tiered approach? Now we have clarity on kind of the starting point, and obviously we can't forget about the auto tariffs, which kicked off today. We have this starting point now, but what is the response going to be? So there are those questions now. Are we entering into a trade war? How is China going to respond? How is the EU going to respond? Is there going to be some negotiation? And that's the optimistic side of it. So,
well, the commies are going to fight back, baby.
the optimists are saying this is the beginning of bargaining, right? Because April 5th is the deadline when these go into effect, right? Could there be some countries that come to the table and say, this is too much, we want to do this differently?
I'm going to give me some coffee and I'll be right back.
Yeah, Jenny.
That is true, and that is a great point to remember, that there is a finality to the news
Now,
yesterday, but there's
I want to make this clear.
things.
For the ones that aren't very experienced on trading, you got to look at today as a learning and a paper trade day, because today's a very unusual day. The market's down 1,500 points. Right now it's down 1,270. So that's a real red day. And you don't want to take too much risk. I'm taking bigger risks than I usually do. No different than any other day, but being a little bit more patient too on my trades. It's like we broke out of this flag that I had here, and we created another one. This snake breakout, pull back. We got a head and shoulders. We got a higher low. Okay, Diane, I'm gonna let you have the floor.
They view, tariffs that are applied on the U.S., and then this is the retaliatory response according to how the Trump administration frames it, Jenny.
Yeah, and that is a good point, and I just think it's one of those things where it's important to read into tariffs. I've learned so much actually this morning about all of the different ways companies outsource the majority of their production, which is, I guess, his point that he wants to fix that. So we can discuss this all day long. We will talk about this in the ways in which it's performing right now through these individual equities. We'll kick things off with up vote and down vote. We will also be looking in a deeper dive into the technicals on two of our largest names in the entire stock market, being Nvidia and Apple. We'll look more into some of these retailers and so many analysts' opinion that we're seeing some of these that will be hit, of course, harder than others. One of those expected to be hit pretty substantially is Best Buy, down over 15% today. Citi says this could be one of the most significantly felt as far as the tariff impact, and we'll also be looking into taxes and what that looks like in the world of crypto. We'll close things out with focus on HPQ, but also a broader focus on some of these software performers, as we do have the tech sector right now down about 5.8%. So even though there are 110 roughly S&P 500 names higher today, which is small, yes, it's usually closer to the majority, or at least seeing some green, there are still definitely winners within today's market. And I know that this blistering move is one that's painful for all, but we did our best to find at least some optimism to kick off the show here. Because I cannot talk about how just truly, I think, personally, this makes me upset today to see this much pressure. So we things off of vote down vote, of course, not recommendations. But TJX is one that has been named as consistently more recessionary, more resilient in times of tariff impact, with Citi actually on a really interesting note highlighting its strength they expect now going forward. We are higher today, and we were lower in two of our four names, but we're hanging on ever so slightly to a green day, Diane.
Yeah, not surprised to see this move in the sense of the response to where do you go in an environment like this? So Citi, to me, what stands out is they see the off-price retailers as being the ones who are poised to win in this tariff-driven, turbulent market era, right? So they're upgrading to TJX to a buy from neutral. They've raised their price target to $140 a share from $128. They're essentially seeing a tailwind for TJ Maxx here, while it's headwinds for many other retailers, a tailwind for TJ Maxx, or TJX, I should say, creating, just favorable opportunities for these off-price retailers or the discount retailers, right? So they believe this kind of environment is going to be beneficial to them because there will be an influx of inventory that TJX will benefit from receiving because consumer behavior will change because tariffs are essentially a tax, right? So consumers are going to say, we already saw some worries played out in the sentiment numbers, and now the expectation is we'll see that play out in terms of their actual spending patterns, right? And so if we see some retail weakness, softness in other brand names, where does that inventory go? It goes in the mind of Citi to a company like TJX or Ross. They also highlighted Ross as well.
Okay, and now to entirely shift gears here and look at a name that is unfortunately seeing the complete opposite type of day here. We are now looking at RH. I mean, brutal move. We discussed this name when it was only down 29%, which actually still felt terrible. Now we're down 39%, so it's only gotten worse as those markets have really parsed through this report. I don't think it's encouraging. I mean, now I've dove into so many of these companies, their performance, the metrics. It wasn't really to me about the earnings at all because, yes, there's weakness ahead. Guidance was disappointing, sure. But it's never a good sign when you have your CEO live reacting to this tariff news. And it was not positive.
He said, oh crap. That's actually euphemism for what he actually said. It was an expletive on that earnings call. It was wild. I listened to that. I'm like, okay. He said, he was talking about the stock going down. He looked at the screen. I guess he called a monitor because you know how we're surrounded by monitors. Clearly, he was surrounded by a monitor and he saw the news on tariffs and he said he hadn't looked at it. He talked about the stock getting hit when he said, I quote, I think when the tariff came out and everybody could see in our 10K where we're sourcing from, so it's not a secret and we're not trying to disguise it by putting everything in an Asia bucket. He also said nobody of any scale is not sourcing out of Asia except for Ethan Allen. So I guess he's saying, look, everybody is sourcing from there, so we all have exposure. So I guess he's trying to spread the pain around. And he does tend to be pretty candid in terms of how he speaks, but it certainly didn't help, right, in this tariff exposure that you have for them, especially given how they source their inventory, coupled with the fact that they missed expectations on the top line, on the bottom line, and guidance was weak, guiding for growth in this current quarter between 12.5% to 13.5%. She was looking for more than that. It's going to be even more difficult now with their exposure in Asia. Now, look, he did speak in a flattering fashion about President Trump and expecting that this
Okay, we're retesting this again.
Chip or bargaining approach, so he's clearly in the camp that is, trying to find the optimism for this and sees this as more of an, we'll call it an opening gambit, for lack of a better way of expressing it. But it is certainly not helping the stock right now. Stock down, as you mentioned, almost 40%.
Yeah, and also to add just fuel to the fire, saying we're in the worst housing market we've been in 50 years. I was also that's also, I think, interesting, the exposure that this company and furnishing retailers have right now to housing, which that definitely doesn't aid when you throw in another major economic.
So it's a triple time, third time we hit the 200.
The mix of tariffs. I mean, I agree. Part of me loves the honesty. I thought the exact same thing when I saw the headline. So we were in the same camp of reaction there. But yeah, adding housing to the mix doesn't exactly paint a picture of strength for a company that kind of surprises me because their items are so expensive. I mean, they must be truly high-cost textiles and raw materials because I would guess that they'd have a huge margin to work with that evidently they don't really. And so that reaction was very much felt. Okay, next name though, Lululemon. And there's a lot of thinking today that this new 46% tariff on Vietnam could raise costs for these major corporations that are exposed to apparel, footwear. Some households could continue to feel a pinch. Even, I mean, like some of these names have already faced pressure, like Lululemon. We do know Nike manufactures about half its footwear from China and Vietnam, about 25% coming from Vietnam. But when it comes to Lululemon, they do get their yoga pants spandex from a China-based manufacturer. 61% of their production is, or their overall business is derived from the U.S., followed by Canada. But I do think that the positioning of specifically Vietnam
exposure as well.
Exactly. As I say, I think right now this is more about Vietnam and more of the story overseas in Asia.
It is. This is the pain point that Lululemon, Nike, others in the retail sector are feeling because of their exposure there. Now, you know, you have
exposure
kind of trying to get in front of this and have been shifting production over the years.
We have, oh man, this looks nice.
Reducing exposure there and doing more in Vietnam.
Lulu's got 3 black crows on the monthly time frame, and a double bottom, and a 1, 2, 3. Receives a monthly. I mean, that looks sweet. I mean, that's really looks good. I need a good bounce right here. I can hear the wind now. Come on, you bitch.
Now, to end things for this first part of our show on a maybe more optimistic note, Kroger, which also is now being seen as perhaps a place to hide, or at least not taking the impact as hard as some of its peers, because it, of course, does business in the U.S. majority and also has more of a staple type nature. And this name, where can you find me a name that is hitting all-time highs today, Diane? You really can't.
I know. This is a lucky duck today. And also I want to correct myself. It was Guggenheim for Kroger. That was Evercore ISI.
Is it time to short it?
On Lululemon and the tariff exposure there. But yes, I love that we're finishing on a winner. We bookended with some good news. We find some, you find some glimmers of hope in difficult days like this. So we started with a look at TJX. Where is there a potential winner in the retail sector? We're finishing with Kroger. This is Guggenheim raising their price target on Kroger to $73 from $71. They keep a buy rating on this, and investors are scooping this one up, looking for opportunities in the sea of red today. Kroger up nearly 5% right now. They really think that, that Kroger may have been more conservative on their last earnings in terms of their projections. They think
well, this is when I had trouble with when I first started trading it.
Of their forecasted range. They also see some cost-cutting measures that they like that Kroger is putting in place. And this is something they said previous to this heavy-handed tariff measures. They actually see that that Kroger is not going to be so exposed to tariffs, and that will be.
I'm gonna go make my coffee. I'll be right back.
For them and adding to a positive narrative around the company.
The only thing that's interesting to me about Kroger still, and totally outside of the tariff news, is it still has this ongoing feud. It's like the worst breakup of all time with Albertsons, which of course the deal that was ditched and also
sing song.
Yeah, I'm like, just let it go. They're now basically trying to, I think, avoid paying breakup fees. Yeah, this is the grocery store drama.
Yes. It is grocery store drama. It sounds like a couple breaking up.
I have a request.
I get this, you get this. Well, no,
Mike, are you out there?
So I get this, and trying to figure out, what each is going to walk away with. But look, in terms of the share price, Kroger October is walking away with some great performance, and you can't complain about that, especially in an environment where we're seeing such volatility and major selling pressure, especially on a day like today.
Especially if we continue
He
to
is.
see a pricing concern, I think that the getting out of an expensive deal was probably maybe the best thing that ever happened to them. So yeah, stop trying to get out of the breakup fees, just move on, as I think markets mostly have. Yeah, this name up now still about 5%.
That's what I thought they called him.
New all-time
Why are you
high,
being so
at
quiet?
$21 a share.
I don't appreciate it.
Frankly, we needed to end on a bright spot.
I need your help.
You're pushing your luck, little man. Nothing for you.
That's what I thought. Jenny looks like a librarian today. £9 hammer.
China.
Well, I'm not getting my way. The Dow Jones is down 1,269 points, 1,272 points. The Nasdaq NDX is down, never mind. Mega cap tech don't look too hot. My favorite one out of, you're not sticking around too long. Wonder what the VIX is at today. I didn't even look at the VIX. Very elevated. Okay. I can hear the wind outside. Rose, are you out there today? Well, we're getting the pullback. Rick, I'll be right back. We'll see what Rick's got to say. I gotta get my coffee.
Attributing to that so-called super cycle.
But so anyway, though, this chart actually looks a little bit worse out of the two, I would say, because you can see that we kind of gave up all of our moving averages recently. We struggled to retake our yellow 21-day exponential moving average and bounced around our purple 252-day EMA. Never really came close to the orange 63. Now we have fallen off after this rather brief sideways grind, but we can see as well now that we have fallen below our recent low point here. 208.42 marked that specific specific low there. You could also say perhaps within a downward sloping channel type shape here, we've got our conventional trend line going across the highs. If you were to duplicate it, put it across those lows, you get our white line here, pretty close to this green line, 196, all the way back here, this notable low point from August 5th. So if we were to approach those August 5th lows, that was a significant low point for many stocks across the board. That would be an interesting support point to keep in mind. We can also see RSI.
And we're going to go down to 541
here after a rejection at that 50 midline here. Staying out of the oversold area for now, though, that would be a further bearish sign. That would be more of a sign of perhaps trend continuation.
Why do you keep pumping Apple?
Be read to the bearish side, Jenny.
Yeah, and unfortunately, today's price activity obviously pretty staggering, but it had also been not exactly in a great point of technical strength prior to today, as we had seen, one of its worst starts to a year since 2008. So, long term, technically.
She has a weird slope about her. As she leans back, I don't see how she keeps balance. Unless she's got her knees are cocked. Can't see her legs, but man, look at that slope. It's just weird. It's like gravity's barely holding her up.
The same point that I highlighted earlier, you can see that where we stalled out not only was near our yellow 21-day EMA, it's also near our yearly volume profile point of control, our area of heaviest trading. You can see this blue bar graph on the right side of the screen. 225 is a key level. That was a very, very heavy trading area relative to everything else. So that was the resistance area to beat. Unfortunately for the bulls, didn't quite happen. It was also the site of our -1 standard deviation channel. So we had a notable confluence of resistance there that the bulls just couldn't quite take on. So now we are finding perhaps some footing at our -2 channel here, 2 standard deviations below our linear regression line, near about 204 or so. This could be an area to watch. Then we've got those old lows near 196. Finally, a volume node near 190. So, and a quick look at our 5-year chart. On a day like today, it can be worth checking out longer term support and resistance here. We can see 198, that kind of 196, 198, same thing. That matches up with those old highs from back here before. So even more emphasis on that area to hold on to for the bulls, Jenny.
Yeah, and I also will say that when you look at the case of some of the pressure today, I do think it's important to zoom out, although sometimes it doesn't necessarily help as far as finding optimism. But now to look at our next name today, which is NVIDIA, another name that has not been operating from a point of strength as of late. They've given actually a very different story to follow this year than Apple. And the fact that they've had successful developments, they've also had, I think, positive commentary from their CEO, but they have China exposure. And when you have right now export and import controls at definite risk, it makes sense that we're seeing this name pull back with the overall market. We're down 6 3/4%, roughly today. Another name that has seen a significant repricing, we're down almost 33% from highs, but now in looking at NVIDIA's chart, you said looking perhaps a bit better than Apple.
A little bit, yes, and here's what I mean by that. So once again, we have our green line that we're quite close to, 101.52 in this case, and that's all the way back here. That's the low point after we had our earnings gap up. That's around where we held on here a couple times too. Once again, notice August 5th, a notable low point. We did manage to fight our way back up and close near that level though. So a key area to watch, 101.50 around that point would be some serious support to consider. You can also see RSI has seen a long, slow decline here. We are making new relative lows as well, though, as price continues to falter a little bit here with our gap down today. The overall trend still to the downside. Nothing's really changing so far in regards to momentum here, except it's increasing in severity to the downside. We also have a resistance confluence right here to consider. We have our red line, 113.37 was this low. That's about where we bottomed out again, and then we
so the 550s.
Thinking that with NVIDIA, there's very specific issues regarding AI and some of these parts in which they outsource, but all things considered, what are you watching? Because it doesn't look, at least as hard hit today as Apple.
Always clean.
Yeah, and that's kind of what I meant.
Retail
We
traders.
still held on to that support. And
This is a
if you
recorded
look,
line.
now
May I
that
help
we
you?
have our other studies included. Our -2 standard deviation channel is about where we're stabilizing today so far. You know, a lot could happen still before the end of the day, but we've already taken quite a beating here. So this seems like a logical point to start looking
It's a fallen
for
wedge.
support around this area. That being said, if we close below it, if things start to get worse, I mean, there's not really hardly any volume node or nodes or anything here to break our fall. Very thin trading in that area. The next area of interest would be around 90, all the way down there. So certainly not saying that's going to happen or anything. Just trying to look for notable price levels to consider here as we try to make sense of the developments that have happened today. Once again, a longer term look here, looking at a 5-year weekly chart of NVIDIA, we can see the trend has been down. We are falling below our 5-year linear regression line, our line of best fit. We've got this notable low here near about 101, and then the volume picks up back again down here and lines up with that low near 91 or so. So, you know, just a difficult chart. If you got in near those highs, it's always a tough situation. It's a really hard call. Just because something is high doesn't mean it can't go higher, but eventually it has to go the other way. Nothing goes up forever.
Yeah, and not to say that today's move isn't huge, but we saw the most massive repricing in it on following some DeepSeek news. So I've actually become more and more accustomed to these big swings in NVIDIA. I mean, for better or for worse, it's just been the nature of this year. It lost over 20% just in the month of March, and today definitely not aiding that sentiment. But we will leave it there. Appreciate it as always, Rick Ducat, our chart master. Now sending it back to Diane, who's standing by in New York.
Thanks, Jenny and Rick. Up next, time for FOMO. We'll talk Best Buy under heavy pressure today amid this big sell-off. It's on the receiving end of a downgrade as well. Next Gen Investing. We'll be right back.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go, at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for FOMO. So continuing to look at broader retail space and some of these individual perhaps seen as winners or losers. We're looking at Best Buy today, and joining me, of course, is my co-host today, Diane King Hall, as well as Caroline Woods, both coming to us live from the floor. So Caroline, let's talk Best Buy here with a downgrade today, as it could be seen, at least in Citi's view, as one of the most significantly impacted by these tariffs.
Hey there, Jenny. Yes, downbeat note from Citi, but also from other analysts weighing in as well, as Best Buy in particular likely going to be the hardest hit from these worse than expected tariffs out of the Trump administration. So Best Buy shares today down about 17.5% right now, sitting right near the lows of the session following that news. And of course, this downgrade from Citi says big ticket retailers like Best Buy are the most exposed companies out of its coverage universe and will take the biggest tariff hit. In turn, downgraded shares to neutral from buy with a price target of $70. That's down from $93. So if you take a look, Best Buy currently trading around $62.50 right now, down about 17.5%, now down almost 30% so far in 2025. Some of the key concerns out of Citi: higher tariffs on goods from China, Vietnam, Indonesia, and India. Thinks tariffs will weigh on demand and supply chains, and then also noted rising recession risks and a slowdown in consumer spending. And it says it significantly changes Citi's view of the broadlines and hardlines sector. I should note that Citi also downgraded names like Restoration Hardware, RH, in the hardline sector, but upgraded a name like BJ's Wholesale as being more insulated and a relative winner in the current environment. But overall, retail having a tough day today, and Best Buy one of those clear losers. And it's not just Citi, as I said, that points to Best Buy as a loser in the space. Morgan Stanley published a list of stocks with unfavorable exposure to tariffs, and Best Buy, as well as Five Below, were on there. Wedbush was out with a note saying tariffs will likely add significant pressure to hardline retailers, including Best Buy, as well as names like Wayfair, RH, Williams-Sonoma, and Arhaus, said that they face the most downside risk due to their relatively high import exposure and big ticket discretionary focus. So there will be winners and losers in this space. Unfortunately, today, for the most part, all but maybe Dollar General and TJX are losers in this space today.
Yeah, it looks like there's pain across the board, even when you look at the broader, kind of the measure of retailers in general. When you're looking at S&P, for instance, that's under pressure as well. So the overall sector getting
feel like I need to take a small nap.
as I guess one could expect, given these draconian tariffs.
Volume's coming back in.
The exposure to China, to Vietnam, etc. When you think about where Best Buy is, does this line up with the, we're starting to hear more trickles from different analysts and adjusting their views. Does this line up with the overall trend that we're starting to see of analysts' views on Best Buy and their exposure?
Well, certainly the theme is that Best Buy will be hit hard. And this isn't a surprise because CEO Corey Berry, she talked about this on the earnings call just last month from Best Buy, couldn't give specific numbers, but said it is safe to say, or fair to say, that tariffs at the current levels back in March would actually mean price increases for the consumer. So the fact that tariffs have only gotten higher after yesterday's announcement, which of course, as the analysts have pointed out, was worse than expected, certainly expected to impact their guidance. They actually didn't put the impact of tariffs in their full year guidance because they said it's so dynamic and so much was changing, but they pointed to the fact that China and Mexico remain the number one and number two sources for products that they sell. They said the fiscal 26 guidance we provided this morning does not, this was obviously back in March, does not include the impact of the recently enacted tariffs. This is because it is a highly dynamic situation with uncertainty about the duration, timing, amount, and countries involved. Now we're getting some more certainty. Obviously, there's chances of negotiation, so we'll have to see if this plays out. They did say that if those tariffs were to hold, that went into effect on February 4th, they said remain at the 10% level for the full year, so obviously much higher than that. We believe we would have a negative impact in the ballpark of 1 point of comp sales. This would mainly impact quarters 2 through 4. So likely we'll talk about the impact to
holiday
guys.
quarter that we're getting ahead to when we say quarters 2 through 4, and the hope always with the holiday quarter is that you'll see an increase spending. I mean, there is still obviously some hope that this may be a 6-month shock that we'll see get more stability within the next half a year, but is that enough time for a company like Best Buy where it needs consumers to come in? It needs the refresh cycle. It needs more than a refresh cycle. It needs people to not just need their items, but to want their items.
And if we have to think about a potential recession that's starting to enter the narrative, or a consumer slowdown, consumers pulling back, they might not want to buy big ticket items like electronics, especially if those prices are increasing because of tariffs. Just to go back and answer your other question though, in terms of what the overall analyst community, the majority already in the hold camp for Best Buy heading into this tariff announcement. If you take a look at the breakdown, 10 buys, 18 holds, 1 sell, the median price target $89.50, currently trading at $62.50. We'll see if there are any other adjustments, but Best Buy certainly on the list of those retailers most impacted at this point,
which makes sense. And
you gotta break the 63 here.
Talking about Corey talking about on their earnings call that exposure that they have, and that consumers will have to pay more. And that was before we got clarity yesterday. All right, well, I'll leave that there for FOMO next time, Caroline. Jenny, we'll send it back to you.
Yeah, thanks to you both. And coming up next, we will shift gears a bit. We'll be looking at the tax filing deadline, which is coming up April 15th, of course, and the rules in which taxes this year could play into crypto. And just to check in, Bitcoin futures are down about 6% today to just around 82,000. So also seeing some weakness felt there, but we have a special guest for more clarity on this subject coming up next.
Dow Jones dropped more. Break it, baby.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Putting your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing, and today we are focusing on another important T-word that is actually not tariffs for this segment. That is taxes, as the deadline is approaching on April 15th. So for some more tax tips, and now I'd like to go to Diane King Hall, who's standing by at the floor of the New York Stock Exchange.
Yeah, thank you, Jenny. We're joined right now by Mark Kohler, who is the founding and senior partner at Keiko's Lawyers and the founder of Main Street Certified Tax Advisor Program. Mark, thank you so much for joining us. All right, we've been talking about tariffs today. We're going to make a pivot and talk taxes. Another thing people love to talk about. Exactly. Everything is turbulent, but we've got a theme. The T-word is our theme today. We are down to the wire. We are less than 2 weeks away from the filing deadline from the IRS. Uncle Sam wants his money. For people who haven't gotten there yet, what's your advice on, should we be filing an extension? Why? Or should we just get it done?
I love that we're talking about this, because the first thing is no one should be stressed out. This is not filing deadline. This is payment deadline. Send in what you think you owe, file a gosh darn extension. You actually reduce your chances of an audit with an extension. It gives you more time to prepare. You may be wanting to upgrade a tax professional anyway. This is the time to go interview them, not in the last 3 months. So take your time, no stress. Isn't that a nice message?
That is a nice message, because I will say this, last year I filed for an extension because I thought I was going to owe, because I owed the previous year, and so I was just terrified and I just didn't want to face it. I didn't actually end up owing last year, thank God. Yeah. But okay, so you said before in some of your that people should avoid getting a tax refund. What do you mean by that?
Well, if you're getting a refund...
I know, it means you pay too much.
Yeah.
But if you get one, you should get it.
Yeah, just don't go buy a big screen TV.
That's fair, because with the tariffs, that might cost a lot. Well, you can get one right now.
Yeah, I don't know about this tariff topic, not my lane. But I will say that when you're getting a big refund, you've given the IRS an interest-free loan. But let's get that money in our pockets earlier throughout the year. It's a time to go to your employer, adjust your withholdings. If you're a small business owner, don't put in as big as deposits. And I can't emphasize enough again that when you're filing an extension, if you think you owe, send in the money, but you reduce your chances of an audit. I wanted to emphasize.
If you're a small business owner, pay yourself a salary. That's the secret. And pay them quarterly dues. Mine are due in another 2 weeks. Another week, I'll be getting mine. Another couple weeks. Second week. And I got to pay mine by the end of the month. Every single 3 months. If I don't pay them, I get behind and I get penalized. I like it a lot better, paying myself a salary instead of what I was doing. Come on, baby, break. A little too far out of the money there, Richard. $54.62.84 is what we want. We got Head and Shoulders right here. We break that. Come on. I don't know why it's there. We go. We got to break that Head and Shoulders. It's still a little bit shy of what I need. I want 54.62.84. I want it to break it. $54.62.84. Here you come. Okay.
profit if I don't go to USD. No, any transactions you have in crypto, you need to report in US dollar value, even if you don't go back to US dollar. And when I say it's public, the IRS has task force that can go out and see if you're lying about this.
Okay.
So reporting it, owning it is so powerful. Just don't be afraid of it and talk about it.
All right, from Main Street to Wall Street.
Bam.
That's Mark Kohler. Mark Kohler, Main Street Certified Tax Advisor Program. Our thanks to Mark. I'll send it back to you, Jenny, over there in the studio.
Yeah, thank you so much both, and some great insights on why not to lie about crypto and your taxes, of course. But coming up next, it's time to dive into the software space, as we are seeing some widespread pressure right now in a lot of these individual stocks. So we focus on HP. Coming up next with George Tillis.
Shit. I get close.
Opportunities don't stop when the market day ends.
And back to the 200 again.
You can trade brilliantly with Schwab.
Whether you're a bull or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Oh, come on.
Welcome back to Next Gen Investing. It's time to close things out. And as always, joining us to recap all that's going on right now in tech is George Tillis, Senior Markets Correspondent, as well as my co-host today, Diane King Hall. So, George, we have Morgan Stanley calling these reciprocal tariffs calamitous to IT hardware makers, which, let's face it, already were not exactly crushing it so far this year as far as sentiment from a lot of the sell side. So, walk us through some of these names that are subject now to these pretty massive import tariffs.
Yeah, so I think there's a lot going on. I mean, if you look at some of these names and mention like Hewlett Packard and Dell, they're down double digits today, and there's a lot obviously down today because of the tariff announcement. But this industry space has actually been challenged, particularly because there's been some slowing demand for personal computing and printing devices, for instance, like office printers and so forth that Hewlett Packard sells. And they've actually faced not only that consumer challenge environment, but the enterprise customers slow down. But they've already started moving their manufacturing outside of China because I surmise they anticipated the risk would be tariffs against China. But unfortunately, this seems like now this is a widespread risk, and they're not immune to tariffs across the board for multiple manufacturers, particularly in Southeast Asia. And so one of the things about these two businesses, Hewlett Packard and Dell, I'm focusing mostly, is that already, especially Hewlett-Packard, is operating at very low gross margins. I mean, it's a technology firm, but it's not a technology software firm or networking solutions firm. So it already has gross margins that are very low, approximately 20%, with net income margins which are in the low single digits. So then you add on additional tariffs, and so one of the things that can happen, and this is what Morgan Stanley's looking at with their call on Hewlett-Packard, is essentially that a reduction in total sales based upon tariffs can certainly impact all the profitability for the underlying business. In other words, it becomes a situation where its net income, which again is used to pay dividends and is accretive to shareholders, no longer is there, and essentially that's why we're seeing some of these hardware names in the tech space getting crushed, for lack of a better word, worse than some of the other areas of the tech sector.
Yeah, HPQ down now 12% during today's trading session. We're seeing, as you mentioned, George, just heavy pressure across the board. Is the concern also that margins will just be so thin that it just, you know, the investment thesis, it just doesn't support it now?
That's right, and that's really the crux, and this is why you're seeing, I mean, obviously you're seeing some networking semiconductor companies like Broadcom, I'm just using an example, I think it's around 8% right now. It's not faring as poorly as maybe some of the hardware-centric companies that are already facing some razor-thin margins to begin with. And, you know, Hewlett-Packard has a very favorable dividend policy as well, so then, you know, there are questions arising on the ability to maintain that dividend. And not to mention, when you're already operating with profit margins in the mid-single digits, a small reduction in that can create a magnified effect in your stock price. And so it's unfortunate for shareholders today for these hardware companies. And the companies, again, you know, have started to diversify away from manufacturing in China. But most of their products are imported from overseas, so they're going to be subject to tariffs. And it comes down to, you know, is it able to be passed on to customers at an already challenging sales environment for Hewlett-Packard to begin with. And lastly, I'll say this, if you just think about the private sector, it's one thing, but even the public sector with DOGE and all the cutbacks, the government's a huge procurer of computers and printers. And so that also might be in play of why we're seeing Hewlett-Packard already move to the downside since late December, and it's now just accelerating because of additional challenges from tariffs.
So, George, now as we look at jobs tomorrow, and I mean, some of the data we've gotten this week, and I think that it seems like stocks are not the place to hide right now. I mean, very clearly, so just based on today's movement. So, I mean, what right now do you tend to sort of look at in these times of so much volatility? I mean, not the first time we've seen a pullback this substantially, but as anyone knows, we've never been in this exact market before, so it's very different to gauge what we can expect now going forward.
Yeah, I mean, look, distribution markets like we're in, selling markets are bad, and every time it's different. Obviously, this time is certainly different because I haven't experienced this myself in terms of the catalyst for the decline. But essentially, you have to consider risk versus reward. Right now, the risks of being short are getting much higher than being long. It's not to say that this market can't continue lower. You have to start looking at technical levels. 5,400 looked like an area of support. It seems to be holding today. Maybe 51.5, 5150 on the S&P is essentially where it takes all the way back to August of last year. That's a possibility, but you have to look at the risk reward right now. Maybe the risk of being short is a little bit more than being rewarded from being long. But you know, this is not the time to panic, and certainly not a time to increase your leveraged positions because it can get worse from here, and so you have to keep that in mind. So you know, don't panic. But these sell-offs are uncomfortable. But they
I know what I needed to do today, and I didn't do it.
Because we know the Fed is going to be there if there's some.
So I got to do it after I leave.
On the debt ceiling, that'll be a catalyst. And not to mention, if there's some walk back of these tariffs, that's another catalyst to keep in mind for those bullish investors.
Yes, and that's a great point. And where we will leave it, perhaps on the brightest spot we can. Appreciate it. George Tillis, of course, senior markets correspondent for the network. And Diane, we are pretty much where we started this show. Yeah. We are still on a downbeat day, but to George's point, there still could be catalysts here in the long term or midterm.
Like that. I like the way he put that. And also, I've heard this phrase before, you don't get off a roller coaster in the middle of a ride.
That
So
is
there's
very
that.
true. Yeah, that's very much how today feels. So stick along for the ride alongside us. So that'll do it for Next Gen Investing. Thank you all for tuning in. Of course, thanks to my co-host Diane King Hall. Coming up next, we have the Watch List with Nicole Panalides.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now. Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
I'm gonna go ahead and run up there after hours.
Good afternoon. Welcome to the Watch List. I'm Nicole Panalides. It's 2 p.m. Eastern Time. We're coming to you live from the floor of the New York Stock Exchange. You've seen stocks going on all day long.
This is the bottom line right here.
Really, it's not like they're buying them back. And worries about tariffs have put our market into the red for the worst day of the year, the worst day since 2022 or 2000, depending on what you're looking at. In the meantime, we have a big show for you today. We'll dive into the tech sector, which has been beaten down, and the recent tariff news, how it could affect this space. Are there opportunities for you? Jeffrey Kleintop, he'll examine international markets and the effect that tariffs could have, and also into the number for RH. Have you seen how it's down over 40%? This furniture retailer is plunging. Tariff announcements weighing. Okay, quick look here at the markets. As I said, we're in the red all day long. The S&P now at 5,443, down 4%. The Nasdaq 100 down 4.5% at 18,668.
The VIX double topping.
3% at 40,904, and the Russell down 5.7%.
Kroger has an ascending triangle.
$4 today. No safe haven bet there. $3,132 a troy ounce. 67.03 the barrel for oil. Down 4.68. 27.75 on the VIX. That's jumping. The 10-year bond yield 4.0.
Yeah, understood that one.
Bitcoin at 82,110, down 6%. Kevin Hanks, host of Fast Market, here joining me, looking at weekly jobless claims. We've been getting in a ton of jobs news, and we'll get more tomorrow. But some of your thoughts here.
Hey, Nicole. Yeah, today's data, not that it mattered, not that anyone was paying attention to it, but it actually came in fairly solid. Jobless claims, first-time filers for unemployment insurance, 219,000, down from 224 last week. Historically known as a strong number, anywhere around 220,000. Continuing claims, 1.903 million, a little higher than it was expected at 1.86. So a bit of a mixed picture there, but the headline, 219,000, pretty solid job data there. Now, tomorrow, as you mentioned, we get payrolls, and they're looking for 131,000 new jobs, 4.2% on unemployment, 0.3 on wages, that's unchanged from last month, and 4% on year-over-year wages, that's also unchanged for last month. So if we get a stable jobs number, Jerome Powell speaking in the afternoon on Friday, he usually gives information to the markets that they like. We'll see how we can end this week, because Thursday, no bueno, Nicole, no bueno.
Oh man, it is tough. How about all the tariff takeaways? What are you hearing on the floor? I mean, it was interesting to hear from Howard Lutnick today, who thought that the markets, he said the markets will do extremely, extremely well in the long term, maybe in the medium term. President Trump said the same in his speech yesterday that I listened to. I mean, they're trying to give hope for the markets, but near term, we're going to have to suffer a little. What are you hearing?
The administration's coming out and making very positive comments. The problem is there's uncertainty. And as you know, Nicole, from watching these markets don't like uncertainty. Now, if the headlines that they're saying about reciprocal and tit for tat and things like that, if that happens, then we'll work our way lower. However, everyone is talking about the worst case scenario. What happens if the majority of these tariffs get negotiated away? That's what bullish traders are watching for, and see if these tariffs, remember the Trump administration, they want no tariffs. They want free and clean trade policies between countries. They don't have that right now. That's what they're working for, but the uncertainty around this negotiation, and behind the scenes they're negotiating, that's what's causing the markets turmoil right now, and obviously the worst case scenario that markets just love to build into a situation, Nicole.
Understood. All right, Kevin Hanks, great to see you. Thank you so much. Good luck there. Appreciate it. There's the Russell 2000 now entering into bear market territory for those small caps. And we continue our conversation. I'm glad George C. is here, CEO at Annandale Capital. George, we haven't spoken in a while. So glad you came on the right day, because we have a huge sell-off underway. And while the traders don't seem as phased, folks are probably going to say, oh, my 401k, my IRA, oh no. What do you tell them?
Well, y'all having fun up there yet, Nicole, today? This is a very entertaining day, to say the least. I would tell them that this is the worst day in the market since March 2020, right at the bottom of the pandemic when it first kicked in. So that shows you how spoiled we've been, that it's been almost 4.5 years since we've had a day of this magnitude. But if you look at Black Monday in 1987, which is 38 years ago at this point, that was this is 15%.
Okay, this is the bottom line here. It has to hold
1/7 of how far it went down on that day. So this is really a big bag of nothing. It's a big temper tantrum against the Trump tariffs and the uncertainty created by that, but it's really not a whole lot. And if I were somebody who had a bunch of dry powder that wanted to put in the market, I might fire one bullet today if I had 10, but then I'd wait to fire the next bullet until the market goes down another 4, 5, 6%, something like that. There's no reason to be in a big hurry, and this could get a lot worse before it gets better. So you got to be patient, you got to take a deep breath, and you got to relax. So.
Understood. So you're saying do some dollar cost averaging, looking at maybe starting to nibble on things that you might be interested in for your portfolio. You know, when you see a sell-off like this, is there anything that you would do on the other side? I mean, do you sell anything or take anything off the table? I mean, you're already going to lose money if you sell today.
Yeah, I think it all depends on your allocation, whether you have the right amount in stocks or not. If you've got the right allocation, you really don't need to do anything until it gets so low that your allocation gets out of whack and you need to add some more stocks to balance out where you are better. So I would not be taking action today unless you had some dry powder and wanted to add to the market. You never want to be a seller into a bad market if you can avoid it and wait for better days, because better days always come. I mean, we had a 10% correction less than 2 weeks ago, and the market bounced back about half of that. So it typically bounces back after it takes a big sell-off down, but I think we may be going down further before it gets better, unless we get some more certainty on the tariffs. And I'm not sure we're going to get that real soon. I think it's going to take a while.
Wow.
All right, so now, I mean, the tariffs ultimately, I mean, we're thinking here that, I'm saying what they're saying. The president, the administration, hoping that it'll be near-term pain, and then the markets move to highs or higher. And that's what Lutnick said, that's what Trump said. Are you on board for that? That maybe, you know, things improve and we're just sort of in the near term going to have to deal with this?
I'm a free trader, so I'm not on board for that. And I don't know what else they would say other than that. They're talking their own book and they're hoping it's all going to work out okay. But I think that Warren Buffett had it right when he calls tariffs basically an opening salvo in a trade war. It's a war. And I think it was Stevie Cohen who said tariffs are basically just a tax increase, which is really what they are. So I'm not a big fan of this. I am a big fan of fair trade as well as free trade. And some of these other countries that are our counterparties on these tariffs have not been trading fairly. So maybe some of this is warranted, maybe some of it's overdue, but not all of it. It's a very broad swath that the administration is casting here across lots of countries. And some of them probably don't deserve it. Some probably do. So we'll just have to wait and see how it plays out.
At this point, we're seeing small caps in bear market territory. So you see the Russell down, and there were so many folks who were waiting. You know, I feel badly for this group, because over 10 years, while the market was taking off, really the small caps weren't really in it. And then everybody said, buy small caps. I mean, they really haven't participated. Well, now they're really, I mean, is now the time for small caps?
I really don't know, to be honest. I do think now's the time to nibble at Microsoft and NVIDIA and some of the big Mag 7 stocks that are down quite a bit from their tops, maybe Google as well. It's actually got a multiple below the market multiple, which is pretty extraordinary. And I'm more constructive on overseas stocks than small caps. I think overseas stocks have lagged for 15 years now, and they're inexpensive, and a lot of these European countries are going to ramp up their defense spending a lot and ramp up their economies in the process. So I'd be more constructive in overseas stocks. And I'm very, very constructive in energy stocks. Oil's down about 6.5% today, which is a big reaction. But I think energy stocks are poised to outperform, and maybe healthcare stocks too. But I think small caps are a coin flip. They haven't worked for so long. And there's a good case to be made that a lot of small cap stocks are private. So the small cap stocks that are public, you're getting kind of the bottom of the barrel in terms of the quality of the companies and the earnings growth you're going to get from those. So I'd be cautious there if I were somebody.
Understood. What about international? We're going to be talking to Jeffrey Kleintop later. Any thoughts there? Are there opportunities or not so much?
Yeah, this is where it gets really counterintuitive and is really interesting. I would have thought with all the massive tariffs that the administration placed on China yesterday that China stocks would be getting just buried today. And we actually cut our Chinese exposure from 10% to 5% yesterday because we were kind of worried about that. And Chinese stocks have been holding up really, really well. So that's a real sign of relative strength. So I would be very intrigued in having significant exposure overseas, at least 15%, maybe as high as 30, 35% right now.
Newsmax.
I think that's a relative trade that's got legs. I don't think it's going to go away anytime soon.
Understood. So what are you buying? I mean, what do you tell folks now? What could they be buying right now today?
Yeah, I would buy NVIDIA, I would buy Microsoft, I would buy Apple, I would buy natural gas stocks. I love natural gas stocks. I think they've got a secular bull market ahead of them for the next 2 to 4 years. So I think there's a lot of legs in that trade, and they're down quite a bit today. So I would nibble at a minimum on those. And if you don't have international exposure, I'd put some on today. but I'd be really patient. I think this is going to take a while to play through. That's one thing I think investors really get wrong a lot of the time is they adopt a thesis and then they play it out, and they play it out very rapidly. And markets give you plenty of time to get into a trade that you like a whole lot. It's like Buffett has said for years that it's like being at bat, but you don't have to swing the bat. You only need to swing the bat when you see a big fat pitch that you just can't hold yourself back any longer. And I think this market this year is like that. I think people can afford to be really patient and take their time.
All right, George C., it's great to see you. CEO at Annandale Capital, giving us some opportunities among the sea of red. Thank you. Good to see you today in particular. Thank you. Options Corner, Tom White is standing by. He'll highlight unusual options activity from the day, how investors are looking to trade on recent news of Bank of America, Alphabet, and Nike. Stay with us.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages,
beat in the now,
and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Trading the trending names.
This market is not happy.
I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. It's time for Options Corner, where we analyze unusual options trades we're seeing throughout the day. So interested to hear what Tom White has today at Fast Market. He's combing through, he's finding real trades in the options market on a day where we're seeing extreme selling. And folks are waiting for that capitulation and trying to find the bottom. In the meantime, they get a lot of action here. Not as much volatility maybe as some may have hoped, because we're still down about 1,400 points on the Dow Jones Industrial Average, for example. Tom, good to see you. Some of your thoughts on today's action.
Yeah, Nicole, not surprising that we're seeing the pullback here. I think, as an investor and a trader, I've been through these up and down cycles over the past 30 years. And, it's almost like you want to calm investors, right? You want to calm the viewers a little bit because, it will get corrected, right? We just don't know how long it's going to take. The uncertainty out there is driving, I think, the losses here. And then if you look at some of the rhetoric and from the tariffs and, the bazooka that was thrown at a lot of these countries that didn't expect it, there's going to be some volatility here in the near term, and until we get some clarity. And I'm sure, the administration's fielding phone calls left and right today, based on these countries trying to rework deals, get bypasses on some of their maybe products across that. But if a lot of these other countries come back at the U.S., I think that's where it's going to get a little bit sticky here moving forward. Now you have this,
I'd say so.
This dilemma here where we're starting to see slower growth due to the tariffs. And then inflation, is it ticking up or is it not going to tick up? Well, I'm in that camp that thinks, a lot of the analysts and economists came out and said, hey, we're going to see a rise in inflation due to these tariffs. Well, if you get a pull down in the consumer and the spending and growth in GDP growth, well, I don't see a spike in inflation happening anytime soon. Maybe it firms up here a little bit due to the tariff. Maybe it rises a little bit. But I don't think it's going to be explosive, and maybe that's, the thesis that the administration's going after where, hey, we can slow growth a little bit, maybe some of that hard data starts worsening a little bit, and then, here the Fed has to cut rates now, and then maybe some of these tariff negotiations go well, so that might be the turnaround. I just don't know. We're kind of in no man's land as far as when you look at charts and everything, on the S&P 500 and some of the other major indices right now. I just don't know if there's a bottom in anytime soon.
Right, exactly. In the meantime, thank you for all of that, Tom. Wanted to take a look at Bank of America. You found a neutral to bullish trade. I mean, I was looking at some of the banks today, and I couldn't believe when I saw Citigroup down 10%. I mean, it's just an unusual day. It was down 11% when I looked at it earlier. Tell me a little bit about the Bank of America neutral bullish trade you found.
Yeah, the stock's now in bear market territory, off nearly 10% today, and it's not surprising. There's some concerns out there on the consumer. There's concerns on investments from not only here in the U.S., but also from overseas because of the uncertainty due to the tariffs. So investment banking,
they're really taking this tariff thing serious.
Already showing signs of slowing down. So those are concerns. Now, what's the flip side? Well, the flip side is a lot of the major banks start reporting earnings starting next Friday.
Yep.
Bank of America reports on April 15th. So maybe that'll right the ship here from the slide that we're seeing here today. But if you look at slowing economic growth, inflation that could potentially rise, the fallout from, maybe a slower economic environment here, that has the banks on edge. S&P 500 financial sector down 4% today, so it's in about at the middle of the 11 sectors there as far as losses here today. But did see some neutral to bullish activity in here, and I'm not surprised that we're seeing this because if you take a look at implied volatility in Bank of America, it's at the highest level it's been in 52 weeks. So you look back a year, implied volatility levels haven't been this high in this name. So I think that's what probably led this this positioning that I saw in Bank of America, where a trader was selling some downside puts. And this was out in the June monthly option series. So you've got basically, 3 months until expiration on this one, 2.5 months on this, where a trader sold 10,000 of the June 35 strike puts, collected an average credit of about $1.30 on these. They did these earlier in the day. So the break even where this trader starts to lose money is down at $33.70, and that's about 11% below the current share price in their put volume, about 3 times normal daily average volume. But this is that twofold type positioning, Nicole, where maybe a trader wants to buy Bank of America stock, but there's so much uncertainty out there. Why not just selling out of the money put to the downside? And if the stock continues to fall, this trader is going to get to purchase those shares at that break even of $33.70. So you're buying it at a discount. And if it doesn't go below 35 at expiration, you don't get assigned on these shares where you have to buy the stock. Then you just get to keep the credit that you're collecting in a high implied volatility environment.
Okay. Well, thank you for that. A good one there. And then we'll turn our attention over to a completely different area. Bank of America, as you noted, down about 10% today. Then we look over to Google. It was interesting to hear George C. picking names like, well, he didn't say Alphabet Google, but he did say Apple, NVIDIA, Microsoft. He was looking to the Mag 7 as names to buy. You're telling me you see an Alphabet bullish trade. Let's hear a little bit about this one.
Yeah, not surprisingly, because out of the Mag 7, this is the cheapest on evaluation. Their forward PE is only about 16.5, 17 right now. with this 3% slide. Now, it's not down as much as some of the other ones because they don't have physical assets, right, that might get tariffed, although they still have regulatory hurdles, not only here in the U.S., but overseas, and that tax booth that they have set up over in the EU against all the tech companies. But this might be one of those companies that might be immune to some of the tariff headlines and the tariff environment that we're in at this point, just because they don't have that. And advertising dollars probably going to pull back, right? That's how they make most of their money, besides maybe the cloud businesses on advertising. You know that's going to pull back if companies are going to pull back in this certain environment. But at the same time, when it's the cheapest out of the Mag 7, really good earnings reports the last couple. But the only, the big threat that a lot of people have focused on, and why this stock's down 26% off those all-time highs from just a couple months ago, is the fact that they think that their search business, which is, a big generator, nearly 70% of their revenue, is going to get hurt by the AI agents and the ChatGPTs and the Groks of the world. And so far, we haven't seen that yet. So it hasn't played out yet. So we'll continue to watch this one. But there was some bullish activity in here today. Not surprising. Somebody trying to maybe buy this dip. And this was out in the May monthly cycle. So basically 42 days to expiration, 43 days to expiration, where a trader bought 6,000 of the 150 strike calls. Paid a pretty hefty debit for this one, $9.70, just due to the fact that you got duration on this trade and implied volatility levels are up. But that break even for this trader where they start to profit, 159.70 over the next 43 days, that's about 5.5% above the current share price. You're going to capture that earnings event at the end of this month also, so that might be a catalyst to the upside. But yeah, somebody buying calls in here expecting a rebound over the next month and a half.
All right. Thank you for that, Tom. I mean, there's so much going on today, and I think about all these retailers. And, we finally got the list that we discussed yesterday, country to country, and how much each country was going to be facing. And a lot of these countries, Nike in particular, is getting hit today, and that was down throughout the morning. But, Vietnam, 46%, Cambodia, 49%, China, 34%. And we know a lot of these retailers are manufacturing abroad. And I'm sure Nike falls into that, and that's why it was down 10%. Right now, down almost 13%. Yeah. But you found a bullish trade here on Options Corner. So let's hear a little bit about this one.
Yeah, any bullish trades in Nike over the past couple of years have not worked out for traders because this has just been a falling knife stock. And this is, this 12.5%, 13% slide that we're seeing today, putting it at nearly over 7-year lows for the shares at this point. Now, they tried to diversify their supply chain. They got out of China a little bit. They tried to diversify into Vietnam, Malaysia, Cambodia, you mentioned, some other countries in Southeast Asia. The problem is these reciprocal tariffs are even bigger on some of those countries, and that's where they make a lot of their products. I think Vietnam basically was about half of Nike's footwear in fiscal year 2024, so that's a concern. But not surprising with the stock, falling as much as it has over the past year, off over 40% from 52-week highs. RSI is below the 20 level, so on that relative strength index on a technical basis, anything below 30 is considered oversold, right? Well, this one's below 20 at this point, so severely oversold. Doesn't mean it can't go lower, but I think that's maybe why some traders may be taking some shots here. I saw some unusual option activity out in the April 60 strike calls that expire in 14 days. Trader bought 9,000 of those. Average debit of about $1.40 on them. So the break even for this trader where he starts to profit 61.40 over the next 2 weeks. That's about 8% above the current share price here in Nike. And surprisingly, well, maybe not surprisingly, call volume is about 3 times normal daily average volume. So maybe some other traders out there trying to pick up some calls here with the expectations that maybe we'll get a rebound soon.
All right, Tom White, thank you so much. Great to have you on today, especially today as we're seeing the selling and the bond yield here at 4.04%. It's a day on Wall Street that goes down in history, at least for our year, that's for sure. We'll have a lot more that we'll cover here. Thank you to Tom White and Options Corner. We'll continue our tariff coverage here and analyze the impact on the tech sector in particular. Watch list. We'll be right back.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street.
Okay, this has got to be it here.
3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes.
Kevin Hickey.
On Fast Market, weekdays at noon on the Schwab Network.
Fast
I'm
Market,
Kevin
ready
Hickey.
for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Well, it's been that last trade didn't work out too good. Maybe this one will work better.
Welcome back to the
54.50s.
We're live on the floor of the New York Stock Exchange. So glad you're with us. Our next guest, Tim Abronowitz, is with us, Chief Investment Strategist, Innovator ETFs. Thank you for being with us. Some of your thoughts here, because a lot of folks had targets at the end of the year that were looking much higher than current levels. How are you feeling now? I think you were in the higher end, maybe above 6,500 or so. Tell me a little bit about where your targets may be now for the year end.
Well, Nicole, they're certainly coming down, and I think everything that has transpired is just something that you're not able to foresee, especially the level of tariffs that were announced yesterday. I think surprised everyone, as we're seeing with the market activity today. But coming into the year, one of the things that we were warning about was just how high sentiment was, and we thought that
I'll have a tighter stop on this one here.
High, but with the tariffs announcement, it really just puts a wrench in things because it was running so high. Any little bit of bad news had the ability to derail valuations, which were so high, and that's exactly what we have seen. So we actually think now you're going to continue to see valuations derate further from here. What was announced yesterday is going to be a big hit to economic growth. That picture is darkening. So we would not be surprised if you see another 5 to 10% hit in valuations from where we're at today, just given how high the starting was.
Understood. When you look at tech stocks that have been beaten down, are you starting to say, I'm seeing some opportunities?
Not quite yet, and I think for a couple reasons. One, if you
look $6 and all of a sudden it drops to 5.
The hardest right now. It's those areas where valuations have run up significantly, and tech is obviously leading the pack there. So that's one reason. I think the other challenging piece here is what these tariffs are doing is they're really just freezing corporate spending, they're freezing investment activities. So a lot of that CapEx that would really benefit a lot of those tech stocks, we think you're going to see a pullback on that. So I don't think we're out.
I think what Trump said last night.
Rating, even just look at the Mag 7 right now. I mean, we're still trading at 26 times earnings or so. We're not cheap, and that is to do with the fact that we were starting at such an extreme point. So I think there will come a time.
If this doesn't hold, I'm going to automatically get out of it.
Right now, uncertainty is going to be the name of the game. It has been over the last 2 months, and that's really not going anywhere anytime soon.
Fuck.
Understood. I mean, the tariffs, how much more impact do you think they could have? Is there any way to guess whether it's on technology or, I mean, retail's getting hit hard in particular? Which
Well,
sectors do you
hell.
think are getting hit? And, I mean, we could see which ones, but could keep getting hit. Is there much more to go to the downside, maybe?
Well, I think retail and discretionary stocks in particular, I throw tech in this category as well, are going to see a big impact. Specifically, you look at those first two categories. We have a consumer that's been dealing with high prices for the last couple of
320
years.
maybe?
It's pressuring them, especially that mid to lower end consumer. You look at the tariff rate on China alone, that's going to have a significant impact on U.S. goods. That's going to break a lot of consumers if they're not already broken already. So I think demand destruction, you're going to see a lot of that in retail. You're going to see a lot of that in discretionary stocks.
Kind of wants it hold it here.
I think it's had a tough run this year. I would anticipate that trend continuing. With the pullback,
Needs to hold right here.
Just more room for valuations to continue to derate. I do think a lot of the pockets of the market that have been doing well thus far this year, defensives, utilities, staples, are going to continue to shine. We've also seen about $6 billion
It's a double bottom.
going into defensive
All day long. It's been a
this year. We would
tweezer
anticipate
bottom.
that trend continue as investors are really
At 54,
going to
20,
flight to safety,
63.
flight to quality.
Okay. And then when you look at the tariffs and the story with tech in particular, I mean, because you're talking about the different opportunities.
That's right where we
later
landed.
in the year, what are you hoping to see?
There we go.
We hope to see some type of pullback
690.
from where we are now, and we
Boom,
were
baby.
going into yesterday that the announcement was going to be worse than the market was expecting. This was far worse than we had even anticipated going in, and a part of this is we view this as really the starting point for negotiations. Trump is a master negotiator.
Trump's a master negotiator, huh? So I went to the hour. I think that was the hour. And here on the hour, we got the body right there, the body right there, and then that body was right here, and it bounced on up. Now they're at 740. So I made back that. You see what I'm talking about, Richard? It's that body there and that body right there. That's called a tweezer bottom, and that body that was right on that one too. And that's the hour time frame. And this is the pivot point. If we hit it, but didn't sell it, so it really needs to bounce right here. If it bounces, I'd wait for it to hit that again. Or it holds its head and shoulders. I gotta go pick up some toilet paper. Thought about if I didn't get this trade right, I'm gonna get out of here and get it. Tried to sell it at $7 and didn't give it to me. Man, it sucks having broken glasses. We gotta live like this for probably till next Friday. Trying to figure out a way I can not let it bother me as much. Just feels weird not having that other side on my face. Breakout. snake with a head and shoulders. Okay, I'm at $8. Now, if you're in this trade, we might go higher, but I don't know. I'd take profit. Out at 8. Got that one, Richard. Oh, 50, 54.50. Damn it. I typed in the wrong one. We're at the 63 now. What did I put up here? 60? Ah. I did put 60 in. There they go. 990. She's live.
For their own defense, maybe even discussing slightly less regulation of the tech company, U.S. tech companies operating there, maybe some relief on some taxes, but they can go the other way as well. So we'll want to watch the tone of those negotiations. Some countries have already started. On Tuesday, before these tariffs were released, Israel, which largely is a free trade agreement with the U.S., but does have some tariffs in some categories, came out and said, we are lowering all tariffs on U.S. Imports from the U.S. to 0. So there are some offers out there already on the tariff front. There are some geopolitical considerations we could see. We want to see how that's shaping up. What is the tone we're hearing from other leaders around the world? What we heard from Claudia Sheinbaum in Mexico was very little. She kept, very quiet, did back channel talks with the Trump administration that seems to have paid off with no change in tariffs on Mexico.
So there was concern, how we saw Europe doing so well and the stock market doing so well. And people are starting to say maybe Europe won't get the same revenues or won't be in the same spot anymore, that it's not necessarily the bright spot going forward. Would you agree or disagree with that?
Agree.
Well, there are no winners in an all-out trade war, but there might be some relative winners, and I think Europe could remain a relative winner. Look, when you take a look at the exposure of the whole EU economy to the U.S., it's about 3.5% of GDP. But domestic spending, consumer spending in Europe is over 50% of GDP. And they've just approved a big defense spending a bill, a public investment package to the tune of maybe upwards of 2.5% of GDP. So more than an offset of the amount of trade we're looking at. And what we're seeing is that those stocks in this chart here that are more exposed to European spending, more domestically focused stocks, are really doing well relative to more internationally exposed stocks within Europe. So those more concentrated European growth can continue with all these additional fiscal and monetary stimulus. Expect a couple more rate cuts as well. I think that can maybe set up Europe to fare better than the U.S. And so at least on a relative basis, European strength may continue.
And what about the dollar? I mean, I just finished talking about that, but when I saw it at 101 today, I haven't seen it at 101 in a long time. Are we concerned about that?
Well, usually you'd expect to see the dollar rise when the U.S. imposes tariffs. That's one way the market adjusts to tariffs. They basically, when you apply a tariff, basically the currency moves to negate the tariff. But that's not happening this time, in part because there are genuine concerns about U.S. economic growth, given the consequences of these dramatic tariffs. And so that seems to be weighing on bond yields, which are down, oil prices, which are way down, genuine concerns about economic growth here. And I think that's what's weighing on the U.S. dollar today. And one of the reasons why, if you look at any of the ETFs that track international markets, I'm just looking at EFA, it's the biggest one out there. It's down 1.5% today, while the U.S. ETF is down 4%. And that can be
we're back to 7.
We're talking about some of that coming from currency, some of that coming from the fundamentals I spoke of.
Yeah, understood. So at this point now, what should investors be
Randy, $7.
portfolio?
So we talked about more domestically oriented stocks in Europe. That would apply to the U.S. as well, looking certainly more of a slowdown in the U.S., but looking at companies that are less trade focused, I think could
Gotta hold this 9.
Also thinking about travel spending at destinations outside the U.S. So looking at hotel, leisure, and entertainment industry within the consumer discretionary space outside the U.S. There are, Canada, for example, is the top source of international visitors to the U.S., but bookings for this summer's travel from Canada are down 70%. So consumers are already boycotting on a travel basis coming to the U.S. So where are they going to go? They may go to Europe. France, Italy, Spain are among the top destinations for Canadian and other travelers, and that industry within that economy could do fairly well. So that's one thing to consider here if you're looking for relative safe spots around the world.
Right, understood. And what are you watching? Are you watching any sort of, you know how you always watch, you watch the cardboard boxes, you're watching the supply chain and the glut and things like that. Are there any sort of secret indicators you're keeping an eye on these days?
I don't know about any secret ones, but I'm definitely looking at booking for cargo ships, right? So are businesses that source products overseas, are they booking those? Are they holding off? Are they slowing production? Or are they kind of continuing production in foreign markets, hoping that a month from now, maybe there'll be respite from some of these tariffs, and then they can begin to ship the goods. So expect an air pocket in supply chains right now for a month or so as companies hold back on shipping anything, wondering if there'll be some resolution. After that, they might need to make some more cuts in terms of their overseas operations related to their U.S. sales. So I'm going to watch those shippings very closely, and you'll see that in the order bookings. If the bookings really drop dramatically and the price to book a container ship drops pretty sharply, we'll definitely be feeling that.
Right, understood. Jeffrey Kleintop, it's great to see you, Chief Global Investment Strategist at Charles Schwab. Jeffrey, thank you. Still ahead, we'll bring in our panel. We got to break down the fallout that we're seeing from RH earnings. Have you seen this stock, which is down, I was going to say over 40%. It's certainly having a tough day. The implications of the tariffs don't help retailers at all. That and much more.
Boogie.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab.
We're having technical difficulties.
They can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
We're experiencing technical difficulties.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren.
You must be filthy rich.
Someday it'll be their turn.
Daddy left you well.
We're looking at RH shares dipping to 4-year lows, subpar earnings, the implications of the tariffs that were issued by the president yesterday. RH is selling off in a big way. It's down about 40%. The different retailers are under pressure as well. Eric Clark, CIO, Brands Portfolio Manager, AccuVest Global Advisors, and Greg Portell, Senior Partner, Global Markets Lead at Carney. Eric, Greg, thanks for being here. Eric, your thoughts here?
Well, RH has been off of our list for 2 years. We just, we don't have a lot of confidence in management, frankly. This is management miscues over and over again. They continuously move the goalposts and use excuses. And it's a great business for a certain time of the economy. And RH should really win when the mass market affluent can have the confidence and have the job security to reach up into an RH. And that's just
come on, break it.
Now. And the mismanagement of the business has been as stark as I've ever seen. I mean, I'd like to introduce Gary to the folks at Apollo, because they're going to need to do a debt restructuring in some point.
980.
Greg Portell, what do you think here? I mean, the earnings miss plus the tariff concerns. What did you think? Is RH particularly vulnerable now?
I think Eric hit it on the nose when it comes to their exposure to the consumer market. What was interesting in their announcement was they did highlight some of the ways that we see management teams trying to deal with the tariffs. One, they've moved a lot of their production out of China, and two, whether it was intentional or not, they have inventory on hand that's already been landed and therefore
3-year low.
Tariffs. So whether it was intentional or not, they do have tools at their disposal to try to weather through some of this tariff.
Man, this thing's flying all over everywhere.
Is there something that's going to change?
I'm going to take my profit.
I mean, is there going to be a moment here where you say some of these retailers really have a lot of great opportunity for growth and all that? Or are you feeling pretty dismal at this moment?
Feeling pretty dismal.
The inflationary pressure, the tariff pressure, they have a lot of headwinds. But more importantly, the time that is being consumed in these management teams to try to navigate the tariff situation is very consequential. Our estimate is that about $100 billion worth of lost productivity is seen just in the U.S. market trying to navigate.
No one sell it, and the thing's going to pop.
Challenges. So it's not so much that they're.
Get ready, folks. I'm getting ready to put a fake sell in. See if I can trick them this time. $9. $9. I'm out. Real time. Now watch it pop. Well, I made up for the loss on that 2 trades ago.
Amazon that's down, but I'd be adding to that one. So it's just not, don't be broad in retail right now, because we got to wait for some of the dust to settle, and earnings are, a month away. So we're going to get some great information and guidance. And I certainly don't think guidance is going to be ragingly positive. What management team would be out there pounding the table on fundamentals, given how much uncertainty there is? But you get great prices when uncertainty's there, even in RH, candidly.
Right, understood. I mean, and where does, Eric, the dynamic brands, HSUTX, when we're looking at that, tell me a little bit about that.
Yeah, sure. We focus on consumer spending trends and invest in what brands are the most relevant, the most dominant in each one of those spending categories. And then we decide, based on where we are in the economy, what spending categories are the most intriguing. And we have been definitely tilted towards things that I have to get: Costco, Walmart, Amazon, TJ Maxx, things like that. We have a little bit of luxury exposure because they tend to,
okay, here we go.
Getting hit today with tariffs, but we are not broad in the
Rob, off the 50 maybe?
Across categories, because consumers
or is it going to come down and hit the trend line?
About where they're spending. So if we get to a little
Damn
bit
thunder.
better valuations, we'll probably get more broad in our exposures. But right now, we're pretty clustered in the needs part of the spending.
What was that?
Yeah, so maybe this could be, as you said, Greg, a lasting impact on the corporate earnings, the lost productivity, some of the challenges that some of these companies are. Advisors, Greg Portell of Kearney. Thank you both for being here. Glad you're both here today. Folks, thanks for being with me here.
$5.80.
The New York Stock Exchange Schwab Network. We're down 1,413 points on the Dow. The S&P here is down 4.1%. Market on close with Oliver Rednick next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Break it. Break it.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next
Ginny, I
trend.
love you.
Available anytime, anywhere, on any device for free.
Can we go out and
Empower
have
your
soup?
portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
Jenny, I'm Jenny Horny.
Only on the Schwab Network.
My name is Jenny Horny.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your
You
streaming
spell that
devices.
with an IE or a Y?
Schwab Network is available anytime, anywhere, on any device for free.
We need to break out.
No place better than the Schwab
You can break
Network.
out. Oh, Dad. Dad left me a bunch of money.
Advisor Jennifer, she was with me with the journey.
It was a journey. I didn't have to do shit. I don't like my dad commercials on here. I still have flashbacks and nightmares of Daddy's windows. If Dad was still alive today, he'd be proud of me. Dad used to say, I'll do your windows for $100. You don't need to pay $400 to $500 a piece. We got rich doing windows. Okay, we're back to 580 here. This ain't right. Come on, beach. If we don't hold the 50, I'm stomping out. Because I can't hold these anymore. They drop too much. It is now power hour. Post 1 minute. We have resistance coming up. Either get out now. We might have 3 or 4 more minutes to squeeze this trade if as long as it holds the flag at 680. There's $100. And we're squeezing between the 200 and the 50 SMA right now. Uh-oh. Don't drop it. You some bitch. What was that? Huh, interesting. Jimmy heard a pop. There we go. We're breaking. I'm hearing Intel is popping. Are you serious? I looked at Intel earlier. We're now at 720. Oh my God. Intel and TSMC reaches primary agreement for a joint venture. This is huge. Did you see it? Intel. This is a big frickin' deal. We're now at $7.20. Are we going to break this flag? Yes. Jimmy said we were up to a squeeze. If you did not notice, we are. We are out of the flag now. We're approaching one-way 720. Prepare for a landing. Everybody have your seatbelts on? Answer yes or no. Look at that knife. It's not playing no games today, man. You got to take your money and run. It's too hard of work. It should be a lot easier if you know what side of the street I'm on, man. Oh, Johnson, oh, do. Praise the Lord and what they do. La 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 la. Oh, my darling, my darling, my darling Clementine. Now I want you, my darling, my darling. My darling Clementine. Da love forever. Any option prayers. Oh, my darling Clementine. The question is, are we going to hold the 50 SMA here, Robbie? Kroger up today, huh? How dare ye? Okay. Okay, here it is. We have 3 black whores right now. Can I do 3 in a row? I think I will. Jimmy got in at $4. Let's take it away. It's a huge risk, I don't know it. This will be my last trade of the day. Does anybody see the 3 black whores? Remove the drawing. We're at 470. I have to say, room, my singing has improved a lot since I've opened this room up. And it's the next song. We'll go to Cleopatra. Brace yourself, honey. She was an Egyptian queen. Her name was Cleopatra. She fights for her throne, her family and legacy. Then one day, she met this young man named Wash, and they went into the deep, deep sea. Her name was Cleopatra Howard. The crowd's going wild here at the sports arena. Jim entered the 54.50s again at $4. And right now they're at $4.40. He will not take a loss on this trade. I said I would not take a loss on this trade. If I do, it'll be the last trade I'll ever make. Oh, God. It's not going to hold. Dow Jones is down 1,440 points. Damn. I got to get a case of toilet paper. I forgot about it. I should have done it at lunch today. Well, frick. It's not what I wanted. Damn, what a shakeout. All the way to my support level, and it just triggered it. This is a guess. $150. Wish me luck. Damn. Man, what a day. I just feel like I'm playing today. I'm not playing, but just pissing in the wind. $213 average. I have 4 contracts. $860. No, I didn't see that coming. $215, come on, baby. Now's the time to get out of it, just to break even. Come on, give me some satisfaction here. 235. Now, if I was to sell it, it'd be now. Well, then. If I was to sell it, it would have been then at 250, but I don't think I could have got 250 out of it. Maybe, but market would have gave me maybe, but man, these things so flexible. No. Always clean. This is Jim. May I help you? Retail traders. This is on a recorded line. They hang up every single time. All you gotta do is say recorded line and they hang up. It is recorded. Am I correct? I'm not lying. I think it's very professional. To be honest with you, with your spammer. And ICCT's been a hot one here lately. Come on, pieces of crap. I think Washboardjim's got to sell this or he's going to be in bad trouble. $375 down the tube. Come on, baby. I'm all on hope. The question is, are we going to have a nice close? Does anybody want to answer that question? Are we going to have a nice close? Who wants to answer it? Nobody. I think we are. We got to break the 9. $50 degrees outside. Oh, come on. They say this is the worst day we've had since 2020. I don't quite remember what happened on that day. COVID. I don't know if I want to break out of this flag or not. We'll put on some shoes, get ready for my trip. Because they close at 4. Give me $2.13, please. Today's a big learning lesson. Be patient, don't take too many trades. I took one loss. I almost took another big one if I didn't hold it, but now we're at the end of the day, so you got to really change your tactics here. There might be two of them today. She used to love me, but now she doesn't. We got a triple bottom, spelunk.
We're dumping stocks, we're seeing stocks dump, but until he changes course, I don't see why this changes.
Okay, so what about the other side of a big move? I'm kind of, the strangle mindset. You've got the short side there. Let's go to maybe go to the other side. What if you want to be long here, Danny? How do you read that? How do you play that?
So, I mean, China's acting well today. EM's acting okay. So
Okay.
I would look at.
I'm saying, what if I want to be long What if I want to be long S&Ps? What's the way to do that? What if I want to buy U.S. dip? I know you're making the point that you should rotate.
I think you buy Qs.
You buy Qs just straight up?
Yeah, I think you buy Qs, calls, call spreads, and again, that's where I think you look a little bit shorter dated. Maybe you look at April upside in Qs. That you're going to miss earnings, but you'll have CPI, and then you'll have this April 9th date. But look at where the most pain has been, right? If you're looking, Qs now, I think are off. Hold on, let me double check here. I think they're off 15% from the highs.
Yeah, we're pushing 20. We're pushing 20. I checked it this morning.
Yeah, I see 16 as of now off the highs. That's where I'd look. And these stocks, do I think Meta is going to get killed on this? No, but I get that ad spend might come down. I get the risk to Amazon, but these are really good companies that are for sale right now and have come off a significant amount. And I think part of the reason they've come off is because they're widely owned. This is the opportunity maybe to start looking at those really high quality names. And there is a scenario where this actually works out well for a Meta where and
so calls against it or something?
I think I'd buy call spreads, like a 470, 480 call spread for April. I think that's around $2 to make 10.
Looking for juice. What about buying the stock? With vol elevate, buy the stock, sell some calls against it. Pretty juicy premium, right? And even to the upside, there's some lingering there.
Yeah, I think that's fine in names like Amazon. I don't know if I would.
If I'm a safe one, if I'm not as wild as Danny Kirsch.
Yeah, I mean, I think that's totally reasonable. A name like Meta, you don't mind owning and writing calls. I wouldn't sell calls in front of earnings though.
Okay.
These names because they've had, especially you've seen it when they've had these big sell-offs into earnings that tend to.
Meta's
surprise the upside, and people use this opportunity to get back in these kind of names. And there is a scenario too where like the EU maybe cuts taxes, these digital taxes, as part of the negotiation, where
Meta's still up
money quickly
big.
flow back into these names that have gotten killed.
Still up
You are the
500%.
man. You called a big move in vol.
Meta is. I mean, I'd buy Meta if it was down here for sure. Or maybe under 500. Right around 500, 487, 490. I'd give it another $40 dip. But I'd really buy it if it was down here. There would be no in that because it's still up 500%. Yeah, I'd buy it in here for sure. These guys, they don't look back 3 years, I don't think, and say, wow, this one's up 1,200%. This one's up 2,000%. If a 50% pullback, put the fibbies on it. Yeah, right there, man. Either one of them. That's 61. That's a good pullback right there. On the fibbies, 61. 38% pullback. And then the 50% would be a double bottom. See that wick right there? I mean, that would be ideal. It's weird. Stock can run up 500%, but when it pulls back, it's only 50. To me, that never made any sense. But I don't know. It's a sucky day.
Network app and join in on the latest market trends.
I love you.
Anytime, anywhere, on any device for free. Schwab Network.
Jimmy took a loss.
Whether you're an experienced investor or just getting started.
2 red trades today. So that's 3 in 2 weeks. That's unusual. Yoko's here. 1% away from a crash. Randy. Are you there today? Tell your wife I have 19 chicken soups in my freezer.
Experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab. Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Stocks are at the lows of the day in a big-time sell-off after tariffs. Mr. Kevin Green joins us, our senior markets correspondent. My MicroStrategy puts are feeling good, but the rest of my portfolio is hurting, KG. I wish I would have listened to you yesterday. What was it, a Head and Shoulders you dug up under a rock?
Yeah, that was on the 5-minute chart, the intraday chart. And obviously, it held up into the equity close, but then it broke, and once again, going below that key level that we had. I mean, these numbers are starting to get a little insane when we're looking at it, but obviously we saw a flush, and it continued to happen even today. If we're kind of looking at it on an intraday basis, this is a very big key area for us to be able to hold here. Now, saying that down 4.6% probably doesn't mean a lot, but it will actually either create a little bit more of a flush to the downside here if we break this 5,400 level, moving down to 5,375. But if not, if we're able to hold, maybe we do get a little bit of a relief going into the equity close here, Oliver. But there has been just aggressive selling, and
Oliver,
one of these days, it's a really good example of how the markets can actually react here. We had this flush to the downside, and we saw some buying pressure happening at around 54.20. That was a level, a small level here that actually did react, and we did see a nice little push to the upside. But obviously, we had this, indecision candle, doji. We had a hangman candle. We had a huge flush to the downside.
What
here.
the fuck?
Tried to double bottom, and then we just had a false breakout signal, and then broke to the downside. And that's kind of where we're at near those lows here today.
That's strange.
A little bit more uglier going into the close. I would say it actually could, because we still have advancing stocks compared to NYSE advanced declining stocks. If you look at the net here. When we started to drop, that drop was actually based on a lot of the larger cap or mega cap names, and we actually saw advancing stocks kind of continuing to rise to the upside. You now saw a little bit of a break of that correlation, and now that's starting to come down and go lower. But if you look at that chart,
ADD was lagging basically.
Right, but if you were at the lows of when we got to 54. 5420 earlier today, you saw that advanced that ADD line, if you will, right? Pretty much kind of hit those lows. We're not even near that yet. So could we get more selling pressure? It could. It's probably not going to be the mega cap names. It'll be everything else under the hood here. But 5400 is a pretty decent level when you're looking at positioning here. Let's see if it's going to be able to hold.
5420, the point there that we found some support. So I guess maybe if you're going for like a quick scalp, that's possible the upside to go revisit that. Is there any hope to firm before the close, KG? Or do you think people are just going to dump?
I don't know. I think that there's probably more of a risk of either pen to the 5400 or more of a move to the downside, honestly. It just kind of depends. There could be a risk covering type of trade that does take place. Yeah, you could rocket higher. I would caution, though, if you're going to do these swings, you got to trade directly. If you're trading SPY, if you're trading E-mini S&P futures, the options, because we're so kind of close to the close here, Oliver, the pricing, especially if you're looking at futures options, but even SPX, the pricing is not going to give you probably that much movement unless we get a massive move to the upside, like a 30-point move. It would be a little bit dangerous here to try to play with time value going into the close. And that's from somebody that does trade options into the close all the time.
Yeah.
Today, you're seeing a lot of slack. You're seeing a lot of slack right now. You're not seeing the deltas, the Greeks. I don't want to say they don't mean anything, but you got to discount it a lot more here because these market makers are trying to defend themselves a little bit more.
I got a lot of bodies on the field in that last 30 minutes of trading for me. The gamma stuff, talk about it though, because that's kind of how this segment originated itself, that word that a lot of folks like to look at, and I'm curious on the charts. One of the things we've been talking about with volatility is that VIX didn't get to the March highs, it didn't get to the December highs. Something that you and I talked about this morning. Danny Kirsch also pointing it out. Is there any connection to the market maker exposure on the gamma side that there's some wall we haven't broken yet? And if it does, that's when you do get like another fresh VIX breakout. Is there anything in there?
Yeah, so there are some levels to the downside to be mindful of. So I know the previous segment you guys talked about, I believe 5,000, around that 5,000 level. That is actually going to be key. There has been a straddle position that has been in place for, I've been following it for the last 3 years. Somebody continues to roll it, both put and call straddle there, where there's a significant amount of positioning. And then over the last, I would say 3 weeks or so, somebody has been buying the 4650 puts pretty much every single day, way out of the money. But they're probably actually making a little bit of money on them because obviously the move to the downside here, they're probably getting some of that gamma exposure to the downside. But if you're looking between now or where we're at right now, 5,500 was kind of that key level, and you're just going to continue to kind of ramp down from here. I would say 5,000 is actually really the next big area of focus for these markets. If we are able to get down to those levels there, that would be your major fracture of this market.
If then that's a far ways away, it kind of closed me out with a thought about how to, or maybe not, I guess it depends on how you define.
I'm just playing with you. Yeah.
Then do you, if it's not that far, then should we be owning volatility if that's going to break?
Yeah,
if it's
that's
so close
a really
to breaking,
good question.
should we own vol then, even at 30?
Yeah, that's the problem that you have though. Vol at 30, you can go long vol right now, but there's a reason why it's at 30. And I don't know what that reason is. There's a reason why it's not really ramping up. And the concern that you have is, yes, markets can continue to go down. Vol can continue to creep higher. But usually if you're a vol trader, you don't like vol creeping higher. You like vol spiking, and then it kind of reverses lower. So it makes it a little bit more of a harder trade. Then you kind of talked about some put spreads. In the previous segment, that's probably the better route to go rather than just going straight long wall, especially if you're looking at VIX options. Right now, they're going to be completely blown out. And even trying to do VIX spreads right now because they're European settled, you're not going to get any real premium on them. If you try to sell credit spreads, you're not going to really get any good debit there. You're going to be paying a hefty premium. At the money you're probably paying right now, I'm just assuming you're probably going to pay a 70 delta, 75 delta for at the money put spreads and VIX, which is not great. And that's because you don't have the exercise feature with them. So if you want to be able to own vol, I would probably own vol more in the, if you're looking at SPX, SPY, Qs, You could also look at owning vol in small caps. Actually, in small cap vol is probably the juicier play right now, just because it's already in correction territory if you're looking at the Russell.
Yeah,
that would probably be the main play.
6.5%. Hey, could you last point? I hope that this is not the technical read. A lot of folks say you can't do technical analysis on the VIX because it's mean reverting, whatever, fine. But just for giggles, if this chart has this, resistance level on VIX, basically at 30, boy, I hope that this has not been a creep build up for a breakout, man, because then that looks really ugly.
It does. Look, can VIX go higher from here? I would say yes. Usually, Oliver, this
usually bet against it. Yep.
Right.
That's
Now
exactly what we said in March.
now you sell vol. Here's the reason why. Vol can come down and we can still be at around 5,000 or the 5,400 level, right? Volatility needs something to feed on itself. You need a catalyst, and it's got to be more than just price. You're going to need to have a news catalyst. Now, if you think that there's going to be more bad news coming in the picture here over the next 24, 48 hours, 2 months, 3 months, yeah, own vol. But this kind of gets you to the scenario where you have to debate if you want to really sell vol or really want to own vol right now. I'd probably look at those other ancillary areas. Russell Premium is probably the
preferred
bigger
playground?
beta play.
Okay.
Yeah, it's probably the bigger beta play when it comes to volatility right now.
It sounds like if you want to express, though, a positive view, it's probably vol fading rather than owning equity, I guess, which might be a riskier bet. But we'll see. Thank you, KG. Appreciate it very much. Like it. All right, we're going to talk some policy when we come back. One of the headlines that's kind of been under the radar has been potential truce between Ukraine and Russia. We only got about 13 minutes left, so let's talk about Matt Gertken joins us, Chief Geopolitical Strategist at BCA Research. Matt, thanks for being here. Sorry we got kind of bogged down in a lot of the trading talk. It's just one of the nastiest days for markets in a while, but I do think this story needs some attention.
You got bogged down, buddy.
If there's any hope for something positive on policy front as far as Russia and Ukraine go?
Yeah, I do think a ceasefire is likely to occur probably this year. President Trump and the Republicans won the election.
Don't waste our time on this.
Support for Ukraine, which forces Ukraine to negotiate, and Russia is likely to accept that. If they throw away this olive branch that Trump is offering, then the American elite will be all aligned. They'll go back with Europe. They'll spend another $200 billion on Ukraine, and that's a big pain for Russia. So it's likely we will get a truce, and it's one reason why European assets are probably doing pretty well despite the trade war.
Okay, that's an important point here because that gives you a catalyst outside the trade war that could help explain maybe some areas of opportunity within this big market route. So that's helpful. Which countries and kind of what, is that just kind of the commodity front, basically anything that flows through Russia, Ukraine commodity channels?
Well, it's interesting. On the commodity side, you get sort of mixed results. For example, one of the consequences of the Ukraine war was wheat prices and natural gas prices in Europe spiked. And then they spiked again when there was a period of doubt, particularly late last year around the U.S. election. Now that should come off and that should fall. And if you think about it, bringing Russia back into the fold of the international community, even if it's not entirely in that fold, but if it's just a little bit more active and a little bit more involved, that means it can export more of its oil. There's not going to be as much sanctions compliance. Some of the sanctions could even be removed. Natural gas, Russia's still able to export natural gas. So you're adding supply, actually, in those sides, and you're reducing geopolitical risk overall, the risk that the war could have spilled out and caused a conflict between NATO and Russia. So that's also not necessarily positive for gold. So basically, I see this more as an opportunity, removing risk premium from European equities and Eastern European bonds and equities, and not necessarily positive benefit for commodities.
Okay, I love that. Exactly where we're going, like it. All right, then tell me back, to circle back then, kind of the logic of potential ceasefire outcome. What exactly is the corner that Putin's backed into that you think is going to pressure and how to do that? Is that just basically oil?
Well, actually, yeah. The oil price move today does encourage him to accept the ceasefire. But well, first of all, I think you're right to use the term ceasefire. Ceasefires come and go. They're pretty shaky. They're not very reliable. And that is what we're talking about here. A peace treaty would require a much bigger settlement. That would require Russia to give back some of the territory. And then in exchange, they could get serious sanction relief. But I don't think that's really on the table. here because they don't want to give the territory up. They think that territory belongs to them. The armed forces, killed a lot of boys and spent a lot of money trying to take that territory. So we're stuck with a ceasefire. That means that come around 2028, the next U.S. election, it could be pretty shaky. It may not last very long. But the reason why Putin wants to take it is to reconstitute his forces and take a breath and probably pivot toward the economy a little bit, because the economy is taking a pounding with high inflation, with all this loss of blood and treasure, and of course, as you mentioned, with weak oil prices.
All right, bullish Europe, I guess, another arrow in the quiver of the bull case. It sounds like that's the main argument here.
I do think that's been a key driver this year, and let's not forget that it coincides with a structural change to fiscal policy in Europe. Germany removed the debt brake from their constitution, something we've been tracking for 6 years, finally occurred. It's a major move for a proactive fiscal policy in Germany. They've got fiscal room, but also they can help the European Union as a whole be more permissive toward joint debt issuance, which means that other countries that have less fiscal room can also issue debt and expand their deficits a little bit. So this is generally positive for demand on the European continent. They're still going to get pulled down, these assets, if the United States stumbles into a recession. We should remember that. It's still a cyclical economy. But when you're looking out for the medium term, the case for Europe is looking good if there's a ceasefire and a proactive fiscal policy.
All right. Hey, I love to see U.S. stocks do great. I'm happy to see European stocks do fine. So we'll take that. Appreciate it. Matt, good stuff. Excellent contribution for us. It keeps some scope with the rest of the world. Chief geopolitical strategist at BCA Research. Let's close this market out here. A big picture discussion. Nate Peterson joins me, Director of Derivatives Analysis at the Schwab Center for Financial Research. Nate, the main question we've been asking from a vol perspective, I want to get your take on is, what is the meaning of VIX still staying below 30, which is the March high for volatility, which was the December high? If we keep going, we might break it, but so far today has remained under that. What does that tell you?
Well, it doesn't. It tells me, look, we're up 36% of the VIX to 29. We're at the highs of the day here. That conveys, obviously, we all know that we didn't get what was expected or anticipated from the rate announcements on Liberation Day yesterday. But we were coming into that event at 23. Why is it not higher? This wasn't a shock that just came out of the blue. This was a known unknown. So we knew we were going to get some kind of tariffs or some kind of announcement. They were just higher than anticipated. What does that mean? It means 30% up on the VIX here. But closing at the highs of the day, that has me a little bit more concerned. S&P closing at the lows. I think the big question for markets, Oliver, is just basically, if we take the president's word in terms of what he said in terms of negotiations, and if we look at the responses and take the words of the likes of Canada or what China is saying in response to the tariffs and over in Europe, the longer that we don't have any kind of revisions lower on these tariff announcements, it's likely just going to, be more bearish for stocks. And, I think that's what the VIX is communicating here. So I think there's, I don't know what percentage of the investing community that believes this negotiating tactic, but I think it's relatively high. And I think we're just still figuring it out. How much give is there in terms of the downside in the market for there to be, an urgency to these negotiations? We, obviously haven't seen it yet.
Haven't seen it yet, part Nate. What do you see then as kind of the timeline for events? To KG's point, volatility needs something to feed on. And what would that be? What kind of headlines do you think? Oh, we got Mike Townsend joining us. That actually might be a question for Mike. Managing Director, Legislative and Regulatory Affairs. Boom! Right on cue, Mr. Townsend. How's your calendar look for a week in terms of events on which volatility could feed?
It is a pretty crazy, it's been a crazy 24 hours, obviously. And I think we'll continue to be in this crazy spot for a while. And just picking up on something Nate was just saying, I think this question on whether this is all a negotiating tactic is a fascinating one, because it's not even clear what concessions are being sought. Once we realize that those big charts were not the tariffs being imposed on us by other countries, but rather a calculation related to the trade deficit, you know, I think the concessions can be all sorts of things. They're not necessarily trade related. And so we'll see if other countries kind of figure out what is the thing that the president is looking for from them to try to move these numbers to a different place. And
I know what he's looking
It's
for.
going to be a straight line at all, and we're going to have to buckle up.
Drop them tariffs. Quit charging us 250, 60% on our goods. Drop them to where we had them at, 2.5. That's what they got to do. Or at least 10%. Shit.
And then we'll probably retaliate more. And I think that's possible in some countries, but I think there's a lot of countries that they don't have tariffs to retaliate with, right? And everybody's talking on Twitter and X and other social media about some of these crazy examples, like Bangladesh. I mean, Bangladesh doesn't have the ability to buy more stuff from the U.S. and rectify trade imbalances and that sort of thing. So, these countries are going to have to come up with something else to kind of reach the president. And we've seen it before. It's Mexico putting more troops at the border, or whatever. The end game is not at all clear here, and I think that's what's so frustrating to companies, to investors, and certainly here in Washington.
Okay, Nate, how does that sound to you? Does that sound like an environment in which volatility can thrive?
Absolutely, yeah. I mean, we are elevated, but look, this type of shift in trade policy, it's the biggest tariffs we've seen in 100 years. I mean, this shock is not like the pandemic per se, but it is a shock, and this is one of the biggest shocks that we've seen at least since the pandemic. But it sticks out as one of those events that the ripple effects, the implications that can have, not just on the net value of whatever the rates are on the tariffs. Confidence every day is going down, so to speak, and consumers are going to pull back. You just did some wealth destruction here over the past 6 weeks. Now you're going to raise prices on them. How do you expect the consumer to respond
He didn't do
to
it.
an environment like
You all
that?
did.
And if we are heading towards a recession, we've seen those odds go up. You're at a 20 PE today based on EPS estimate.
Hey, knucklehead. Earnings were still good, right? They were outstanding last quarter. You're the ones that did it. The way you talk. The way you carry on.
Vol and kind of have a hedged trade, flip it. Maybe you're long vol in the long stocks, but you kind of pick a side, right? Because there is this moment where you're at a very high elevated VIX, so that gives you options in both directions, which is fun.
You can sell, Oliver, real quick.
Yep.
You can sell calls, and then you have a high VIX, and so a lot of people are like, well, protection's expensive. You can call her as well. Yes, there's a trade-off on the upside, but there's still ways to utilize options if you're looking for some type of...
I guarantee it, these guys are making a ton of money by shorting the market. I guarantee it. This market was way overbought to begin with. Extremely overbought. I don't forget like these guys do. We went up 40% in 2 years, which we should only been up like 14. So a 20% correction, I mean, that'd be great. This is way overbought. I can't express it enough, I don't think. I mean, I looked at Meta. It's still up 500% from the low. Still up 500%. It's up almost 1,000. Apple's up quite a bit still. I mean, these stocks are still way up there. They just made a ton of money as it went up, and they're going to make a ton as it goes back down. I've been here long enough to know. I mean, 3 years ago it was at 124 Apple. and it hardly ever broke 150 for years, many years. This is a good spot. This is really a good solid support. I kind of like it here, but I was talking about it earlier. I really like it here a lot, to tell you the facts. So if it goes below this, I'll be a little bit surprised, but not really. NVIDIA. 3 years ago, it was at $10, and we're still up 1,000% on NVIDIA. If this thing gets down to 80, it'd be a strong buy. I'd almost put the Fibonacci's on here. I might do a video on this just to show you the Fibonacci where, if we're back into major support and show you that channel. I might do that when I get back if I have time. But I'm going to head on out of here. I just think we need to be very careful. I took 2 red trades today, and I hardly ever take 2 red ones in one day. I hardly take one. And I had that big one last week, and I had 2 red ones today. And today's Thursday, so been a good week. But today I played with the devil. At first I was doing real hot, man. I was all excited and I was making good money, but then my mood changed a little bit. But I got in that one trade that went down to 35 cents, and I held on. And if I just held on just a little bit, 10 minutes later or 5 minutes later, I'd have made, a little bit of money, but not as much as I had in it. I didn't have that much in it. I just waited for the last entry for it to get real cheap. And I remember a couple weeks ago I got in one at around 35, and the thing ran up and just kept going. I wouldn't expect that today, but I figured this would have, now that there's more uncertainty, because what certainty we did have leaded to another path of uncertainty. What's the reaction going to be like? I kind of feel like the world doesn't appreciate us that much, and they don't really give a shit. They never have. They've just used us. And finally the cat was let out of the bag, and you see their true colors. Because we've always funded everything, but they funded very little. But I don't know. I'm not that. I just feel that I'm not. I could be talking out my yin yang. So I'm gonna go. I got to get some TP. Now that the government employees are back, it's costing me more money. So I might have to ask for another raise. Case of toilet paper is about $60. If I can get it in the car, if I can't, I'll have to pay $90 for 60 rolls, and that's the good shit. I don't know if I need the top line toilet paper in their restrooms or not, but I know they'd appreciate it because they all have hemorrhoids since they have to go back to work. I met this girl going into the IRS today, and she said, "How's it going?" I said, I don't know if I'll have my job the next day or not. I said, "Man, you've been here long enough. They ain't gonna let you go." I didn't say nothing. I kept politics out of it. I know she's a big liberal. Just have to keep my mouth shut. I remember one time when I started this job, I had an Obama sticker on my trash can, and one of the ladies said, "You're not allowed to have that on your trash can." I said, "What do you mean?" It's against public. It's against our policy. And I know they talk politics all the time. I hear them do it every day. But I forgot what is it. Something about the economy. Because we did have a huge crash when from 12,000 to 6,000. Went down 50%, the market did. It was really good. It was one of the best learning experiences I ever had. And then I predicted where it would be when he left, and I was to the penny. I couldn't believe it. 8 years later, it might be on one of my videos that I did back then, but I didn't start doing them until 2011. So I got videos of 2011, me talking about penny stocks. I gotta go because I gotta be there for sure, or they're gonna close down. So everybody enjoy. Let's be a little bit more patient. I did good today, but I got hurt a little bit with them 2 trades, especially that one. The 2 red ones. I mean, $450 and bam, just like that. And we'll catch you later. Everybody have a great day. See you later, YouTubers.